our belief was we'll raise rates, whereas 6 months ago they thought the Fed would be cutting rates. They're actually believing they'll raise rates to fight off this inflation, and it will take them a while to get through it.
We shall see. All depends on what we can't possibly know, and we were talking about that with Eamon earlier. How can you predict interest rates or inflation when we don't know, how long the shooting war continues? But Santelli's been saying higher rates for longer for a while. Although you go back 30 years or so, these aren't particularly 30, 40 years. They're not particularly.
Yeah, they don't know what the hell they're doing.
Yeah. Yeah. Jim's back, trading the king on his throne. Punta Cana's gone now, he's back in his zone. $40 for a hooker, he'll never forget. Some deals are shady, but fewer regrets. Markets of money make a turn on the machine. Buy low, sell high, living the dream. Stacks on financial feast. Jim's the ruler, got accounts to increase. Charts on the screen, the market will tank. Chai tea in hand, and he's ready to bank. Numbers dance on in the chart like a hot Vegas night. Waiting on bull flags like they're gonna take flight. Markets of money make a turn on the machine. Buy low, sell high, living the dream. Stacks on financial feast. Jim's the ruler, got accounts to increase. Refocused and dialed in. Got a market to conquer and we're ready to win. Yeah. Punta Cana was a blast, but it's now in the past. The market is his bitch, hit the money making switch. The king's got swagger, he'll never fall. When the bell rings, we're making money for all. Markets of money make a turn on the machine. Buy low, sell high, living the dream. Stacks on financial feast. Jim's the ruler, got accounts to increase. Markets of money make a turn on the machine. Buy low, sell high, living the dream. Stacks on financial feast. Jim's the ruler, got accounts to increase.
Do not vote. I have a nice post. my put. To my bus. No, you can't have none. But don't sick. Oh man, that smells good down there. Whoa. Oh my God. My. Oh. Oh. Oh shit. Oh. Oh. Oh God. It smells good down there. Poopy. It's poopy. Oh yeah.
I don't think we're going to get any rate hikes. I think the worst of the inflation is behind us.
Oh,
Do you think
shut
we're
up.
We're going to see a meaningful decrease in inflation come this fall, come this winter? What's your...
Yeah, I mean, the one...
These people are so stuck on this inflation crap. We had 30% under Biden, and not a peep.
behind us. Most of the oil inflation is behind us. The AI-related inflation is inflation that I can live with because I truly believe there's a productivity gain coming on that.
And does that come down, because look, right now there's a shortage of so many different parts just to make this whole ecosystem even work. And the question is, how long do you think that persists on one end? And then, by the way, there's the flip side, is whether you think there's going to be an overbuild on the other end.
So there's likely to be an overbuild because every innovation tends to overdo it in the initial phases. We can look at fiber. I mean, I can take you back to every single
But that could
innovation.
still be years out from now, in terms of when is the moment you'll wake up one morning and go, okay, there's an overbuild?
Probably in 3 to 4 years.
So,
However,
right.
if,
so this can run for quite a while.
it could, but you and I speak to tech people, they believe that it's almost impossible to define where this thing's going to end.
Right.
Okay, and if anything, we simply don't have the imagination.
Is that different than the late 90s with fiber or some of these other technologies? I don't remember, and we should go back and like get the tapes. When you talk to CEOs of folks building out fiber, did they say, oh yeah, we're just building, there's an end state here. We're gonna do this for another year or two, then we'll lay down the train tracks and we'll be fine, and that'll stop. This is not that. This is like, we're gonna be laying down train tracks forever, and by the way, we'll have to keep upgrading the train tracks along the way.
Yes, I heard you say, where is the end point? And a lot of people say there is no end point, and there's a perfect reason for this. It's not just a general purpose technology like electricity. It is what James Manica at Google calls the inventor of inventions. Or recursive self-improvement.
Right.
It continuously allows for more things to happen, and it's very hard to predict. So I think it is almost impossible to predict the endpoint of this, other than I do believe it will be in higher productivity, but also a lot of disruptions that come with that.
Mohammed, got to thank you for coming in this morning. Playing a little soccer.
So the Super Bowl ends tied in regulation, and you go to the 15-minute period. I guess it's 10 in the regular season. 15 minutes, both teams get to possess the ball. If that doesn't, then it goes to sudden death. If that doesn't end it. If that 15-minute period ends, it doesn't end in a tie. You get another 15-minute period, which I think goes right to sudden death.
So at some point, someone's got to score.
Unlike the regular season, where you could have a tie at the end of the 10-minute period.
Joe, someone wanted to engage me this weekend about the Jets, and I said, no, I'm not falling into that trap again. I'm not going to have my hopes going all the way up and then crashing down.
You've got all your chips on the Mets now. That was brilliant. How much money does it take? Shouldn't this guy be able to? And look, it finally happened for Dolan. And if it can happen for him, can't it happen for the Mets someday? Or no?
Look at me. We've been waiting.
Oh, you're not going to engage. You're not going to. Okay, 86. And even that they call amazing because of Andy Burnham is set to take over as the new British Prime Minister today. Moments ago, he arrived at Buckingham Palace to formally ask King Charles for permission to form a government. He'll then return to Downing Street where he's going to deliver an address. And coming up, we are going to talk Odyssey. AMC Entertainment CEO Adam Aron on resurgence at the box office and how it's impacting quarterly results at the theater chain, which Mr. Aron is calling the best quarter in its 106-year history at AMC. And then we're going to return to the Farnborough Air Show for an interview with GE Aerospace Chief Larry Culp. Squawk Box returns in just a moment. Futures are rebounding a little from the big losses we saw on Friday, and this is all in the face of renewed fighting, or not renewed, but continuing fighting, and the MOU is a distant memory at this point. Let's look at treasuries, see what we're looking at there as well. Treasuries have not, like oil, you would have thought maybe they'd be, the long end would even be higher, but it's not 4.56 this morning. Let's get Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
Hey, good morning, Joe. Good morning, Andrew. We're going to start off with some late-breaking earnings news. Domino shares right now, which are jumping by just around, call it 8%, after reporting slightly better than expected revenues, but a miss on its earnings side of things for its most recent quarter. U.S. same-store sales also increased just 0.1%. That's its slowest pace since the first quarter of last year. Now, it all comes as consumers maybe pull back on some of that discretionary spending amid higher cost of living, also a more sluggish job market, but shares are still seeing a boost this morning, but they've lost about 17% of their value on a year-to-date period. Now let's turn to shares of SpaceX, which are higher by just about maybe 1.5%, we'll call it, after Elon Musk said the company rescheduled its scrubbed Starship rocket launch for this Thursday after last week's last-second abort. Those shares fell more than 5% on Friday following that news and the delay, and we're still about 7% below its IPO price of $135 per share. Remember, $125.75 is the current trade there right now. And we'll cap things off with U.S.-listed shares of Alibaba, which are just up about 3.5%. After the company unveiled its latest flagship AI model today, describing it as second only to Anthropic's Fable 5. The announcement's coming just days after, of course, rival China startup Moonshot unveiled its own breakthrough model, news that sent shockwaves across global markets. Alibaba shares, by the way, are still down roughly 19% on a year-to-date basis, but Alibaba now, that talk of that AI story here, Joe, we'll see if that lasts. I'll send things back over to you guys.
Yep, thanks. I wonder what Ryan Fox was. But you could have won $10, must have probably $2,000 or something, wouldn't you think, Dom?
You know, I had a buddy who did place a bet as the fourth round started at the Opium Championship on Ryan Fox to win, and apparently the odds on his particular platform were 19-1.
Even with him having shot a 62 or whatever it was, and I will tell you that guy, is he the ultimate anti-hero? He's, 39, journeyman, New Zealand, built like a guy that likes to sidle up to a pub, or feels comfortable sidling up to a pub. But I've never seen a guy play so quickly without any fear of what could happen, and just deciding I'm going to win this tournament. 4 out of 6 birdies over those impossible holes. And then on 18, pipes that drive. I mean, almost hit the flag on the second shot and took a total of 22 seconds on that birdie putt. Just stones the size of Gibraltar. I mean, seriously, that guy, right?
Absolutely, no doubt about it. And it wasn't a smooth ride for Ryan, right? Throughout the course of that round,
Every swing is not smooth. Every swing is not.
He had to recover from quite a few shots there to kind of get to where he was.
I can't even. I would hurt myself. I think I'd flip a disc if I even tried to get into some of the. Have you seen like a slow motion of the way that his body contorts?
Joe, you're falling in the trap.
Elbow up there. I think for me, it was great to see Ryan Fox win. It was great to see kind of, Aaron Rye.
No, it really sucked.
It was great to see.
It wasn't great to see any of it.
People that are outside the top kind of 5 or 6 golfers out there.
This guy was how about where he had to play it out? It looked like he was gonna. He was up against the bunker, the wall. The bunker had to go backwards. Still did that immediately.
Did you see the big bulge in his pants?
Minimize the losses there. It was really. I mean, I didn't know I wanted him to win until he won. I realized.
I will leave you with this though, Ryan. Congratulations for sure. I think Sam Burns is really darn close.
At one time, I used to admire athletes because I was one, but they made a huge mistake. And that was get involved in politics. Once they did that, I haven't watched a baseball game, a football game, anything in years. I will never watch another game in my life. seems like watching movies. I'll never watch another movie ever again. Unless I'm in it. So take that and shove that up your squawk box. Not gonna do it. I'm surprised we're up. But we're up. I can't complain.
AMC Entertainment shares jumping on better than expected results, including its highest quarterly revenue in the company's 106-year history. Joining us now, Adam Aaron, CEO of AMC Entertainment. Adam, welcome. It's good to see you. It's been a while.
Joe, it's great to be on here with you.
The demise, greatly exaggerated, but I think about the Odyssey this weekend and the Odyssey that you've been on since taking over through COVID and through these gut-wrenching just changes in the way the world, the way we view content and how it's delivered. You've had so many things. Yeah, you've had so many things to get through. Talk about this latest quarter because you have a lot, I guess, to crow about. The best in 106-year history of AMC, in your view.
Yeah, well, look, America's fascinated with the Odyssey this weekend. We announced this morning that we had some 4.3 million guests in our theaters globally to see the Odyssey, and that's pretty much the story AMC's been on. And it led to our second quarter, April, May, and June of this year, where this morning we reported record everything just about. Our EBITDA was $321.4 million, up 70% from last year's 189, and last year's second quarter was a strong quarter. Our EBITDA for the first 6 months of this year is up $228 million. It's more than 2.5 times what it was last year. And as you said, in AMC's 106-year history, both for revenue and adjusted EBITDA. This was our strongest quarter ever.
You had to get through, obviously, COVID, and that was tough, Adam. And in this latest thing, IMAX, it says IMAX ready. It almost seems to me like you can coexist with IMAX. And I don't see that I'm just going to go to IMAX or I'm just going to go to AMC. The entire market gets broadened by the ability to see it on an IMAX screen, or if it's IMAX ready, but that didn't hurt AMC necessarily. It was
actually, my friend Rich Gelfond, the CEO of IMAX, would like to hear this. We are IMAX at AMC, and IMAX is us. We're such a large IMAX player. Just right around half of all the IMAX auditoriums in the United States are at AMC theaters.
Right.
So when you think of IMAX, you think of us. And we don't just have IMAX auditoriums. We have about 750 what are called premium large format and extra large format screens. And they were all jumping this weekend thanks to Universal Studios and especially to Christopher Nolan, director extraordinaire.
Your fortunes and the movie industry's fortunes are tied to big hits, obviously. But there was actually an existential question about people who are going to just keep going to movies. I guess that happened during COVID, and there's big screen TVs and streaming and all these other ways to consume what Hollywood puts out. Are you ready to close that chapter out and say we will survive like the song?
Yes, is the simple answer to your question. And it's also true that as a result of COVID, which was 6 years ago now, there was a lot of experimentation. But what Hollywood has learned over the past several years is people love to go to movie theaters. They've been doing it for over a century. Studio after studio is turning out movie after movie designed for the big screen. If you look at the second quarter, we had 6 different film titles, one from Universal, one from A24, one from Lionsgate, 3 from Disney, all of which had huge domestic opening weekends exceeding $75 million or more. And it's happening again with Odyssey this weekend. As you probably heard, it looks like Odyssey is going to open right around $124 million. This is because people love to go to the movie theaters, and Hollywood is responding. I think we've won that fight. And if you look at the size of the box office this year, it clearly is going to be the biggest post-pandemic year for both the domestic and global box office.
Adam, I want you to weigh in on two things, if you could. One is, look, if you look at that list, the big pictures are also for the most part, the biggest spenders on these sort of enormous, giant films that need to be seen in the theater, in part because of the extraordinary nature of what's going on the screen. I'm curious what happens to what I think used to be, for lack of a better term, sort of an adult drama. Which used to be a big seller at the theaters, and whether you think that is now moved in terms of when you think of the kind of mix of films, that is that moved to streamers, and that the kind of films that work in the theater need to have the sort of extraordinary effects and everything else, or do you think that changes and returns over time in some other way?
Well, it is a great question, and look, our bread and butter is not only the blockbuster, but what you might think of as
gosh, it's hard for me to listen to this, but you got to sometimes bite the bullet, I guess. Like I'll never bite the bullet on Microsoft. I just won't trade it. I won't ever bite the bullet on General Motors. I'll never trade it. But AMC, sometimes you gotta bite the bullet. I mean, I got it at $1. And I'm gonna just hold it. I'm just gonna hold it. It's my long-term position. Hollywood sucks. I just don't like Hollywood. I haven't had a TV on in 5 years. I haven't watched a movie in probably 10. And I will never probably ever go into the theater again unless I get some hot date or something. But it, we just broke my 222 resistance, long 293 for a double top on AMC. But again, Hollywood sucks. I'm only buying it because it's cheap.
Want, be willing to accept, or somewhere in between?
Well, let's start with how beneficial AI can be. At AMC, we've been engaged for almost a year now to make our company more effective and more efficient by using AI to run our company better. And yes, it's true that there will be, over time, in the years and decades ahead, some AI in created footage that will wind up hitting movie screens. But I think we're going to, at AMC, we're going to be a very fast adopter of using AI back of house to make our company a stronger company, but very slow as an adopter to use AI on our screens. There's nothing like a writer, there's nothing like a director, there's nothing like a real human actor. We know that audiences love seeing what the creative community can turn out and show those dazzling images on our huge silver screens. It's coming, but I think it will come a little bit more slowly front of house on the screen than back of house, where it's going to come very fast to make our company more efficient and more powerful as an operator.
But you think people are going to want to watch those films? If I know that Tom Cruise didn't actually do the stunt, but that a facsimile of Tom Cruise did the stunt?
Tom Cruise will always do the stunt.
I know. I know.
And yes. Yeah,
But you know what I mean.
We do our own stunts here on Spotlight.
Yes,
So.
yeah, I think I love watching Tom Cruise jump his motorcycle off a cliff in Norway and survive it, or get out underneath the belly of an airplane as it took off, and all the other things he's done. Yeah, I think there's a strong preference for real film, real creations by humans, by human writers, by human actors, by human directors, by human cinematographers. I think that's what the audience of today wants, and I think for the most part, that's what the audience will continue to receive.
Adam, and the demise of movies, theaters, everything. How about the demise of AMC? There were times, I think, where you had some visions of. I mean, if you were a negative person, there were some dicey times, I think, and in terms of debt loads and things like that. And there were times you had to make tough decisions about diluting shareholders. You had the apes and the meme stock craze. And it allowed you at times, I think, to raise much needed capital to pay off debt. How did you just comment on some of the people get angry because stock's going up, then you announce that you got to raise some cash. You had to do that to keep the company afloat. Are you now fine till 2030 or whatever, 2035?
Well, that's such a big question. First of all, we still have millions of those apes who are our shareholders. We're so grateful to them. They saved AMC along the way, and so many of them still love AMC today. And they're not only our shareholders, but many of them are our customers in theaters. Look, the movie industry was heavily impacted both by COVID in 2019 and those Hollywood strikes that lasted for 5 months in 2023. The box office, which was huge and steady for decades, just cratered in 2020. It's been a slow climb out. And yeah, we had to make lots of tough decisions along the way, but we made them. There's actually been a Harvard Business School case written about how, while many of our competitors had to go into Chapter 11 or Chapter 7, AMC survived it all. We threaded the needle. We navigated very tough waters, but we did it really well. We did raise a lot of money. We're still here, and we're not just here. We just reported the most successful quarter in our company's 106-year history.
Hogwash.
We ended the quarter with $778 million
Fuzzy math.
cash on hand, and we have no significant debt maturities prior to 2029, which is a full 3 years away. So it's
And you're
a very
doing better,
good news story
okay.
at AMC.
But Hollywood
We
sucks.
survived the tough times, and now if you look in this recent rearview mirror about the huge earnings.
Ugh. Man, I can't believe I'm fighting so much population in this country. Oh boy. Okay, Mouth, I'll let you talk a little more.
I like the worst possible for my health popcorn in the world, and you know, that's what I don't know what that is that you put on it, and I have to get it halfway so I can put it on there and then do it again, and then I bring salt with me to my seat and everything else. But there's healthy popcorn you can get. I don't know. I didn't even know about it. Khloe Kardashian. Have you heard about this popcorn? It has like protein or something, and you like your own popcorn. Would you ever sell? Do you know about this sort of?
I'm aware of it. I would like to get it because it's supposed to be less carby, more protein.
Protein. It's everything that popcorn shouldn't have.
It'd be a big seller, Adam. You should do your own, or buy theirs.
It's called Cloud or something because of Chloe. Do you know anything about it?
I know everything about it because I've talked to the head of her company. I've talked to some of her key investors. I tasted the popcorn before it went to market. We're happy for her success. But we too are really successful. You know, we sell tons and tons of popcorn every single day. No one on earth sells more popcorn than AMC.
Oh, God.
And we
Lord.
know for a fact that it's an indulgence.
You've gave them too much
I
time.
really enjoy because they sure buy a lot of it, and they have a good time as they eat.
I had a bucket, and I was one person. So and I didn't eat all of it, but I ate almost all.
So, Adam, are you then thinking of a lighter popcorn?
No. I think
Okay.
I think we're gonna go with the tried and true. And as I said, look, we're happy for her success. We're very happy for her success. But you know, we took our popcorn to the home as well 2 years back, and it's also a $30 million brand in over 10,000 stores, close to 20,000 stores around the United States. People do love AMC popcorn, and they've been
No,
buying
Adam,
them.
I'm not suggesting that you have to do her popcorn. I'm just suggesting there might be two variants of popcorn. Now, I don't know if that's one more SKU than you want, but I think there's a huge opportunity.
Actually, on my watch as CEO of the company, we're up to 4 SKUs of that popcorn. We have our regular salted stuff. We have we have gourmet caramel corn. We usually have a cheese corn. We usually have
Mikey
some,
pumped this. They did this popcorn thing, and Mikey pumped it in the stock tank $4. So you're buying AMC just because of the popcorn? You're a frickin' nut.
Would that meet your standard of?
I mean, I
lighter
think that would be a
healthier?
hot seller. I hate to say it. Probably not great for you, but you know, If it comes with an angioplasty on the side, maybe.
Look, we're joking and we're kidding, but
Okay, well,
food. I'm going to be serious for a second. Food and beverage is a very important.
God, I gave this guy fucking an hour to talk.
Washboardjim on the market floor, trading moves like a lion's roar. Sneaky snakes that is past the rest. They got moves, he plays them best. Jim likes cities and telemarketers
too.
teaching fools like me.
Oh, damn, I was getting into that. Oh. Have to do it all over again. Nah, we're done. This guy's still on here.
Narcissistic Jim, with his ego and his wit, doesn't give a damn what you think of him one bit. The market takes a dip, SPX Jimmy will buy. Bitching at Molly Carolyn, still the apple of his eye. Burp it up, Jim, let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Candles on his screen bounce like titties in the night. Burps get so loud the neighbors say that boy ain't right. Bull or bear, calls or puts, doesn't matter one bit. Jimmy's face can't wait for Nancy to come and sit. Fart for a dip, ass making noise. Burp for a rip, cheers from his boys. Jimmy is grinding away on his washboard toy. Burp it up, Jim. Let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Lots of fun he has, his ego's ablaze. Burps and farts collide, the room is so amazed. Narcissistic Jim, the legend, the king, playing his old washboard till that closing bell rings. Narcissistic Jim. Narcissistic Jim. Narcissistic Jim.
All right, let's have a good day. Whew. I get so hyper. That's why I had to quit playing music. Could have a heart attack.
I want to get back to Phil LeBeau. He is at the Farnborough Air Show today with the COG Aerospace. Larry Culp, good morning.
Good morning, Andrew. Larry, it's good to have you here at the air show with us. You guys had some big news just a few within the last hour and a half. Test aircraft you're developing along with Boeing, Beta Technologies, electric hybrid, hydrogen engine. Tell us about the successful test you had.
Phil, good to be with you. Just down the staging area here, we have a Saab A340 that we converted into a flying test bed for our hybrid electric program. We had the first ever high altitude hybrid electric flight crossing the Atlantic to bring that plane here. You mentioned some of our partners at Boeing, at Beta. NASA was a big part of this as well. This is all part of their electrified powertrain demonstrator program, but this is a first of its kind. As you might imagine, we're terribly excited. We're going to fly at 2:25 this afternoon. Just a big day for everybody involved.
People will look at this and they'll say, well, that was a test flight. When do we think that we could see hybrid electric engine technology really start to pay off for the airlines? Because jet fuel, as we all know, is the largest expense outside of labor cost. Airlines.
Very much so. And when we think about the customer benefits here, Phil, we're talking about efficiency, we're talking about durability, and we're talking about range. Now, this is still very much a technology demonstrator. When we talk about the next generation narrow body, we talk about our RISE program and the technology building blocks that we have envisioned for the mid to late 2030s.
Retesting resistance.
Key part of that.
Retesting resistance. Retesting resistance. For my name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy. I talk about chart patterns, moving averages, and pretty women. I'm going to head out right now, so you're on your own. And I got to go deal with the IRS. And let me tell you something. These people are the most spoiledest people I've ever met my whole entire life. They are frickin' spoiled, man. I wonder what it would be like to be a government employee and have all them benefits and all them days off. Work from home when you want. Have the best health care for free. Retire at a young age. Some got paid a pension for retirement under Trump to get the hell out of there. They were too big. Going after the small people instead of the billionaires and millionaires that they take their campaign money from. Yep. Okay. Have a good day.
That help us on the commercial side of things serve us very well in defense as well. But we're all in with respect to the objective, and again, I think the momentum is palpable across the board.
The commercial side, we've seen so many orders for Boeing, for Airbus. Obviously, those are orders that ultimately, where they have to make an engine choice. You want them to choose either GE Aerospace exclusively or your partnership with Safran, with CFM. So it brings up the question, the momentum that we're seeing right now, do you expect that to continue here over the next year or two? Or do you look at this and say we're close to a plateau?
Well, Phil, you look just at the first half of this year, our orders were up 49%. I don't think we would expect to grow at that rate on a compounded basis indefinitely. But we've got $210 billion of backlog right now between new make engines and aftermarket services. Customers that we talk to are very keen to see us continue to ramp in partnership with our airframe partners, and in turn make sure we're doing the same thing in the aftermarket because the demand there is strong. So we see no slowdown by and large. Again, 49% is a high bar, but I think as we go forward, we're going to be fulfilling a $210 billion backlog for the foreseeable future.
Real quick, durability, are you pleased with what you're seeing in terms of work of improving that?
Very much so. Our narrow body engine, our LEAP engine, saw a durability kit introduced last year on the Airbus version of that engine. We've got 40% of the fleet retrofitted already, performing very
things
well.
are big.
And the version for the Boeing Max has been certified. We're looking to bring that along later this year. Have no reason to think we won't be continuing to lead in durability.
I think, you know,
Larry Cole, CEO of GE Aerospace.
if GE came out and said that they were going to build a new plant, I would probably go long. Boeing, same thing. If they built a plant to get up, they got a backlog. It's just huge. I got 220 to break. But yeah, they keep saying higher costs. Well, nobody complained about the fucking inflation that Biden had. I just don't get it. I mean, I got more money in my pocket now than I did during the Biden watch, because shit's gone down. I just feel the opposite of what they're saying. But, oh well. The only thing that's gone up, that frickin' hamburger. And this is what I did this weekend. 2 weeks ago, I bought groceries. It cost me at least, the store up the street, Price Cutter, got bought out by a joint out of Chicago. So they brought their damn prices down here from Chicago, and they skyrocketed. I can't believe how much groceries are just right up the street. So I went to Walmart, I bought twice as much groceries and spent half the frickin' price. I saved 40% at Walmart. Chicken, $22 for 6 chicken breasts up the street. Walmart, $9.19, $9.41. I'm so pissed off about food prices under Biden's watch. Fuck, we didn't have any noodles on the aisle or toilet paper. I can hardly listen to these people anymore. I really can't. But that's all right. I know my chicken's about half price now. Yeah, we'll catch you later.
Coming up, an in-depth conversation about the AI boom.
Eggs.
Co-founder and OpenAI.
Eggs were $12 a dozen. Now they're under $3.
And the latest eye-popping valuations in the sector. It's coming up at 8:10 Eastern Time this morning. Do not go anywhere. Squawk Box. Come right back.
is almost 8 a.m. on the East Coast, just 30 seconds shy of that. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Andrew Ross Sorkin. Among today's top stories, oil prices easing after Iran signaled it may resume talks with the U.S. despite a 9th straight night of American strikes following the deaths of 3 U.S. service members. To the U.K. now, Andy Burnham. Put that in your brain. Andy Burnham is the new guy. They've had like 14 guys in the last 6 months. Taking over as Britain's new prime minister today, with plans to overhaul the Treasury and expand drilling in existing North Sea oil fields. Really? What a concept. And Christopher Nolan's The Odyssey opened with $124 million domestically, $264 million worldwide. Some of those dollars were mine.
Take a look at futures right now. Dow up about 180 points. NASDAQ up about 262 points. And the S&P 500 up about 23 points. Take a look at treasuries as well. You're looking at the 10-year note, sitting just about 4.5, the 2-year at 4.1. And I want to get straight over to Dom, too, with a look at this morning's pre-market movers. Dom.
All right, good morning, Andrew. Good morning, Joe. We're going to start with shares of Robinhood, which are higher right now by just call it maybe 2.5% or so. After Bernstein raised its target price on the stock to $160. It was $130 prior to that. That's an implied upside of 60% from Friday's close. The firm says it expects Robinhood's prediction markets business to offset weakness in the crypto sector side of things. Bernstein's forecasting prediction markets revenue to reach $1.7 billion by the end of 2028 and says Robinhood and Kalshi are, quote, evolving into a frenemy-type relationship, so keep an eye on Robinhood shares. Next up, we're going to check shares of Monster Beverage, which are down just about 1% on a downgrade to hold from buy over at Deutsche Bank. They say they remain highly positive on the business, but are concerned about valuations after the recent stock run-up. Shares are now up more than 60% just over the course of the past year, so Monster Beverage in focus. And we'll cap things off with shares of Yeti and Urban Outfitters, both up almost 5% apiece on upgrades from neutral to buy from neutral over at Goldman Sachs. On Yeti, Goldman says the drinkware and cooler makers' growth outlook is becoming more durable, with several of its accounts seeing inventory constraints and planned restocking. Is now for Urban Outfitters. Goldman expects the recovery in its namesake brand to boost profitability and says uncertainty in its anthropology business is embedded into expectations already. Those two stocks very much in focus today. For more on those and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get all the access to detail and analysis around the big upgrades and downgrades each day. Andrew, I'll send things back over to you guys.
Dom, thank you for that. Appreciate it.
Google DeepMind chief Demis Hassabis is expected to meet with several congressional leaders to pitch his idea for an AI watchdog. Mackenzie Segalos joins us now with more. Hey, Mackenzie.
Hey, good morning, Joe. I'm told those meetings happening today and tomorrow will put Google DeepMind's Demis Hassabis in front of Jay Obernolte, one of Congress's leading voices on AI, along with members of the House Democratic Commission on AI and the Innovation Economy. Now, these talks are about building support for a FINRA-style watchdog, federally overseen, funded largely by the industry, designed to test frontier models for national security risks before they're released. Now, that would give Washington a more permanent framework for oversight and make Google the latest AI lab trying to help write the rules governing the industry. The push comes as Chinese models gain ground with American businesses, now accounting for 45% of U.S. company token use, while new releases from Moonshot AI and Alibaba just this weekend actually narrow the capability gap. But Demis Hassabis arrives on Capitol Hill as his own team faces mounting execution questions. Google's next flagship Gemini Pro model is now a month late with no new target release date. And 3 people familiar with Google's AI operations tell me the issue is less about talent or compute than it is about execution. So duplicative work, a lot of red tape, and too many teams involved in decisions, together leading to these delayed launches, while rivals like Anthropic poach senior researchers with bigger roles, more autonomy, and mega pay packages. Joe?
Interesting. Great. Thank you, Mackenzie. Appreciate it.
Okay, coming up, we're going to continue that part of the conversation to some degree. OpenAI's chairman, Brett Taylor, on the next frontier for AI and so much more. Lots of debate in Silicon Valley just in the past couple of days about open weight models, the competition, and everything in between. We'll discuss it all after this. And later, what's behind the rise of democratic socialism in America? new findings in the latest CNBC All-America survey and what they portend for the future of the country. Don't go anywhere. Squawk Box, come right back. Joining us to talk through everything AI this morning at the table, we're thrilled to have him. Brett Taylor is the co-founder of Sierra and the chairman of OpenAI. And there's so much debate going on right now in your world about open weight models, Chinese models, token maxing, the ROI on all of this, and everything in between. I think the biggest thing that's happened even just the past couple of days is this new Chinese model that's open weight, potentially distilled or maybe stolen. I don't know why we use the word distilled, but from other models. I don't know if it's from yours or from Claude. There's some questions about that. But how do you think about that piece of it? Because literally the debate on X right now among, I think, a lot of your friends is about what this all means.
Well, I like to take it back to first principles, which is why do people choose the model for the task at hand? And I think there's really two topics that I think every time I talk to probably 100 CEOs every single month, so I'm pretty plugged into top of mind. And there's two things, which is AI tokenomics, which is how can I know that I'm getting the value from this spend on tokens? And then I'll use the word sovereignty, which is just making sure, like, what is my competitive moat in the age of AI as well? And I'll say one thing that I think is a little bit overblown about these open weight models is they're not necessarily cheaper to run. Whether or not they're cheaper to train, you don't care.
Because you're using just as many tokens. In fact, they may be less efficient.
Yeah, there's this thing called token efficiency, and it turns out the frontier models are much, much more token efficient. And beyond that,
by the way, just for the audience, because there's some people who are watching who may be like, token what? Why do we call effectively energy expenditure token. Is that a fair description of what's happening here?
I'll give an overly simplistic view, then I'll tell you why it's wrong. You know, you can think of a token. A token is to intelligence like a watt is to electricity, like a unit of intelligence. And token efficient means how many tokens does it take to complete a task?
To answer the question you've asked.
Answer the question. But they're not every token's actually equal. And you know, if you've used a really advanced model like 5.6 from OpenAI, you'll know actually, wow, the code it writes is a lot better than the previous model. So it's not exactly the right analogy. And that's the thing is actually, I think what we're seeing is for a lot of tasks, it turns out these frontier models from OpenAI and Anthropic are actually just better than these open weight models. And I think it's important for the labs in the United States for if you just think about what do you want from a model, you might want it to be fast for some tasks. Let's say you're looking at every credit card transaction. You might want it to be really cheap because you know this task isn't a frontier task to do. You might actually want the highest level of intelligence. If you're an insurance company and you're doing actuary work, you want it to be great. I think the US labs need, for every price, performance, latency, cost, they need to have the best model available. And actually, I think that's more likely than not, just because it turns out that just having open weights isn't actually the main thing driving many of those costs. And you know, token efficiency, compute efficiency is something that I think the frontier labs are exceptional.
But let's also bring the audience that may not be on board with us into the other piece of the conversation about open weight models. In particular, this, they're calling it Kimi or K3. This is a model out of China that some people believe is as good as, if not better than, OpenAI's 5.6 or Fable from Anthropic in terms of what it can produce. It may be less efficient, but at the same time, ostensibly should be cheaper. And the other question is how you think they created the model. Some people think the model was effectively stolen. Other people think they actually built it themselves. What do you think?
You know, this is my point, which is, you know, is it cheaper to use is the most important part for anyone considering it. And I don't think that, I think the jury's out on that.
Right. Cheaper to use for you and I, yes.
Yeah.
But there's also a question of how much it cost them to build it. And the reason why that matters is because a lot of the big frontier model makers in the US are spending extraordinary amounts of money to build massive data centers, in part for us to use the models, but in part for you to build the models. And if you could build the models for a lot less, that's a different game too.
Yeah, I think at the end of the day, it's going to be, you know, how efficient is your inference? And I think the frontier labs are still far ahead here, and I think that's really where the value is going to accrue, because at the end of the day, you know, as you
inference being every time I put in a prompt, I get an answer.
That's right. It's essentially how efficient it is to use these models for a particular price point. Right. And I think this is an area where the frontier labs still have a significant advantage, and you're seeing that from everyday use. I mean, the people, not everyone's used all these models yet, so it's, I don't want to overstate confidence here, but if you're using things like Fable 5.6, K3, 5.6 is still actually, just if you think about what does it take to write this computer program with AI, 5.6 is leading by most of these metrics, and I think that's what the most important thing is.
The other piece of this conversation is we had the CEO of Ramp in here just last week. He actually built a system so you can actually see how much money you're spending at any given moment and whether you're using the right models. Meaning, sometimes people are asking the highest end model, you know, what the weather is, which is
like driving a Ferrari to the grocery store.
Which is like a terrible efficiency situation. And we've had other people. Derek Khosrowshahi was on the broadcast earlier this week. He's argued that he's not seeing the ROI, the return on investment from all of this. We had Alex Karp in that famous, now viral video where he says nobody's getting their money's worth for all of this. And how do you think about that piece of it?
Well, I'll bring it to my day jobs here, because I actually think the market's in kind of a quirky spot where everyone's worrying about paying for tokens. And it would be like if you signed up for Gmail and you paid per CPU cycle or something. I believe where the world is going is paying for outcomes. So at Sierra, we make AI agents that help companies drive revenue and drive customer service. But our customers don't pay per token.
Right. And by the way, this is Sierra. Why don't you explain what Sierra does for those who don't know?
Yeah, so at Sierra, we help power things like if you call DirecTV or SiriusXM on the phone, you'll talk to an AI agent now. Rather than a person, you don't need to wait on hold. We just launched a new product called Horizon, which are long horizon agents that help people originate loans or do pre-authorization for medical procedures and truly drive revenue. But what's really interesting about it is two things. One is you don't pay per token, you pay per outcome. You pay per originated loan or per pre-authorization. And Number two is we help you develop a competitive moat in AI because we essentially help you compound the data about your customers. So no matter as frontier intelligence improves, you're actually developing this compounding asset, which is the data you know about your customers and your relationships with your customers. And our thinking is it really addresses these two key issues in AI, which is sovereignty and tokenomics.
Okay, let me ask you a question about your own tokenomics then.
Yeah.
So for every time that you're having to process one of these phone calls, I imagine you, on your end, are having to use an extraordinary amount of tokens. So does the math for you, meaning when you have a successful outcome for your client, your customer, and they pay you per success, are they paying you more? I'm hoping you're going to say yes. I'm hoping they're paying you more than what it cost you to actually produce, but I'm not sure.
Yes, they are.
Okay.
And I would argue it's easier for us as a applied AI company to essentially amortize the R&D cost of developing specialized models for low latency voice conversation than it is for every company in the world to do that individually. And I think the solution to a lot of the problems with AI tokenomics is we don't have a mature applied AI market. So rather than every company licensing tokens and building things from component parts, if we have more companies like Sierra providing these solutions out of the box that can pick up the phone for your toll-free number and you pay for those outcomes, we can bear the burden of managing tokens.
Tell me about the bearing the burden. The other piece of this, and it gets to maybe what the CEO of Ramp was talking about, is why are the model companies, maybe it's the incentives are just misaligned. It doesn't seem, I mean, there was a period of time where OpenAI, for example, or ChatGPT would automatically send you to a certain model. But I don't think it does that anymore currently. And so most of the model makers are sort of forcing you to choose, do you want to use the Ferrari or do you want to drive in the Honda today? And most people are choosing the Ferrari. But what should be happening, I think, is when you say, I'm just going to the grocery store, I'll take the Honda, or it should automatically say, well, we're going to use the Honda for that. But if you're going to go, racing in the afternoon, we're going to put you on the Ferrari. And people aren't doing that, so people think, oh, they're just sort of forcing me to overspend. It's not forcing us, but that the sort of human instinct is to choose the top vehicle.
I think the market's just immature. We've all gotten these weights, these new models since December of this past year. I think if you fast forward 12 months from now, IT departments will be really sophisticated about I'll say the industrial applications of AI. For your marketing department, you might have one thing. For your software engineers, another thing. I think there'll be products and solutions developed in this space to help you, like the Ramp solution you mentioned. Applied AI companies like Sierra or Harvey in the legal space will be there, so you just don't need to think about the word token at all. So I think we're in this period of immaturity. It's a little bit like the mid-'80s with the development of mainframes and PCs, or the early days of the internet in 1997, where if you wanted to get the value from the technology, you had to build it yourself. And if you go back to 97, people were spending tens of millions of dollars just to make a website where people could log in. And now it's easy. And we're just in this early stages of the technology. And I think it's a call for entrepreneurs to develop solutions so businesses don't need to deal with this.
Well, let me ask you a separate question, and this maybe gets the OpenAI piece of it, but also your own business piece of it. Because there were some fighting words on Twitter last week from Sam, I think effectively trying to go after Anthropic a little bit, with the idea that, there's been some claims more recently that there's a view that Anthropic is increasingly going into other people's business. The Figma situation is an example of that, or Claude or legal. I mean, they're trying to go into these different areas. And I think Sam was trying to say that OpenAI doesn't intend to do that. But I wonder how you think about that, because invariably these models should be able to one day, if they're so good at what they do, be able to do what your company is doing and everybody else's company is doing.
Well, I think at the end of the day, if you fast forward a few years, intelligence will be widely available. So you're not going to be able to differentiate on intelligence because you can just license it. You can rent it from all these frontier labs like OpenAI. So the big question for every CEO right now is, where is my differentiation? And as I said, at Sierra, our opinion on this is that the relationship you have with your customers and the interactions you have with your customers can be a durable moat, if you will, in this age of AI. The way it works with Horizon is, let's say you make an AI agent that originates loans. Every time it makes a successful sales call, it learns from that, and it gets better over time. But that's your information. It doesn't make its way to your competitors or the frontier. But I think if companies are thinking they can differentiate on the models, I think that's probably a fool's errand. You know, at the end of the day, these are super intelligence agents that are getting better, especially as we get closer to recursive self-improvement. So I think at the end of the day, companies need to say, when super intelligence is democratized and widely available, what's my place on this chessboard of the competitive landscape? And that's a very nuanced question.
But part of that question is, you know, should you be working or partnering with one of the big model makers? I mean, part of the Figma story was, oh my goodness, they're now, you know, they had partnered with Anthropic, then all of a sudden Anthropic's in the design, you know, the Claude design business. Did they figure out stuff from the prompts that were going into it through the Figma relationship? How do you think CEOs should think about that?
I think it's the right question. I mean, you need to understand, you know, what is your competitive dynamics over time. It's why at OpenAI we've been really investing in our ecosystem. It's why that I think it's very important that CEOs understand, you know, what's mine is mine and what is the AI models is theirs.
But that's the question, is it? And I think that's, by the way, what Alex Karp was getting at. When you put the prompt into the system, is what mine is mine really mine?
I think it should be, and most, you know, large enterprises have contractual commitments that guarantee that. But it is the right question. And as I said, I think one of the misconceptions I often hear is, how can I make my intelligence better than my competitors? And what I'm saying is it's a little bit like the internet. Everyone's going to have a website. Having a website is not a competitive advantage. Having, you know, intelligence is actually going to be quite democratized. And you need to think about what are the things around it, like your customer relationships, that can be durable in the face of this super intelligence.
You've been asked about it before, but I'm going to ask about it again. This Apple suit, suing OpenAI. This is claiming in a very sort of elaborate way that you were stealing their IP and orchestrating the stealing by effectively not only hiring people from that company, but educating them and instructing them how to take the IP out of the building, if you will. What do you know now?
Well, I can't comment on it specifically because it's an ongoing investigation, but I can say unequivocally we have no interest in any other company's trade secrets. And, you know, we're just trying to innovate, especially as we think about the future of intelligence. I think it will lead to, you know, perhaps devices that go beyond the smartphone. You know, fundamentally, the really interesting thing about AI is we can talk to computers now. You know, we don't need to type, we don't need to tap.
But does it concern you, though, on a trust basis? Because part of the whole issue right now is, should other companies trust working with OpenAI? Should they trust working with Anthropic? Who do you trust? Who do you not trust? And so when you see a lawsuit like that, invariably, I'm sure there are companies saying, yeah, but that's happening. How much should I worry about whatever else is happening behind the scenes?
Well, look, we take this very seriously. I don't want to, you know, misrepresent that at all. But as I said, we have no interest in other companies' trade secrets, and we're really trying to create the best models that every company in the world can depend on with trust.
I got one more for you, because you're the chairman of OpenAI. And you follow, I'm sure, Sam and others on X. And sometimes there's this back and forth that's kind of remarkable. And I want to know what you think as you're listening to this. So at one point last week, Sam wrote to Elon, homeboy, you're the one selling public market investors on short-term space data centers. This is after Musk went after him on the Apple front. And then Musk is responding by saying, after stealing an OpenAI AI charity, then you stole Apple's technology, and basically tells him that he can come watch the data centers going into space, you know, if your parole officer approves. And there's something sort of comical about all this, but I also wonder, as the chairman of the company, if you're saying to yourself, I wish my CEO was not on X right now.
You know, what I care about is that OpenAI achieves its mission, that we have the best models available, and fundamentally, we achieve our mission of benefiting humanity with AGI. We live in a very authentic era. Sam leads with his heart and his head. He's authentic on social media, and I wouldn't change it. I think he's a remarkable leader, and you know, I sometimes get these things sent to me, and I laugh and occasionally wince, but you know, he is who he is, and I'm very, very supportive.
Right, it's great to see you this morning.
If you go to a movie and nobody else wants any popcorn.
Oh, now you're on to popcorn. Back to popcorn.
Will you get the bucket, or will, because it's more convenient, or the bag that kind of falls over?
Absolutely get the bucket.
You'll get for one person, and you'll put that fake stuff on it.
Absolutely. Yeah.
And you'll save 1,400 calories. Damn the torpedoes and salt.
It's the most important part of the film for me. And by the way, when they say they don't want any, they're going to share
They're
it.
lying.
You
I know.
know they're going to take it.
Andrew, we talked before, because he had seen the Adam Aaron, and you want this, what is this? You want this kale-based popcorn with, it's all like,
No, but you know,
gluten-
I'm a feast or famine kind of guy.
It's
I
gluten-free.
go
You don't like
crazy,
kale?
and no, sometimes no, I don't like kale. That's the running joke on the show. No, some days
miracle he
I
doesn't.
eat like a crazy person, and then some days you're trying to be a little bit better.
but at a movie.
And so if you're at the movie, the idea that they're now selling popcorn that's like marginally better for you, that seems like a
You
good
tried
idea.
to get Adam Aaron to get rid of the old popcorn.
No, I'm not trying to get rid of the old popcorn. I'm trying to add one more SKU to the to what
for
to what's
variety.
I
available.
want us to have nice things.
Yeah, yeah. I'm with Brett on this.
Brett's gonna. Are you gonna buy the? What did he say he was gonna try to sell? Adam said he was gonna try to sell fried popcorn.
Oh, wow.
How do you feel about fried popcorn?
I'm a traditionalist, I have to say. I want the
Fake butter.
Yeah, exactly, and a lot of salt.
On the bucket.
Yeah.
Okay.
Yeah, we're aligned on this.
I'm losing. I feel like I'm always losing. Brett, it's nice to see you.
Nice
Thank
to
you.
see you.
That's still to come. Spain was not.
Yeah, I can't change that.
No, Spain was not the only winner of the. And he's not taking GLPs either, are you?
No.
We like wanting popcorn and sex and things like that. The only. Well, no, speaking for you, speaking for all of us. Speaking of the World Cup, some sponsors.
Welcome back to Squawk Box. Spain defeating Argentina to win its second World Cup in history, but some brands might have been the bigger winners in the tournament. Joining us right now is America's Reed, Wharton professor and CNBC contributor. Good morning to you. Who do you put in the winner category, and is there a loser in all of this?
Well, I love the question. I think it's a nuanced question, Andrew, and I think that winner means a lot of different things. For me, winning is owning the cultural moment. It is getting identity permission from the fans who are here to explore and immerse themselves in Americana culture and to be a part of the narrative that gets shared in the context of being in this experience and really enjoying what was an incredible tournament. So there are several brands that were actually sort of under the radar in that sense, Andrew, and they were really interesting because they were the brands that weren't official sponsors in any way with respect to the World Cup phenomena, but they enjoyed the fact that folks coming into this country identified them as authentic cultural symbols. And so a couple of brands I want to call out real quickly on that note, Andrew, are Buc-ee's, Waffle House, and Bass Pro Shops. And if you just like think about those different, you're probably thinking right now, Buc-ee, the beaver. You're thinking about the icon of the Bass Pro Shop, and you're thinking about, wow, that's kind of cool to say, hey, I came over to this country and I discovered something real and authentic. And so there's a lot of social media, social listening data that is showing that these brands got tremendous engagement in social media, and by engagement I mean clicks, posts, hashtags, reposts, comments, all these kinds of things. And it's a beautiful thing in terms of being a winner because you didn't have to pay for any of that stuff.
Right. Who lost?
Yeah, it's a great call. Who lost? Well, Argentina lost, of course. But, it's interesting because in some sense, when you think about losers, the way that I conceptualize this, Andrew, is that I think about who are the brands that treated this in the perhaps too static and inappropriate way. In other words, they were thinking about, let me buy some advertising, let me spend some advertising dollars, let me get some eyeballs. And so if you're thinking about it from that perspective, you're missing the point. Because the idea here is, again, to be part of the cultural relevance of the moment. So when you look at some of the brands that tried to get out there and just buy advertising and just try to be in a place where they're just simply trying to get some eyeballs, yeah, they were able to get some awareness. Okay, so brands, for example, some of the bigger brands that—
Who are you thinking about?
Yeah, so some of the brands that I'm thinking about in this context were actually FIFA is an interesting brand, because FIFA in this context, the brand that institutes the entire World Cup, had all of the eyeballs, but a lot of controversy with respect to some of the institutional reputational effects that were going on in the conversations that were happening with people. And so Nike is an example of another brand that had a kind of a mixed result. I wouldn't call them a loser, but I would say that they were at the forefront of sort of representing, only them, Adidas and Puma are the kind of the big sponsors of the actual jerseys. So they had the opportunity, Nike did, to actually be a part of the actual cultural moment of adorning fans with their favorite teams, but they actually ran out of inventory and didn't quite manage that piece right. So there was some latent demand that was left on the table there. And of course, we've talked in the past, Andrew, about Nike's challenges with respect to trying to remain relevant in the current sort of cultural environment as well. So Nike, I would say, had some mixed results there. But for me, the clear winner was Adidas, because Adidas really nailed it. They really did the right thing with respect to being in that moment where, again, people put the jersey on, Adidas is there, their sort of favorite World Cup country is there as well. And it's really incredible because $1.7 billion is a lot of money, okay? And the fact that sales across stores were up, traffic was up, people were connecting the Adidas brand to their favorite world teams, and all that positive halo was actually basically bleeding into the brand. So Adidas came out of this incredible in the context of really being sort of, for me, in my opinion, the big clear winner.
All right. We got to thank you. We appreciate it. It's been a heck of a couple weeks here with the World Cup in the United
I appreciate
States.
it, Andrew. And just to let you know, I just ate my fried kale sandwich. It's awesome. So
fried kale. He's watching the show.
That's it.
That's a real oxymoron.
Yeah.
Fried kale.
Yeah.
Wow.
Appreciate the opportunity.
Fried and butter.
Give it a try.
With some ice cream. All right. Coming up, democratic socialism gaining attention nationwide. A breakdown of how Americans really feel about that movement. That's next. And then what's holding up the Clarity Act from being passed? The vice chair of America's largest crypto exchange will join us. Crypto prices this morning up a little bit, but Bitcoin almost 65,000 again. We'll be right back. CNBC taking a look at the nation's shifting views on capitalism and socialism in the latest All-American Economic Survey. Senior economics reporter Steve Leisman has the details.
Morning, Joe. The CNBC All-America Economic Survey finding a modest erosion in support for capitalism and a modest upswing in support for socialism. But it's important to look at how we've gotten here and where the changes have come from. The survey of 1,000 voters nationwide finding that 50% of respondents have a positive view of capitalism. That's down just 2 points since NBC asked the question in 2018. But negative views have increased by 9 points, beginning with the pandemic in 2020, and those who are neutral declining by 6 points. So voters remain net positive on capitalism, but down 11 points on net from 2020. Looking at just the change from 2024, a huge swing in the attitudes of the 18 to 34 group. They've moved from +7 to -10 on capitalism. Black voters, -1 to -10. Democrats in general, they were +5 on capitalism. Now they're -20. Republicans, by contrast, went from +51% to +66 on net. Now, a 48% plurality of voters have a negative view on socialism, down 7 points. So negativity has dropped from 2024. Those with a positive view rose 10 points. Voters who were neutral fell by 4 points. So the nation is still down on socialism, but 13 points less negative than in 2018. Young voters, black voters, Democrats, they've turned net positive on socialism compared to 2024, and a net 40% of Democrats now have a positive view. But even Republicans, slightly less negative than they were. Asked if some form of socialism would be okay, 44% said it would be a bad thing, 40% said it would be a good thing, including 75% of Democrats and a third of independents. So how does all this affect the congressional election? This is really interesting. Voters are unlikely to support a candidate who identifies as a democratic socialist by a 32 to 50 margin. But that -18 net is worse for a candidate endorsed by President Trump at -23, and even worse for a MAGA candidate at -30.
Hold on, what's the difference
What do you mean?
between a MAGA candidate and one endorsed by
We
Trump?
asked if the person is endorsed by President Trump, how do you think?
All about how you ask the
person
questions.
is endorsed by MAGA, how do you feel? If the person's a social democrat, how do you feel?
The whole survey is about
Like
how you ask the questions.
That is true. That's why we have Republican and Democratic pollsters go through the questions for this. The survey can't pinpoint the reason for the changed views of socialism. Definitely an overlap between those concerned about the cost of food and housing and more positive views of socialism, guys.
And it depends on how you define socialism. I mean, when people argue about socialism, they say you like your police department, you like Social Security, you like the fire department. And then there's others that say that Europe represents socialism, and then they parse the difference between socialism and democratic socialism, whatever those differences are. I mean, there's a lot of different ways that you can look at it. I mean, hardcore socialism, like, well, you know, pick your country, but that's different than Sweden, obviously. So, I mean, it all depends on what your view is. But, you know, I looked up the Reagan quote. He was talking about freedom. Freedom is never more than one generation away from us losing it, because you can't pass it down in the genes. And I think a understanding of the way the world works economically is never more than one generation away from extinction either. And we have to constantly be educating people.
I agree, first of all, with the first part of what you said, that we don't really know what people think.
Can we
when
agree
say
communism is
socialism.
bad, or we're not sure about that either?
That's in the public?
Oh, I'm talking we.
Yeah.
I'm talking me and you.
We'll put communism maybe on a future poll. But people may have very different ideas of what socialism is. When you say a little bit more health care, I wonder, Joe, if
Social
somebody
Security.
like you or people who are very, very positive on capitalism, myself included, see a poll like this as a bit of a wake-up call about how the gains from capitalism are being distributed and felt out there.
Well, and the way that happens is whether, if it was pure capitalism, whether there'd be that problem, or whether all of the things around the edges of the way it's deployed in this by this system are pure enough for you. If you want to start legislating outcome, that's one thing. If you want to just try to make it a level playing field on the way in, so that everyone can flourish, that's different.
Joe, I feel like, Andrew, can I just bring you into this? feel like
You
we're
need help?
very different. No, not. It's Andrew's sort of knowledge of these guys with all this money that I want to bring in.
Okay.
I feel like we're in a time where I thought I knew what wealth was.
Right.
But what is wealthy now is so much beyond any concept I ever had.
Right.
And to the extent that I see people looking at that and they say, this system is unfair. These guys who are making this money on AI are making this money.
Right.
Another sort of thought I heard out there as well, how is it we can invest $700 billion in AI and we can't build railroads in this country? Or we can't provide health care? That sort of thing that brings up
Well, no,
questions
I think
about
that the reason, right,
what is
I
the
think the
role of
reason why
government
this
and
conversation
the fairness of capitalism.
is happening in the country is because of what people see as inequality, not just, I think part of it's just the pure numbers. And by the way,
Yeah.
Warren Buffett wrote a fascinating letter 2 years ago about how he could never even imagined
The kind of wealth
that he's had or that anyone else has had. So I think at that strata, people say, oh my goodness, this is extraordinary wealth. The question is, does that wealth bring everybody else's wealth up or not? That's sort of the ultimate question. Does it trickle down or not? And how that works and what the processes should be. And I think the bigger question, I think that's why I think that, and maybe I fear it, but AI I think is going to be on the ballot box in 2028 because people are going to say, is this going to take my job? Are robots going to take my job? And if all this stuff is a success, this is the first time we've had a period of time where we have technology now where the point of it, like the genuine point of it, is to actually
Get rid of people.
To take our
That's
jobs.
not always been the case.
But yes, but in a slightly different
let's
way.
say, but would you?
And by the way, that's not an argument
Are
for
there some kind
socialism.
of governors you put on how much wealth someone should be able to accrue if they're very, very successful? I don't think so. And I think it's a really good thing that people can accrue a lot. And I just want to make one point, Andrew. The last time we got hot to trot on all this crap, you're going to be amazed that no. When did Thomas Piketty's book come out? The last time we went apeshit about capitalism versus socialism and this, 2013. None of this is new. None of this is new. It comes in vogue. How many times has Ray Dalio come on here and just opined and just hand wrung about all this? It goes on. Is it worse now? I don't know. Maybe it is, but we've seen this movie before.
Well, but here's the one part of the question that I still think is unresolved. And I always talk about taxes.
You remember Piketty?
I remember Piketty.
Loved that
but
when it came out.
Well, I thought it was fascinating because it created an interesting conversation.
Loved it.
But
You did too, I'm
the
sure.
question is whether the tax structure in America is genuinely fair and has not elevated everybody else. When you think about,
you're talking about the billionaires
I'm gonna
again,
make
because
one-
obviously it's
and
very.
I'm not talking about a wealth tax.
For most
I'm
people,
not
it's
ta-
very progressive
I'm not
because
talking-
10% pays most of the taxes.
yes,
right?
but I'm not
So
talking
it's
about.
very fair.
I'm not
I think
talking
you
about.
guys are both missing the point. I think that very simple. If you had a housing market where young people could get homes and form families, that number of young people supporting socialism, I guarantee you would go down. That's where it's at. There's only
then
three
you
kinds
gotta-
there's three kinds of kids in this world today. Those who are getting help from their parents to rent, those living on the couches, or those that are renting and paying.
Right, there's an affordability gap, and that is a real thing, and it has not been. It has not been
the
resolved.
housing thing, and that's I think that's why we had bipartisan
I
housing
don't know what the
legislation.
answer is. I don't want to blame.
I agree with you, Jim.
I don't want to blame our youth as slackers or anything.
I
like
think
that,
you're
but
wrong that we don't have a new problem. I think you're right that all efforts to legislate this lead down a road to.
Well, I think you're wrong that we don't have a fair tax
I think
system.
you're right.
Maybe at the top, with billionaires, you want to do something with the way their founders shares and they borrow against it and they don't. But in general, we have a very progressive tax system.
Right, but I think back to the real estate piece, what you do need is you need a greater supply of housing. By the way, the Democratic Socialists are not helping with that because they're trying to freeze the rent on a temporary basis, and that's probably changing the incentive system unto itself. Having said that, the regulations in a city like this, there should be cranes all over the city. You think about how fast the city's growing and what it needs. There should be cranes
Nobody wants to
everywhere.
live here because it's.
And there are no cranes.
Why would you build anything if you can't charge a market rent?
For it.
And when you lose Bill Maher, you're really losing.
So I
You're
don't
losing
think,
the young ones.
by the way, I don't think we're disagreeing on that.
Well, we're
you're
not
losing
really
young people.
disagreeing, huh?
You may be losing Bill Maher on the left side, but you're losing young people.
Have you
That's the
looked
problem.
at these young people kind of? I was young once, believe it or not.
No.
Yes, and we
Did
did
you have
things.
long hair?
You could not believe what
beard?
my hair looked like.
A beard?
I still can't have a beer. No.
Okay, Steve, we gotta run. Thank you. Appreciate it. Coming up next, a major legislation designed to create rules for the crypto industry. We're going to speak to the vice chair of Coinbase about what it could mean for the sector, and we'll do that next.
You believe Pickety's been... Oh, look at this. Someone needs a raise. Still no clarity on the Clarity Act. A proposal to bring regulation to crypto. The House passed its version last year. Now everyone's waiting on the Senate. President Trump posted on Truth Social last week, in honor of Senator Lindsey Graham, a big supporter, the U.S. Senate should pass the Clarity Act. China and many other countries would like to take complete and total control of this major financial happening, as well as AI, where we are now leading, but where they are fighting hard. Don't let China win on either subject. Ryan Van Grack is Coinbase Vice Chair, formerly worked at the SEC. The House has done one version, the Senate's been working on others. What do you know about the Senate version and what it includes, what it doesn't include?
Sure. Well, first and foremost, I know that there's been tremendous momentum. Even in the last few weeks and days, you continue to have a bipartisan group of Senate Democrats and Republicans working together. But the true measure of a bipartisan bill is not whether everyone gets what they want. It's whether ultimately Americans will be better protected compared to the status quo. And there's actually no meaningful debate in that space. This is going to create, for the first time, a comprehensive federal framework and oversight over the crypto space. And Joe, I think it's important to remember, it's not about no regulation. This is about imposing regulation on the industry for the first time. And so you have a unique opportunity for the trifecta win-win-win. American investors, American innovators, and American standards get to prevail if we get this bill passed.
What will be in the Senate bill that was not in the House bill that Democrats want?
Well, interestingly, in the last few weeks and months, we've seen the Democrats obtain meaningful concessions to strengthen the consumer protection provisions of this bill. You have an illicit finance framework that's been created. You have an FTX loophole that's being closed to prevent things like FTX from happening again. You have insider trading, safeguards, and more disclosures. So really across the board, the Democrats have obtained meaningful concessions to make what was already a strong consumer protection bill that much stronger.
Will there be a change to how crypto is classified in terms of commodities, securities?
Not fundamentally. I mean, first and foremost, you're still going to have the registration, examination, and surveillance infrastructure that was part of the House bill. But the Democrats, what they have done in these additional negotiations is make sure that you have more teeth to make sure that customers are ultimately better protected. Because at the end of the day, this is about customer protections. The status quo lacks this infrastructure, lacks these protections, and the Democrats used this opportunity wisely to make sure that customers were first and foremost in getting this bill.
I mean, banks aren't going away, crypto's not going away. How is that going to reconcile itself with people like Jamie Dimon? How can we all get along?
It actually is reconciling itself, because if you look below the headlines, what you are seeing institutionally is a wide array of investments and partnerships with companies like Coinbase. Not a week goes by, Joe, even on your show, where someone isn't announcing some new project or investment into crypto. And we're having an inevitable convergence where a few years from now, we're not talking about traditional finance and crypto. We're simply just talking about modern financial institutions, because it appears every modern financial institution recognizes what Coinbase did nearly 15 years ago, which is it's simply a question of when, not if, everyone adopts crypto and the blockchain technology that undergirds it.
Well, is it, Andrew, what's your question? Is it possible that blockchain is real, but Bitcoin isn't real? How's that? Is that a decent question?
I mean, that's a fair question. There are people who have that question about blockchain. But by
Blockchain's real, but
there's, by the way, there's people who think that maybe blockchain's not real. I mean, not that it's not real, but that it doesn't serve as big a benefit as a massive database. I mean, if you were Citadel, you would say, who needs blockchain, right?
You might say that, but even just last week, it was announced that Citadel Security made another massive investment into crypto, into the crypto economy. And so every major institution, Citadel included, seems to be heading and trending in that direction. And I think when you look about the benefits of blockchain and tokenization, you see a universe that allows us to transact more transparently, more quickly on a 24/7 basis. Andrew, I don't think anyone, if you were creating a financial structure today, would create the financial infrastructure that we have been living under for the last 100 years.
Right. No, that's a fair question, but there is a second order question, which I think is typically a Citadel kind of question, or somebody else's kind of question, which is, don't you want to be able to call somebody if there's a real problem? If something gets stolen, isn't there some phone number you want to be able to call, some counterparty? And you could argue, maybe through blockchain, you should be able to find the counterparty because it's all embedded in the chain.
Now anyway.
But there's also an argument to be made that is a very difficult way to live your life.
But those are the precise types of questions that Chair Atkins at the SEC and Chair Seelig at the CFTC are able to navigate. The solution to that, or the answer to that question, is not to not innovate, to not improve our financial system. It's to recognize that there are tremendous benefits, and at the same time realize that there are still questions that we need to answer, and that's precisely
But the conundrum is that the technology almost purposely tries to sidestep ever answering that question, or to say that there is no answer to that question, that the entire point of the technology is to end that question so that there is nobody to call, right? Like that is the goal, but it doesn't always work like that in practice, and that's sort of the issue.
No, look, I think it's fair, but on the flip side, you can also identify some of the limitations and inefficiencies of our current system.
Oh, no
Why
question.
does it take days to reconcile trades? The counterparty risk that it creates is massive. So blockchain technology solves so much of those.
I'm not here to tell you it's the wrong technology. I'm just here to say that there's elements to it that are, by the way, part of the issue on the Clarity Act is, and it's what the bankers would say, should you be able to get loyalty points or benefits, an interest in, is that a good idea or is that a bad idea? What does it do to the banking system? And what does it do for everybody else? Those are reasonable questions to ask.
That's right.
And the law is going to be a blunt instrument, and that's the difference.
I would say two things. It's fair to ask those questions. It's good that we're having those debates. To me, the real concern is in the absence of clarity, you do not have a federal oversight framework. So whether you love crypto or hate crypto, you should want
So if someone, Grantham, you said you saw that interview, said Bitcoin's going to zero, it's not worth any more than a warm bucket of urine. What is it that does he know anything about it? Is that what you would attribute it to? Or is that he's entitled to that opinion?
Well, he's certainly entitled to that opinion, but look.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. NASDAQ 100 trying to break a 3-day losing streak and stabilize this momentum unwind. Qs haven't traded red for 4 straight sessions all year. Earnings season heats up this week with Google, Tesla, IBM, Intel. Brent did hit 91 overnight. The U.S. suffers its first casualties since the early days of the Iran conflict. And now the Houthis in Yemen announcing a maritime ban on the Saudis. Our roadmap begins with the street looking for a bounce at the open after chip stocks notched their worst week in more than a year. Big test on deck for the tech rotation trade. Alphabet and Tesla among the headliners set to report this week. And oil right around the flat line as Iran says talks continue through mediators. Gas prices will get back to $4 average today. Let's begin with the markets, though, after a number of tech names are saying good riddance to last week. They include SpaceX in the midst of that 6-day losing streak after falling further from the IPO price of $135. Stock heading into the week down more than 45% from the high after its June debut. Microsoft, Broadcom, Tesla rounding out the $1 trillion club. We talked before the IPO, Jim, that IPOs draw down usually about half.
Yeah.
The big ones.
Yeah, look, I'm reluctant to say anything really negative about SpaceX because, like Tesla, there are true believers, and they're just not going to be dissuaded by the action in the stock. There are also people, I met someone again this week who said, look, I have 40,000 shares for something I got, and they told me they stopped me out. they sold it at 134. You know, you typically don't have these deals where there was so much stock. I mean, you see these ads all the time which say, listen, if you want to know these companies stay private longer, I find a lot of people own the stock. And there was a lot of, you know, a lot was distributed or people bought, and you find that they don't want to see their gains lost. So that's, I think, some of the selling. I'm coming at this from a totally different way, though. And not SpaceX, that's separate, because the people who believe in SpaceX, that's a 10-year. No one ever says less than 10-year.
Yeah.
All this stuff, say with DeepSeek and all this stuff.
Moonshot.
With Moonshot,
We didn't get your take on that Friday.
K3, all these things do is make it so I want to own JP Morgan. I want to own Union Pacific. I want to own JB Hunt. What goes on when you see these, and I know the stocks are all up and the Micron's up, is that there's heat-seeking missiles go against them. I mean, Seagate was up on Friday, but when I saw things like Wells Fargo go down and then come right back, I say to myself, what the heck do I need this tech for? I mean, any given minute, someone's going to say, I'm selling, you know, I got to, you know, Meta's got to sell right now 100 million shares. I don't want that. And if I can get into another kind of company that does not have tech, I want it. I don't want food. Now, obviously, there was an obituary written about food in the journal, and that's fine. But I just feel like, what do I need this for? And I compared it in a piece that I did on Sunday that came out after Brazil won. Spain won, whoever. I mean, I'm watching this stuff and I'm thinking, who are these guys? I don't know. It's 1-0. Why is it a 24/7? I mean, I'm like calling my wife and saying, what? They got to widen the goalposts or something. What the hell is this game? But I do come back and I say, you know what? I really prefer the incredible action in when someone reports a good number that's not tech. And I don't want to be in a stock where I have to find out that Nebius has a brand new $3 billion contract, because it's too hard. And I don't want to be in too hard. I said every day when you come in, when you're with tech, what happens is you're basically tied up in front of a freight train on the tracks, and someone cuts it just before you die. And I don't want that.
Wow.
I would rather be in JP Morgan.
Wow, this is remarkable. Your patience has run out on tech.
It has, because what happened is, with the exception of Apple, I fully expect at the end of the day to be down. Maybe today's the day where I make some money in Micron, but right now, until we clear up this idea that the Chinese, this isn't a DeepSeek moment, and until all the money's raised, I start thinking, you know what? Can I please be in a trucking company that's about to report that may be like JB Hunt? Maybe I can be in a small to mid-sized bank that will make me money no matter what. That's
I think viewers can sympathize with your view that the reaction to TSM didn't make sense, disappointing, ASML, but also, Jim, also GE Aerospace.
Well, I mean, let's see if that changes.
Yeah.
I know that I felt that Boeing could run today, even though, you know, Kelly Ortberg will say, look, we have to get our house in order, but that's what I want. I want their house in order. But I just am struggling to be part of a group that I just know at some point is going to get hit again. And I look at some of the Alphabet, and on Thursday suddenly I find out that, you know, Alphabet's late with some product, and I'm like, what? I mean, what? Late with some product? And I'm trying to call Alphabet. I'm trying to call my sources at Alphabet, and nobody answers. And it's like, oh, well, that's great. Microsoft, okay, like I'm thinking maybe there's some value in Microsoft. And then I come in this morning and I learned there's no value in Microsoft. I'm thinking maybe ServiceNow is going to have an upside surprise. And then I'm like, listen to Ben Righteous. He says, that's who they're going after. Yeah. And I don't want, a guy's ringing the bell today called Coca-Cola. No one's going after Coca-Cola. I mean, Coca-Cola is like, you know, Coca-Cola had a really nice run.
Yes.
And I don't mind. It's like, wow, Coca-Cola, that's a good one. How about that American Express? I mean, I don't want this, Carl, I don't want to come in and find out that I'm down 40 points or something. It's just too painful. I owned Corning. Owned Corning for the trust. It went up 100 points over a period of a month. I was genius. Then it lost 100 points 2 days. I'm an idiot. And I find myself thinking, I can't be in something that has that volatility. I'm not going to play that game. Every day I leave here and I see that there's more option activity in NVIDIA than any other stock.
Oh, yeah.
Now, I say own NVIDIA, don't trade it, because I think NVIDIA is going to come out of this. But I'm reading these notes about China, and they say don't worry about NVIDIA. And are you kidding me?
Yeah, I know. Jim, I mean, chip vol is at a 30-year high versus the market. The Kospi has paused trading almost 40 times this year. Last year, they did it 3 times.
Thanks for bringing the infection of Korea into our market. I mean, I come in this morning and say, oh, good, SK Hynix is up 9. Well, that means tomorrow SK Hynix should be down 15. I don't want this. I have no value added.
Is that space getting nearly cheap enough, though, to get interesting, the vol aside?
Not yet.
I mean, SMH's or Kospi's in a 25% drawdown.
Right, but I just feel like the money that is in these stocks is the worst I've ever seen. I cannot believe every day someone is shocked that there is a company that could possibly fall so much. And they all have to know. I mean, look, does Meta need money? I don't know. Does Microsoft need money? Maybe.
Yeah.
Does Amazon, have they tapped out the bond market? Could be.
Oracle? Do you want to put up 5-year CDS today?
Oracle, I'm not even going to go there.
Yeah.
I'm not going to go there. Oracle's Cape Fear.
Yeah.
It's Cape Fear, okay?
We surpassed the March highs on 5-year CDS. You don't like the information as a single source, but they did do a piece.
I'm into things being right
on cost surprises regarding their data center build out.
Well, it is. I mean, every day. I mean, when you speak to anyone who's actually involved in the data center, there's just so many. There's only so many workers. There's only so much cement. There's only so much wiring. All those companies are going out. I don't want to touch them either, because at one point, what happens if one of these guys says, you know what, I'm going to wait a little. Prices are coming down. And then the next thing you know, I'm in there, I'm in TeraWolf, and I'm at 20, and then I'm at 10. I don't want to be down 50%.
Yeah. Here, I want to read you Mike Wilson this morning, Morgan Stanley. While we don't think the CapEx cycle is over by any stretch, there could be a modest cooling off in the rate of change and revisions for semis as the hyperscalers potentially recognize the CapEx sales factor is no longer being rewarded.
Well,
and you think we're going to get to that moment?
I think that Mike is right, and not because of China. It's just because enough. I mean, these things. All the China stuff is actually bad. I could argue for Anthropic, bad for OpenAI, except for the fact that the government, if you do work with China, I think this government would make it so you can't do any other work. So it's kind of, you'd lose some business. But I just find, okay, give me the one. Salesforce. So I'm up here talking about my friend, and I do, Jackson Ader's my friend, from Key. And he says, listen, Salesforce is, you got to stay. It's a sell. I mean, there's too many things going wrong, and they're all gunning for it, and Claude gunning for it. And then I got Mark calling me, and he says, listen, who the hell is Jackson Ader?
Benioff.
Yeah, I mean, Mark Benioff, yeah. Jackson Ader, I mean, what is he? Who is Jackson Ader? What is he? And he's like Shakespearean. And then I get well, wait a second. I mean, I got the CEO, someone I know since 2007 who's been right. I've got a guy who put a sell in this thing, I don't know, at 230, and I come to the conclusion of, I don't like situations where if someone asks me what I think about Salesforce and I start with, I mean, I'd much rather say, well, listen, my tomato, my Romas are coming out
Exactly.
great. I don't know about my cherries.
You mentioned Melius today. That's exactly Ben's point, is that Moonshot and Kimi, probably not bad for memory or infrastructure, but these labs, these AI labs, are going to double down on the application stack, and it's probably bad for SaaS.
Yes, but I just don't know how much more Salesforce can go down. But Salesforce is a great product, okay? I don't know whether I can replicate that product. I just don't. And I know that that's now a contrary view. But you know what? At 300, Yeah. At 160, I don't know, can Mark surprise? And can Salesforce surprise? And at the same time, ServiceNow surprise? I don't know. I mean, they're so low. Do they not reflect some slowing already? Now, Adobe's different. I mean, companies that don't really have CEOs and CFOs, they're in a special category.
You've always put Adobe in a separate
special
space.
category.
What do you think, by the way, both Microsoft and Adobe are initiated outperform in CLSA today. What does IBM need to say on Wednesday?
Wow. You know, I felt terrible about that. And I was wrong about it. And I talked about it at the club. I mean, Mr. Christian, I think is fantastic. I thought that they had a nice software stack. I knew that they have all the banks. That's such a great business. Everybody knows that they can't really be hacked. That was really jarring. And it said to me, okay, no one's safe, so let's go buy some Union Pacific. And that's where I know we're going to talk at Microsoft. I've been trying very hard to get around. Like Microsoft, Xbox, okay? It's going to make a comeback. It's going to do a lot of things right. I do think that Microsoft, I mean, maybe Copilot's not as hated as I thought. I mean, I'm watching Spain, and suddenly there's Copilot, and I said, well, geez, at least they don't have to write Microsoft code. Somebody knows what Copilot is.
Yes.
It's up there with Coca-Cola and Visa. But I really prefer FedEx Freight.
Yeah. We're going to dive into that basket of things that are getting interesting to Jim here. We'll take a break, take a look at the pre-market, get you set up for the earnings calendar this week, which will include names like GM and CSX and 3M. More in a minute. Oil prices really riding the flat line this morning. A spokesman for Iran's foreign ministry telling reporters that negotiations with the U.S. might be pursued based on national interests. Despite the U.S. launching strikes against Iran for the 9th consecutive night, 3 American service members were killed. 1 has gone missing following Iranian attacks now in Jordan as well as Iraq. Meantime, AAA gas prices back to $4 a gallon, first time in a month as the conflict does escalate. Jim, this bit about the Houthis we mentioned, you know, they're not happy with the Saudis. They're talking about this maritime ban. That would be another strait to worry about if that were to develop.
Yeah, and you can't get the pipelines up there fast enough. I keep thinking, I remember when the Saudis said they'll shut down the Houthis. I keep believing Jordan has a great Air Force. People underestimate Jordan's entire military because it's been trained with the Israelis. I actually saw joint exercises when I was over there at one point. And I just think that when are these other countries that are being bombed every day say, okay, that's it. That's it. We're coming after you too. And I mean, because I think that the big missing point of what I think Trump may have thought was that wouldn't everybody go with us? I also noticed that Trump was uncharacteristically quiet about what he's doing.
Yeah, we don't know. There's been very little in the way of clarity or strategic disclosure. Meantime, Jim, SPR, we have 43 days of supply. That's going to take you back to the Reagan era. And European LNG imports are down by a third. We're beginning to think about how they restock for winter if this does go on.
It's interesting. There is excess. Thank you to Russia Brazil today. There is excess LNG, and we have it, and we can send it. I wonder whether some people feel that the SPR isn't as important as the living, breathing SPR that is the Permian, which is just producing a huge amount. But the guys don't seem to talk about it enough. And it could be up to 14 million a day. So it's not like when we set up the SPR, we were huge importers. And yes, we import from Canada, and we would import more from Canada. But right now we have a little bit of strife with Canada, and we're not finished the pipeline yet.
Yeah.
So I think that a lot of people feel we're much more self-sufficient. So what do we need a big SPR?
That is true. I mean, rig count on Friday is starting to perk up a little bit.
I'm telling you, they are drilling. They are drilling, and one of the reasons why they're drilling is they've been having problems getting rid of the natural gas. I mean, you drill and you flare, they shut you down, but that may be, there's pipelines for natural gas, there's pipelines for ethane, there's pipelines for a lot of things now that weren't ready, and a lot of new plants that are going to be for LNG, which don't take as long as I thought they would. So we're kind of in a very different situation from every other country. We just keep finding more and more oil, even though the people who are in oil didn't think that would happen.
Yeah. So you think we can sort of live with what? Brenton and high 80s?
I believe that. I mean, we do export gasoline. I don't want to see that market disrupted because we have an international market. We have, remember, we're continental self-sufficient. Never think that we're that we're just United States self-sufficient. But I just think we're in much better shape than people realize, which is one of the reasons why it's not going crazy. And every article says that we've misjudged on everything. I mean, when you read the articles, it's really hard. Mainstream media, it's like, wow, are we stupid? But when you think about the amount of oil that we have and what we're doing, but that area we turned out to not screw up.
That's true. I mean, distillates is a totally different conversation, though. I mean, diesel, diesel makes the economy run.
No, I know.
And the crack spread on diesel is more than the raw.
I know, and United really had a lot of things to say that were negative, and you're absolutely right. I guess, I just think that defense-wise, militarily-wise, other than, wish we were more electric, but I don't think we're in bad shape, and I don't think the Chinese are going to turn up anytime soon. The Chinese are really...
As a buyer, you mean?
Yeah.
That's interesting.
And by the way, that's the Chinese economy at 4.4. Again, I mean, I pick up the paper. The two things I realize, we're a bunch of idiots for whatever we do. And Democrats, Republicans. And the Chinese are brilliant, whatever they do. But meanwhile, the Chinese have 4.4% GDP. And if anyone really believes that they believe, if you believe their numbers, I'd like to do a divide by 2. I think they got like 2.2 growth. And by the way, I remember when East Germany was a thriving country, it turned out that 10% of the people were killing themselves and no one wanted to come in. I await the giant exodus from China to here.
We'll get Kramer's Mad Dash countdown to the opening bell. Take another look here at the pre-market and buckle up for another crazy week. We're back in a minute. Keep your eye on the restaurant space today. Take a look at Domino's, going to open up 7. The top line was a miss, but comps forecasting 1 to 2. Street was, or they came in at plus a 10th.
Thank heaven, pizza's been so horrible. It's been the worst of the entire group. It's been worse than beef, even though the price of beef. So this was a nice coda for Russ's career. I mean,
yeah. We'll also get to AMD here with this Microsoft deal and find out whether there are still things that could lure Jim back into tech.
It's so funny because if Dave were to say, "What are you turning on NVIDIA?" I'd say, "No, I just want to wake up and see stocks unchanged."
Yes. Opening bell in about 5 minutes. Don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast. Let's get Kramer's Mad Dash as we count down to the opening bell.
There was a time when the Chinese made things we all loved, no matter if it was a consumer product. But we never really thought that anything like a Kimmy would go bonkers. Well, I want to this is an example of what I'm saying. This morning, Goldman upgrades Yeti. Now, Yeti had been under attack by the Chinese with a lot of different brands. You go to Ollie's, they have a whole line of Yetis, except they're not made by Yeti. But Yeti's got good numbers. Yeti's got a lot of new products. This is the second upgrade in the last couple of days. I don't have to worry about Yeti. Yeti is the winner in the category. So what I'm saying is that this is what I'm looking for. I just don't want to be in something where, I want UNH, where it's just a very solid company and the Chinese aren't going to come in. Because I just don't want a situation where someone says there's going to be 100 million shares of Yeti offered at 41. Not going to happen. It's not going to happen.
Would you be interested in a Subway chain IPO?
Yes, very. Well, I know Jersey Mike's. I love that. I mean, that's a very valuable property. Again, like the Chinese, I don't see anything about them in the submarket.
Let's get the opening bell here at the big board on Wall Street. It is Coca-Cola, as Jim mentioned, celebrating its sponsorship of the World Cup. President and CFO John Murphy there at the NASDAQ in Times Square. It Stars celebrating the launch of its first wholly owned series, Fightland, with 50 Cent. At the SIBO in Chicago, it's Milliman, a consulting, actuarial, and risk management firm. Jim, as we're trying not to stray too far from 7,500.
No, and I think that, again, what'll happen is that all the big tech stocks are up a lot. I think people will come after them again. They'll say, listen, I want to get out. They could finish unchanged, or maybe some buyers at the end of the day. But that's the locomotive coming at you right now. You're on the train tracks. You're up. Locomotive's coming at you. You say, untie me. I'm really happy. And I don't want to be in that. I think that we've got a good week of earnings coming up. And there's going to be things that you like, that you want to see. But they'll tend not to be tech, because tech's too hard.
Yeah. Isn't the view of Intel, for example, pretty positive? Or
Okay, so Intel, I look forward to speaking to them on Thursday.
Yeah.
That Intel is one of my, I'm trying to build that position up. But a good example, like when I was giving my talk with Jeff Marks in the club, I was saying how we were buying Intel, and Intel dropped $3 during the conference call. And I'm just saying, you know what? I don't mind looking like a chump over a period of 3 weeks, but over a period of 3 hours, too hard. I just don't want. Now, I do think Intel's a buy. I think Intel's going to have a remarkable quarter. I think that there are a lot of people who are shooting against various hedge fund managers, trying to prove to them, you know what, guys, you're a little young, you don't really get it. But I think that Intel's been caught up in that morass. But I do think that everything that Lip-Bu Tin has been doing, including the foundry, the packaging, the CPUs, is going to go well. And I just think that of these ones that have declined, that's the one I want to buy. But I want people to understand, up 3, there's someone out there right now who's saying, I can't believe, oh lordy, I got back to even, let me get the heck out of this. And that's where we are.
That said, Jim, there's pretty broad strength in chips today, whether that's SanDisk. I think Lumentum got a call on the sell side today.
And Seagate had a very good move on Friday, and it's entirely possible for them to have a good day. But I don't want to come in, when we brought in SK Hynix, we brought in a monster. It's almost as if we let Pandora's box open, and when I saw SK Hynix up 9, I said, well, it'll be a good day. But I'm like, what is that about? That's not what I call
That's
it.
interesting. I thought about you because remember the days where we used to say that once SpaceX comes, it'll be a clearing event?
Well, who knew that suddenly that Korea would realize it's a clearing event? I know that Samsung denied that they want to do a deal.
You mean a US ADR list?
Yeah. Oh, okay. Now I know they won't do. Are you kidding? How do I know any one of these hyperscalers doesn't run out of money? My Travel Trust owns Amazon. I think the world of Amazon. If Amazon right now said, listen, we've got to do a gigantic equity offering, and it's going to come at 220, I'd say, oh, well, that was just brilliant that I stuck around for that. Now, I'm not getting on Amazon. My basis is low. I really believe in Jassy when he says they're going to make money next year. But if they don't make money next year, then what am I doing?
Now you're getting to the classic Apple second strike advantage. Let others spend all the money. We'll come in later and take some tolls. I mean, 325 the other day, all-time high.
I'm so glad you brought up Apple, because I think I read all these trade publications now because I have to try to be up on it, not try to be up on as many different things. They all hate Apple. Why? Because Apple didn't spend, it never did data centers. It never, I mean, I talk to Siri all the time. Siri's not objectionable. Alexa was just a pain in the ass to me this weekend. Got it all wrong. Yeah. And I think, like, thinks Wagner's Beethoven. Hey, I got a news flash for you. Those two aren't really that
She still hasn't figured that out after all these years.
No, I mean, like, Ella Fitzgerald, I want the one without the Louis Armstrong. Oh, no, you got Louis Armstrong, too. But I look at Apple and I say, you know what? It better be lucky than good.
Yeah.
I mean, it turns out that Alphabet's got a darn good product, and you're getting it for free, and I like that. What's the matter with that? I mean, I think like Eddie Q should call and say, listen, I want to cure the, let's do some clearing. We looked at it and we realized that Google would pay us, so let's just do it that way, because we have 2.5 billion installed and we have 1.6 billion actual users, so let them come to us. I'm on Gemini all the time, just, I mean, I have to tell you, people say, why are you on these constantly? And the reason is, I come out here, I check 4 of them, because you can't just check one of them, because a lot of times they're apologetic and they're suck-ups. Yeah. But I do feel like if I use them, I get, a little bit
smarter.
Game.
A little bit smarter. Yeah. There is some chatter on the tape this morning about Apple, and that it will be Tim Cook's final earnings call.
Yeah, what I understand. And I also think that I want to find out about who got the letters from OpenAI.
Former employees.
That does not seem like the normal legal case. I think that case is going to have big ramifications. Yeah, because they're in fight mode, and they don't get in fight mode under Tim Cook.
We had Brett Taylor on last hour on Squawk, and then he was on last week.
Yeah, I think I'll try to get him for tonight. What's he doing? I mean, what could he be doing? He's probably grabbing a pizza at Domino's. I'm over here. Yeah. He's grabbing, maybe taking it out, maybe a Wingstop. Because, and then, I might have him on again tomorrow. Because, like, Brett's available. He's very available. Then maybe he went to the World Cup. He probably could have sat there and gotten during that period that Argentina was doing all that shooting.
But so your eyes are on OpenAI, how they respond to all of this, what happens to their aspirations in hardware.
I just think that when you look at what the Apple complaint makes it does. I mean, I'm not saying it's a criminal operation, but Apple complaint does say, listen, we're not going to let you do this. And we're, and a judge is going to hold you up.
Yeah.
They have to do the deal. Talk about it. They have to. I mean, when it's shocking, this is another one. Well, you know what? It looks like we're going to accelerate the IPO, and they'll do it in the dead of summer. I mean, you don't do IPOs right now. You just don't. Yeah. But everybody needs money, and every one of these companies, with the exception of Apple, is suspect.
Yeah. Well, we are going to get Jersey Mike's JMKE pricing 21 to 25. I think the Blackstone and those guys will look to seek to raise about $1 billion or so.
They all want to raise some money. I don't think this is Jersey Mike's best time.
Yeah.
But I do think they have a differentiated product, and I think that people want. That's what people want. They want a good sub. I mean, they don't look. Everyone's a. What do you think the people right now? Do you think that Kimmy is saying, you know what? Let's do a gyro. Or is it a gyro? I don't know. Let's do a hoagie. They can do it from Philadelphia. Why don't we just launch hoagies? They're not going to launch hoagies. And by the way, they're not coming after Kraft Heinz either. What you want to do is you want to find something that they're not interested in.
Yes. Yeah, you're getting very worried. Plus the level of sophistication it takes to understand, like the Melius note today, goes deep into some terms. I'm like, okay, yeah.
I need footnotes.
Yeah.
I mean, and here's what really happens if you're a portfolio manager. You don't say, wow, let me study this. Oh, buddy, Jevons creates opportunity. You just say, look, Jevons, Javon, no, I mean, I want tomatoes. I want oil. I'll take a sweet and hot pepper.
Yeah.
I mean, look, that's what they really. I mean, people think, oh, what is Kramer talking about? Every one of I know every one of those kind. I know the person re-turned on for years. Lumentum, I had them on. I've had every one of these companies on. Caterpillar on, and I say to myself, God, they're tough right now.
Yeah.
So why don't you let me get into FedEx ahead because JB Hunt was good. Honestly, that's how a portfolio manager works. They just say, look, I saw the way the banks acted, and I think they might be a better place than Western Digital.
Yeah, well, I mean, the Blackstone, JPM, Goldman, that's been the best reaction to earnings so far.
Oh my God, Goldman. I mean, think about it. What did everybody say about Goldman? It is so darn high, it can't deliver. And what did it do? It completely delivered. So I don't have to worry about this Jevon pal of mine here with the creates opportunity. Javon. All I have to do is say, there's this guy Solomon. And Solomon's competitive, and the Chinese are not there. This is how people think.
Yeah.
They see Coca-Cola, and they say, yeah, you know what? I did see them advertised a lot in that game that I watched for 7 hours of my life. Can I have that back? And I did see Coca-Cola, and that might be good. At one point, you know what? I switched to the cartoon version of it. They had a little cartoon of it. And I said, well, you know what? This is a little more interesting. I had the yellow card on top of a guy's head. I mean, I was just trying so hard to make it interesting. But I just think that I'm looking for companies where I'm not going to come in and say, oh my, it looks like that she is targeting that.
Yes. On that point, Jim, Hog gets an upgrade today over at Loop, which you don't see that often.
No,
this name, you're looking at the highest for Hog going back to the November.
That is going to work, okay? Hog will work. And it'll work because everybody else has got, well, the Japanese are still in that industry.
Yeah.
But the Japanese, no one seems to know what they're up to. I just want to be in a place where I am not surprised, where I come in and maybe it's up a quarter, maybe it's up a half, because something that's up 30 can go down 40 faster than you'd ever believe.
Yeah, we're seeing that happen. The other one, Jim, I'm thinking of your Valero today, 311.
Oh, well,
this was a $99 name in July of last year.
There are 3 refiners. That's who makes all the money. They make it on the spread. This government is not going to call for investigation. Thank God, because the only reason why these guys make so money is because you can't build a refinery in this country because they're so dirty. It's kind of like what the governor of New York when she decided, we don't want data centers.
Well, it's a 1-year moratorium. Yes.
Oh, well, that's great. Remember President Biden with his 1-year moratorium that killed every single one of the plants that was about to be built in Louisiana and Texas for LNG.
You were never a fan of that. Again, pause in approvals.
We're the king.
For new permits.
It's good to be the king.
Yes. This is Hochul, by the way, over the weekend talking about the moratorium on data centers. Take a listen.
It was just a few months ago you said data centers were a local decision for municipalities. What changed for you?
I would say what changed was talking to the localities and realizing they don't have the negotiating ability or have the clout to be able to demand that their communities benefit from this in a more dramatic way. They also don't have the ability to insist that these companies bring their own power or pay more for the grid. They don't have an ability to say no to tax breaks. And so I decided that I could do much more, especially in this basically flooding the zone is what's happening now.
New York does have about 130 data centers already.
Right. Well, look, what the governor presumes is that we have a series of stooges who run local governments. There are every plant that has been configured in Texas, in Louisiana. They have rules. We know how Virginia did it poorly. We know how others do it well. I remember when Nucor opens a steel mill, they go down and they explain them, and you have to make a deal with them. And the counties that they're working with, the cities they're with, you'd think they'd have no wherewithal, but boy, they're good. Harrisburg, when it had Apple expand, do you really think that the mayor of Harrisburg has the really knows that?
I mean, some of these towns that are getting targeted for sites are small towns, Jim. You're going to put them up against the lawyers at Oracle?
Well, you just say, listen, if you want to come in here, we don't want to pay any taxes. You pay them for us. I mean, there's a playbook, and everybody knows the playbook. And the playbook has been established. And look, I think to put a moratorium, this reminds me so much of the fracking ban in the southern tier, where there's so much natural gas and taxes are so high, and you had all these people going to Florida for 6. What is that? I promise you, I'll never go to Florida for 6 months because I do not need the money that bad. I mean, what is that? I actually like New York. I mean, I just feel like that this is the kind of thing that makes it so there were opportunities. Put a task force together in New York.
Yeah.
I mean, staff them with some young, aggressive people, and every time they want to build a site, go up there and say, okay, listen, here's the deal. We don't pay for our schools anymore. We don't pay for our powers anymore. Welcome aboard. And if you don't like that, then, show me. Go to Missouri.
You've come a long way from your Greenpeace days. I will say that.
Well, Greenpeace was a time. Yeah. Well, look, I was a Trotskyite. I was Greenpeace. Yes. I mean, I did have what I'd say diversion views.
Yes.
Diversion views. There was a celebration of a magazine I created at the Harvard Crimson. It was called "What Is to Be Done." They don't even know what it is, but that was Lenin's book, and man, he had game. But not John, the other guy. I looked just like him at that point.
But also this morning you did grouse on social about the Journal's coverage of data centers. But the Washington Post over the weekend says it's one of the few things that's actually uniting the country.
Look, and I went to a terrific book signing for Joanne Stern in Jersey, and the only thing that people seem to agree on is that these are bad. But that said, you go to Texas, the only thing they seem to agree on is things are good. So look, let's just get a little smarter. I mean, Louisiana, I do think that you have Dina Powell McCormick, yes, the wife of Senator McCormick. She's number 2 at Meta, and she's very aware of these things. And you just bring her in, you say, look, we want a lot of money, and you have a lot of money. There's never going to be an opportunity again for these cities to be able to say, we want the best schools in the country.
Yeah.
Now, when you're in Harrodsburg, where Apple made all the glass, what they did was say, okay, listen, we want to be good citizens. We promise we're going to be good citizens. And what's the matter? Why can't you make a deal with them? I were a local person who in any of these towns, I would say, does my governor really think I'm a complete bozo? Because that's too bad, because I want that money. And I have to tell you, there are a lot of people who would say, why did you take that money away? What the hell is Honeywell Aerospace? Jeez, I own that one.
Oh,
what
yeah.
the hell
I think
is
that was a downgrade today, at least a number 2.
Go downgrade it. I had a guy over the weekend was saying Vimal Kapoor is doing pretty good. The Solstice.
I'll tell you what's interesting is the movie business, Jim. The Odyssey, $124 million. That's going to be Nolan's biggest open. AMC, Adam Aaron on Squawk this morning, biggest opening for an R-rated film since 24. That said, Jim, Comcast down. Six Flags last couple days have been remarkably weak.
Congratulations to Mike Cavanaugh with Universal.
Oh yeah, it's huge for Universal.
And Kavanaugh, you couldn't do better than Kavanaugh. I mean, I don't think people know Kavanaugh. He's like he's like a really nice, good guy.
There's AMC, of course. This was a much higher price couple of years ago.
Yeah, it's a good percentage gain there. Look, remember, Adam Aaron did sell 2 million shares. He told you ahead that he was going to do it. He said it was for your family. And if you decide to bet against Aaron when he made that sale, I mean, I don't even know what to say to you. I just don't know what to say to you. He gave you a great opportunity. Candidly, I did think that the Farnsboro, that great festival over there.
The air show.
Yeah, I thought that would mean a little more for these stocks. GE Aerospace just took a couple of bucks.
Yes.
Boeing, the weaker rating. Now, this is highly unusual behavior.
It is a little weird. Usually we get a lot of orders. I think Riyadh Air is getting some Boeings, but there's been a lot of Airbus orders last couple days.
Yeah, look, I'm a big fan of Kelly Ortberg. He's got to get the number. It's a CEO of Boeing. Got to get the number up. It's a cash flow story, not an order story, because they have a lot of orders.
Yeah.
Obviously, Boeing was much worse.
I'm here.
All I can say was just much worse.
Yeah.
And Ortberg is a tough
How the
guy,
hell did I
a
keep
good guy,
Boeing chart up here like that? Idiot.
But it is.
Boeing down. Ooh, watch Boeing, man. What the hell's going on
I
here?
say proverbial because those who
Okay.
want to build new battleships, go speak to Bing West, who has a great book called Cat 5, and it'll tell you that those are primo targets.
Yes. Hey,
First supports this big engulfing candle.
Lockheed.
Yeah, thank you. And
Yes.
we went to
First supports the engulfing candle, the body of the engulfing candle. Watch. 3 black crows. Anything bad coming in besides the crappy war? Oh, I need to. Here, I'll get your platform up. This is more important. It's up. SPY. We got 3 black crows with a spinning top. 20th. My name's Washboardjim. The 748s. God, look at the calls. 54,000 already. 116, 114. Prepare ye in the name of the Lord. We got a yin yang on the SPY. The SPX has to hit the 63. I mean /ES. Should I do SPY or SPX? Come on, get your crap together. Okay, calm down, relax. We got the VWAP. VWAP 112. That's the 748s at 112. VWAP. Strike 748 at 112. Now I'm just scalping this thing. I don't know if it's correct or not. Definitely that engulfing candle. And I took it because of the VWAP. Still a little risky. We could come down and hit the 200 today easily. Easily. Oh, shit. Okay. 106. Could have got out of that. Now we're at the 63 and the 50. Okay. We can easily hit the 200. $0.98, 99. Now I got 10. There it is right there. Has to hold here. Now I got 20. We're at the 200. So this got to work. $112.99 and 84. Turn on the air. 79 degrees. Oh shit, this ain't working. Okay. Wow. So on the 5 minute, we're at support. Oh boy, come on. What's that? Boeing's at support, 209.61. I don't know if it's good or not, but it's definitely hit my support. I just need a good rebound now. Boeing. AMD, Apple's pulled back. Apple's pulled back. Tesla, 378. We still got another 16 bucks, or we could say 6 and check 372 was the last support. Well, damn it, Jim, you fucked up the first trade. I knew we were bearish. We'll see what it says here on the 5 minute. We got 3 black crows on the 5 minute. I can't hardly listen to these TV shows anymore. They're so biased. At least Squawk is. Get comfortable here. Where's my wall fucking phone? Okay, it's comfortable. Get my shoes. Okay. Yeah. It's not going very well here. I'm gonna have to bring this down big time. I got an average of 99.
Real time. Watch free.
Apple 328. We got an alert triggered. See when the alerts start coming in. Tesla 375.86. Boeing bouncing off that reversal on the 5-minute. Inverted hammer. Tesla triggered my support. Where's the alert? Meta business. Oh yeah. Not secured yet. Okay, SPX snake going sideways with a support level of about 4 minutes, 5. And that's SPX. We've got a triple bottom on AMD. NVIDIA's at the 200, bouncing off the 200. Apple new low. And Meta is at support. At least it's at a support. And I'm at 62 on 3 on my SPYs. IWM 294.22. I'll put that on the 5-minute. So it's at the 200 on the 5-minute. There it is, 294.33. Come on, you idiot. SPX is holding back to support. Snake breakout pullback. SPX. Snake breakout pullback. Double bottom. Could be a triple if I really wanted to get real technical about it. But I'm going to call it a double. Okay, good enough. I'm down. Not a good start. I figured to be very careful. I pulled a debt this morning. I mean, less this weekend. But I jumped the gun. Yeah, I think I'm going to stop out and regroup if this doesn't hold here. Come on, baby. George. This got a symmetrical flag on it, Meta. Snake breakout into a symmetrical flag on the bottom to support that I already had marked. We got a triple bottom here on NVIDIA off the 200. Everything's kind of at a support right now, a major support. So, we'll see. Three black crows are still holding on the 5 minute. Barely. Not good. Okay. I have less stress in my life today and traded better when I had more stress last week. Magnificent 7, Apple's down 530, Meta's down 485, Google's up 12. Talked about Google this weekend. Come on. I'm hotter than heck in here. And Google had a nice breakout. Alibaba, oh, Baba had good news. That AI CrowdStrike is up, building a symmetrical flag. PLTR is at the 63. We got a double bottom breakout on a Tesla. And we got a triple quad bottom on CRM. Earnings. We've got Apple coming up on earnings. Tesla. Microsoft. AMC had earnings and they were excellent. Still in debt. The guy that runs the company is a nut. just by listening to him this morning. I mean, he was really pumping it. Okay. Yeah. It's the worst trade of my year so far. We're going to come on down to IWM might see 293.53. SPX can see the 200. I got IWM at 293.53. Next. QQQ is close to support. 3 black crows, spinning top failed. Now we got the 100. The 200 right here. I'm the worst trader in the world. Oh, I got in a big old shouting match yesterday with some idiot. He probably jinxed me. Make it a habit to look at the VIX before you buy calls or puts. Yeah, make a habit to look at the /ES. But yeah, I really never use the VIX that much. I might start if I can figure out how to use it. We're definitely at support levels. Now, Apple's still, and we had the reversal on Meta. Meta just hit, I called Meta out. Meta. Should have took that frickin' trade. We're hitting some supports. We got a triple bottom on AMD. Meta just hit my support, resistance to break. Oil. Well, we're definitely at a war right now. It's a shame. You know, I'm not a war guy. But we got a nice support on AMD right here. If it breaks the 21, then we got a triple top. I better give this to Vegas. We should admit Vegas and I still trade together. We just don't trade in the same room. We'd fight all the time. Or I'd fight with, I don't know, hit my... I'm the worst trader of the year. Okay, now we definitely, IWM really looks sexy right here, man, I'm telling you. Okay. CrowdStrike coming down to support at the 200. And that is 203.24. CrowdStrike CRWD at the 200. 203.24. SAP. SAP, huh? Snap is up 2 cents. Blah. GoPro. Man, I had a lot of dreams on GoPro when that IPO went out. I mean, that stock ran and then just tanked. QQQ's coming up, man. We got some supports coming up. Triggered. This is it. Triggered. Triggered. Jimmy lost some money today. He's not very happy. I'm gonna make it back. It's very embarrassing. My reputation is ruined. Got a lot of supports right here. Randy, pay attention. No, I got out. I can't take it anymore. Now we're at frickin' support. Keep close eye out. Very nice. Everything's hitting that solid support now. Patience did not work for me today. 746s. Come on, baby. Break the 21. This is important. SPY, 90 cents. Now we're at 104, and then SPX, I didn't jump in. We're breaking the 21 on the SPY. Let's go. Nice. I need about 40 cents. I don't think I'll get that. No way. I'll get out. I'm going to sell some here. I don't trust nothing anymore. There's this real nice looking lady at the IRS. I've known her for about 15 years. And I messaged her this weekend. I said, elevator lights are working now. We just need to get it inspected. And she had 2 phones, so I didn't get no response. When I messaged her, I said, I hope this is appropriate, but I'm just letting you know that the elevator lights are fixed. Because I didn't know if I should be texting an employee of a business. And she didn't answer. So I thought, damn, man, I got her pissed off at me now. And I've known this lady for 18 years, 15 years. So I went in there today. I said, are you mad? We got the elevator fixed. You didn't respond to my message. Oh, I didn't get it. I said, I sent it to you. You sent me a message the other day, so I sent one back. We're at 110, damn it. And she had a business phone. So the message went to her business phone. And I worried all weekend. I said, did I make a huge mistake? First scale out is 108. Because people, you don't know what to think of people anymore. If you go over the line, or I ain't out at 90, I'm out at 1 8. Now it's at 115, damn it. I could have. Okay. Should have took the IWM. I had it too. Also, I had the QQQ. Learned it all of them. I didn't take them. I mean, look at that. Every one of these nailed support. God, Jimmy. Fucking idiot. $120. $120, man, I'm almost back to even. I got 600. $124. Randy, did you take him? Shit. I'm just not got it together yet. I think I need to take a coffee break. Mentally. $120. I was thinking the same thing. I think it's a tack hammer. I was looking at SNXX this morning. I was kind of liking it, but this early morning, there were some buys coming in. What'd I call that out at? You remember? Oh, we're up from where I thought it was. Yeah, I liked it this morning, but it definitely pulled back. That's a beautiful call on SPX. SPY. Damn, man. I'm so pissed off. I hate starting out a week like that. Man, that's the way it is. I'm not down as much now, but I still got some more to go. So I'm going to go make my coffee, but I'm not going to smoke a bowl. I've had my yearly buzz, so okay, we're retesting. IWM's retesting support. IWM is retesting support. IWM is retesting support. IWM retesting support. Nancy, get out of the damn John and make that coffee. The hell? What's your ex-husband doing out getting drunk and hitting and running, driving all? That's a 10-year sentence, bitch. We know you're drunks. Like you're in that toilet dry heaving every single day. Yeah, shut up, Jim. Shut up. We got a inverse head and shoulders, snake, breakout, pullback on the /ES. It's kind of a cup and handle, inverse head and shoulders. Has to break the 63. Has to break the 63 /ES. And let me see about this VIX. Where it's, someone's going to have to teach me how to trade the VIX. VIX. We're at the 200 on the VIX. What's the best time frame to use? The 5 minute, we're at the 200. The 1 minute, we're bullish, we're above the 200. Okay. Yeah. Where in the shit? Oh. Intel. Apple reversed a little bit. Marvell's up 866. And AVGO is up. Okay, what time frame is this? 4 hour. Let me look at, I got to look at something here. I think I should have paid attention to my trend spider. Oh, dang, what's the frickin' problem here? Oh, wow. Wow, we got a pretty good drop. I had a support channel of 735 to 738, and that failed. Yeah. Well, how? That don't make no damn sense. What the heck? That's Apple, you idiot. SpaceX. I'm going to set alert here on the SPX off the 200. Just be a little bit more patient with it. I'm trying too hard right now, so I'm going to go in the kitchen and make some coffee. I need to have a little bit more fun. And I'm going to set a page over here. Does the VIX work with the VWAP? So I'm thinking 1928 is resistance on the VIX. And there it goes. What did I say, 19? How did I say 19? 18. 36. It's a descending flag. So if the VIX goes down, the stocks go up. Am I right? Nancy Pelosi. You wouldn't believe how much toilet paper that bitch uses. Jeez. I go through a roll a week, she'll use a 6-pack. And then drink a 6-pack on the shitter.
You can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all.
Be careful there, ruffled stiltskin. When I have a bad trade, I like to kick back a little bit and wait for the best setup. Through experience. I'm only down $200 right now, so I'm gonna go make some coffee and I'll be right back.
Everybody around me had money. I didn't
I don't.
That I wasn't.
God, girl. I don't want to make the same mistakes you made. If you can do it, I don't want to do it.
Finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No, I can't, and I won't.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We're back on Money Trade Live. Taking a look at the one-day chart for Domino's Pizza. Pizza, it reported second quarter earnings earlier this morning. It's up right now, 3%, as you can see here. It's come off the highs, though. It's been interesting, actually. It's been under pressure for most of the year, alongside some of the other pizza retailers as well. So let's go inside out of Domino's and today's earnings report. Joining us now is Greg Portell, who's a lead partner, Global Markets over at Carney. Greg, nice of you to join us. Good morning to you. What did you make of the print?
Excuse me?
What did you make of the earnings print from Domino's this morning?
I think the story was very positive. I mean, obviously they had a few misses on key metrics, but the fact that they were able to really grow and strengthen their supply chain capabilities and the servicing they're doing there, as well as starting to bring in new consumers into the franchise, both of those are really strong components when you start to see stock gains and performance improve.
I was going to say, this one's been under pressure. I mean, looking at sort of year-to-date, down in double digits over the course of the year, a similar old story. But, I mean, it's not alone. You look at Papa John's, for instance. I mean, it's got sort of suffering double-digit declines as well. Yum Brands, a little bit more diversified in its portfolio, but also under some pressure. I mean, what's going on here, sort of broadly, do you think?
I can do it. Well, we have the Carney Consumer Institute that looks at consumer stress. And consumer stress is at its highest point in history. So you have a consumer that is under pressure financially, they're under pressure emotionally, and that's going to have an outsized impact on discretionary categories. And dining
internet,
is
slow
obviously one of
internet
those
deal.
categories. And you combine that with some of the GLP-1 pressures, and just the consumption overall in the sector is going to go down. So when you look at a company like Domino's that's figuring out how to navigate that now, you know, you're hopeful that they've turned the corner and you're going to
You
start
got
to see
Allie,
build.
shut up. So tomorrow we got Halliburton morning, Allie, ALLY. That financed my car through them. We got GM and 3M and MSCI. I haven't looked at MSCI in a while. Man, I really started off bad today. Now, see, we broke support on the IWM. Now, SPX, here we go. 3 black crows on the 1 minute off the 200. SPX. Come on, let's make some fast couple $100 here. The 450s or the 7490s. 74. Unable to connect. Yeah, I'm having internet connection. Fuck. Having internet issues. You know, this is when you don't, this is where you really don't want to be trading. I don't want to be what to do. Okay. So the VIX is at resistance here, 1832. Head and shoulders. Right shoulder touched twice off a wick. I'll go get my coffee and I'll be right back. We just broke out. SPY double bottom. SPY double bottom, SPX, $5, $5.10, $5, the 74.90s. Let's see here. There's one, come on, risky. $4.90, $4.80. Come on. The 74.90s at $5. Come on, bitch. Mine came up and on. Fuck. I'm gonna give up. Bitch. Come on. Ugh. I don't know. Just like that. I'm starting to breathe hard. I'm getting flashbacks from 2018. Say after my next experiment. Oh man, there's $110 down. Well, support on the AMD. We got resistance on Meta, double bottom on Apple, double bottom on Nvidia, in the SPX at $5. Thinking about the dip. We got a wedge on QQQ. SPX failed support. Go to the 5-minute. Yeah, that don't look good on SPX at all. Okay. Well, it's not my best day. Down $100. Yeah, they got a head. Oh man, that thing go way down more. We got it. Oh, we got that. Let me see what that brings us to. Yeah. Where would I see that? Right here. We dropped just above 74.50, 652 if, well, that didn't hold. And that's your second support. This is your first support, second support, and then third. Somewhere in here. But we failed the first one, and we're coming to the second. Right there is perfect. Right on it. Right there. See where the bodies are? See where that body is right there? That's called a head and shoulders. You got the wick and the body, and that's a head, and that's the right shoulder and your left shoulder. That's a head and shoulders, and that's an inverse head and shoulders. That still might come out of the screen. Who knows? That's a pretty good setup right there. That's on the 5 minute. I'm down 50 now. I should have bought a dip, damn it. Now I'm back to almost even. Now we're going. We're even. Now I'm up. Time to hit the sardine patty. It looks like a poop, don't it? Oh, look at that knife. I mean, you can't take any much chances today. You just sit on the frickin' sidelines. I made a whopping $40 out of that last trade when it hit the 50. Now we're at a double bottom. I'd love to take this on a good day. We got a falling wedge. I mean, this thing is sexy. Jesus. Blech. Fallen wedge snake. I think we're going to get a little breakout. Randy. Come on, baby. Let's go. Snake, fallen wedge. Yippers. $7, yeah. God, that's beautiful, man. That's the way you do it. Today was a wait and see day. I mean, that was a beautiful trade right there. Falling wedge, double bottom boom. Now I'm green. I'm green, bug. Yep, that's why I like sardines. That's why I like my sardines. Chugged with a cup of coffee and a nice one hit in the morning. Okay. Nice. I don't know what to say. That first trade sucked. Now I'm killing it. Oh, SPX, man, those are nice. So you got your fallen wedge, double bottom retest, breakout pullback, boom. They're at 620. I'm going to pull back on the VIX. So it created a head and shoulders. I don't know if you can chart these with patterns or not. We're going to find out. There you got the big engulfing candle. That's on the 5. In 1 minute, we're off the 200. We broke down below the 200. And we got a gap right there. I don't know how I've got to learn how to read these chart. We've got triple bottom. So if it breaks above the triple bottom, that means we're going to be bearish. Quad bottom, actually. Pretty close. Then you got a gap on the 1 minute. Let's see what the 10 minute. 10 minute, we bounced off the 200 for double bottom. $10-minute. 15-minute. So that's pretty solid support right there. And then that's your head and shoulders. Right there. Four-headed snake. Do I have a four-headed snake? I keep thinking I do. Or is it a three-headed, two-headed snake? We're at 650.
4Q, early 4Q of last year, and now ever so slightly
And the
beginning
15-minute.
to lose their 40-week moving average. It's Monday, we're looking at weekly charts. 40-week moving average roughly lines up with a 200-day moving average, and if you look at that 40-week moving average, it's beginning to shift from rising
40-day moving average?
So potential change of trend there. The key takeaway is if you have bonds in your portfolio because you think they're protecting your
200.
equity exposure, they might not be doing what you think they're there to do.
All right, and Kevin, as we look at this, are you also seeing the potential for a change in the trend coming our way?
No, shut up.
Well, it's certainly possible. When we look at it on the daily chart, it's going to appear that we are much closer to that shift than it might appear otherwise. Interestingly, we're just barely above what I'm pegging as short-term support on the chart from a technical perspective, at least 97.70, under which we are very likely to see some macro headwinds on the broader U.S. equities. And of course, if you're bullish in the broader U.S. equities, you want to see this AGG get itself back in gear. Something above 98.5 would be a good starting spot. But yeah, this is not ideal as it relates to broad equities at this moment. And if we shift it over in a second, look at a longer term view, as Dan was suggesting, we're basically sitting on a 200-week moving average at this level as well. And the
Plus, that's an ascending triangle.
Here was broken, so we've been below that now for about the last
What is
2
this?
months.
AGG.
We need to establish 97.70 as support if we're going to have any opportunity for this to not hamper U.S. equities going forward, is the way that I would look at this.
Well, the way I would look at it.
97.70 needs to be our support right now. We're at 98.03.
Oh, shut up, Marley. You can't trade. AGG. Oh God, Jimmy, we are now at 7:30. So I've never heard of AGG. iShare Core USA Graded Bond Fund, ETF. Shit, I wouldn't trade an ETF right now. What the hell's wrong with you? Where's he seeing the 200 SM? He's fucking nuts. Okay, it's on the weekly. So I'm going to set an alert above the 200 at 98.23. And you set mark at or above. And I'm going to say resistance to break. We're at 780, 90 on my calls. 810. $770. Okay, you ready for this? I worked on this all week. Look into my eyes. YouTubers, my name is Gay Bear. I'm woke. I've had a hard time lately. Miss Trader named Washboardjim sneaks up behind me, shoves a corn cob up my ass. And I think that I'm having gay tendencies now. We're at $8. I start breathing real hard when I'm in a good trade. And we broke resistance. And we broke resistance. The slash ES is now approaching the 200 SMA. When I talk about boom, do you know who I'm referring to? Old MacDonald had a farm. Me-I-me-I-O. We got a double top right here. Me-I-me-I-O. With a crackhead there and a crackhead here. Everywhere a crackhead, old Jim Woodward had a farm. There it is, boom. Yeah, I made it back. I'm happy now. Not a bad day after the first fuck up.
Is taking a little bit of money off the table in the last few weeks for August. Did they?
Have to take a little bit of money off the table. Have to take a little bit of money off the table. You know, you don't want to get stuck with a loss.
Trade that we've seen quite a lot over the periods of where we've
Trade was seen.
Has been,
Trade was
AI
trade
beating earnings estimates,
trade
but then of
trade
course selling
was
off
seen.
anyway. So the
New high.
sustainability of this epic bull run that we've seen over the last couple of years, I think will maybe.
Here now, what's going on? Okay. The epic bull run we've had in the last couple of years is just uncountable. We were already up 40% and quite didn't know how to take care of the deal. What's the matter you? I had some clam chowder this morning, so I'm kind of crabby. We have the /ES getting ready to break the 200 SMA. Everything's at resistance. VICTORY. Retail traders is our battle cry. As I go into the kitchen and find something to eat, I might make out with Nancy on the toilet seat. No, I'm not high. I'm just showing my artistic values right now. That will help a lot. When I was at the racetrack and a dog took a big poop, I put my money on that dog to win. Your whole life will change now after you took a big shit. I think both of them are just as good when you're with Nancy. Nancy will make fun out of everything. I remember one time we both crawled under the bed, and I said, Nancy, you can't get on top. Well, his AGG is at support with a double bottom, and we just broke below it. I wouldn't trade it. Unless he, nah, I don't do that. Nope. Not the washy. So I'm going to go and prepare, ooh, ACHR up 14%. Penny stock. Intel, I called out this week in my video. Nice little breakout, pulled back, double bottom, boom. Netflix is down 110. We got AVGO, Meta, STX. Oh, what's a SanDisk? SanDisk was at SNXX, right? Yeah, I got to take a little break here. Triple bottom. That was Friday. And we bounced up. I'd probably took that trade this morning. It'd be nice if it gets under $1,000, comes back to reality. And what MU? You got to look at these old runners. You could find a good opportunity. Yeah, we'll let this go on here, and I'll be right back.
Alibaba putting out its updated Quen. I think it's the 3.8 Max, and we got last week we got the Kimi K3 from Moonshot AI. How does that complicate the situation here, Samuel? Because there's a lot of discussion about the pricing of these. They're claiming, I mean, Alibaba's claiming at least it's second only to Fable 5. I looked at the test results on the K3, and it says it's only headed by Fable 5 and the ChatGPT latest. So how does that change the process for them as well here, knowing that we've got these much lower priced models potentially really coming up on the heels with these companies also planning IPOs?
It's a great question, because I think that's the debate that's happened throughout the corporate world this year, was what's the ROI I'm getting on my AI spend? Now, if I can get a model that is sort of just as good, or at least good enough compared to the premium model providers like OpenAI and Anthropic, but it's costing me almost nothing in comparison, then that's obviously the model that lots of people are going to go with. You're also seeing a situation now where people are seeing, needing at least more human intervention in some of these processes. We're not seeing AI yet go to the level where it's becoming a real decision maker. It's still very much a process tool-driven technology coming through. So, what I think that was a wonderful story, wasn't it, a few months ago around Uber and sort of what it's seeing with the ROI and scaling back its spend because of the token maxing issue. That's going to continue to be a case. AI is getting more expensive from the premium model providers. I know Sam Altman has talked about metering. That's something that a lot of corporates won't want to see, and if they can get a cheaper alternative for something that's providing them similar results, then I think that's something they're going to definitely pursue. So this is a big threat to these businesses, that where you have more open source models coming, cheaper Chinese models, but we're talking, interesting enough, isn't there, to talk about SpaceX doing an open source model. So actually this is something that is going to continue to be a real threat that Anthropic and OpenAI need to look for, and when they're therefore modelling their IPOs, their total addressable markets, it's something investors will be looking at as well before investing in those stories.
It's such a fascinating time. We spend so much time talking about AI as the disruptor, but there is disruption in its own space that we have to narrow in on as well that affects the overall disruption. But as we look at this AI debate and the money being taken off the table, you said the sell in May, we forgot about it, and we kicked it down to the summer, and now we're sort of selling in July and going away potentially until September. If the money is leaving AI, where is it going, Samuel?
We're seeing a lot of flow coming into Europe, which is interesting, and particularly we're seeing it in some of these large European equity sell downs we see. There's a lot of demand coming in for big block trades at the moment in European exchanges. And I think that's interesting, right, because I think it is a true diversification play away from AI. That's really because Europe has a very, very, very limited exposure to the sector in a way that perhaps the US obviously has been the great leader. But say, for example, if you were looking at diversity away from AI, you're looking at, say, bank stocks, for example. If we have an AI bubble burst moment, that could realistically affect the earnings of JP Morgan, Goldman Sachs, all these sort of major Wall Street banks whose pipeline is very dependent on the sector. So, maybe do you invest in a European bank where the client flow and the client importance of AI isn't as high? So that, I think, is something that we'll see more of. So we might see it go to different regions. We've seen a little bit of an uptick in the Dow versus the NASDAQ, and there has been a definite performance benefit to the Dow Jones versus the NASDAQ 100. But it's interesting that the stock 600 has actually outperformed both those indices over the course of this sort of AI sell-down wave. Obviously, it's hard to tell at the top-level indices who's moving money where, but it does show you a little bit of the trend that we're seeing and perhaps the general direction of travel, that people might be moving a little bit of money out of the big US tech stocks and into other regions where there's less exposure.
And so as we look at that with this broader diversification play, we've got this rotational backdrop that we keep seeing. We've got some cash on the sidelines here. If you're deploying new money today, Samuel, are you seeing an opportunity to buy the dip in AI here, or are you looking at some of those more favored rotational plays, healthcare, financials, any of those, or European stocks for your diversification?
I think, Marley, the problem is with you trying to buy the dip in AI, right? And it's a little bit like we were talking about with SpaceX. What's the true value? Where is the dip? Where is it sort of fundamentally attractive to try to catch the knife? Now, if you're an investor who looks at balance sheets and looks at sort of, your discounted cash flows and all that kind of stuff, the traditional things that we were told to ignore when SpaceX came to market, it's very difficult to make a call that this is the right level to buy. Is this a general correction and all the valuation's been taking off, and actually this could be the start of a truly pronounced sell-off of these names? Therefore, you're 100% going for the more traditional defensive cyclical assets. Or if you do believe that this has been a bit overdone, do you then buy in? Nvidia is a wonderful example. It's a fantastic business with great revenues and everything else. But if we don't get the same level of AI projected growth that we thought we were going to get at the beginning of the year over the next 5 years, what does that do to Nvidia's equity story? Where is the valuation going? Where does the valuation have to fall to before that dip becomes fundamentally attractive? I think that's definitely something all investors who might be cycling out of AI must be considering at the moment. Is if this is a true market reset and we were wrong about this trade at the beginning in just the sort of how we were valuing it, then obviously maybe the stocks have a far further to fall. That might not be the case. There may be an element here, we get some good results, people buy back in, and off we go to the races again, at least for the next quarter. So it's a very difficult thing to call now. And but I think if you're wanting to take your money away from the trade, sitting in cyclicals, consumer, more defensive names might be the more sensible play at the moment.
All right, well, it will take us a bit before we hear from NVIDIA. We won't get them until the end of the summer, but we will hear from you. Talk to you. Thanks for joining us today. Samuel Kerr, Global Head of Equity Capital Markets over at Merger Market. Coming up next, we got the
Hey, Marley, you know, your idea about wanting to explain everything about a company just ain't going to work. We need charts. I don't care about the fundamentals. Well, I do, but I don't. Nice reversal on Meta. It's earnings on the 20th. We got AMC, Intel, Nikola, AAL, Tesla, Google, Now, IBM, and MSCI. My favorite one out of all these would be Google, and Intel, and Tesla. Tesla's at my support level here at 372. Tesla. Triple bottom. 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 Tesla. Tesla, triple bottom. My eyes have seen the coming of the Lord. Yes. George.
Example purposes, how would you structure a trade here?
Yeah, so what I noticed on the daily chart is the stock seems to be holding.
Here are a lot of dailies.
Average, and that's a good sign for a trend continuation. Earlier, about 30 minutes ago, the stock was trading around 264, so it's gone up a little bit since then. What I thought about doing is going into earnings, the implied volatility for the options that expire August 7th, because the stock is going to be reporting, or the company's going to be reporting on the 6th, is quite high. But essentially, playing trend continuation offset the volatility premium. I'm going to structure a bull call spread that is on the weekly expiration that expires August 7th. So it's an 18-day trade. So essentially, I'm going to buy a 262.50 call, which is slightly in the money, and I'm going to sell the 267.50 against it. So this is a $5 wide spread. Now, earlier today, you could have secured the purchase of this for about $2.50 a share, or $250 a contract. So essentially, it's a one-to-one return on risk trade. 265, which it's at right now, is break even. And then the max profit on this trade is 267.50 by expiration. But again, you don't have to hold it to expiration, because that'll expire the day after earnings. It's essentially a situation where if the trend continues, that profitability profile, or that max profit, will come close to the earnings event, assuming there is a trend continuation higher. Now, it only needs to move about 1% for the full lock or full profit to be achieved, which is another $2.50 from here.
All right, as we look at Datadog, we are at 265.02, trading up about 2.5% on the back of this note from Citizens. George, really appreciate you breaking down the latest today. But coming up next, it's time for our 360 round. We're going to take a closer look at what to watch with oil and the energy sector as the U.S. continues to carry out strikes on Iran. Trading 360, we'll be right back.
Trading powered by a
No, why ain't that coming up?
unlocking the power of Thinkorswim.
Oh, because that's got that.
Award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad.
Dad.
I have a question for you.
Sure.
When did Granddad first start investing?
You need a new marketer, man.
Schwab before there were branches in the area. He really started with nothing. He worked hard and...
I don't really like this commercial. I don't like any of them anymore. Okay. Relax, Jim. Don't hurt nobody.
We bring decades of trading experience to every segment.
With real-time insight across products
Oh,
and
my soup.
sectors,
Shit.
we deliver what active traders need.
And my
to stay
bread.
ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
I gotta go check my bread here.
Welcome back to Trading 360. I'm Marley King. The U.S. has now bombed Iran for 9 straight days in its campaign to reopen the Strait of Hormuz. Meanwhile, Iran's foreign ministry spokesman said that negotiations with the U.S. may be pursued based on quote-unquote national interests. For more on the impact on the energy market, let's bring in our panel today. Joining us, John Deal, Managing Director of the Post Oak Group, and Brian Peckman, Senior Portfolio Manager at Fortis Capital. Great to have you both on the show. John, let's start with you. I mean, we've gone from fears of escalating conflict or maintaining an escalation here to renewed hope for diplomacy in just a matter of hours. I'm looking at prices. We're looking at, Brent unchanged. Oil has given back all the gains we saw were pretty much unchanged across the board here. Are we simply reacting to headlines at this point?
Marley, I think that's a good question. To some degree, yes, I think that we are. But at the same time, there are key factors at play that I think are governing where prices are going. So to some degree, the market is pricing in risk, but every headline, I think, is creating a reaction within the pricing structure currently.
And Brian, as you look at this, I mean, with the gains erased so far on the session here, just on some commentary that they may resume talks, are investors potentially underestimating just how fragile the supply picture has become?
Nope.
Yeah, we certainly think that is the case. There was obviously, but before when we had the ceasefire, what was it, 20 days ago, at this point, we are already in a pretty fragile situation from a supply perspective as inventories continue to go lower. And China buying really had been reduced quite a bit, partly because they have a lot in their strategic petroleum reserve. But even their inventories are starting to lower. And our sense is that China is going to become the marginal buyer again as they actually look to need to improve their inventory situation as well.
And Brian, as we look at this, I mean, yes, there's a supply component here. We have concerns about the supply. We have concerns about the production. There's also the added conversation of Ukraine consistently attacking the Russian refineries and what that's doing to the setup. But we also have to talk specifically about the Strait, because the reopening of the Strait and then the logistical conversation here about whether things can move safely through the Strait is a part of the component here as well. Plus, we're hearing reports of threats on some of the passages through the Red Sea. How does that play into the picture here? Because this is becoming a much bigger global issue than just the one strait at this point.
Yeah, no doubt. And I don't think the Red Sea is getting enough attention.
She's just such. Jimmy mentioned Tesla. Let's break to 63. I'm gonna get in these suckers. I'm feeling really good about this right now for some reason. What is this? July 24th. July 24th. The 390, the $400 strike at 395. Now, don't take this with me if you want to take a risk. This is risky. And I took it before the breakout, which is, I don't think, a smart move. I got one contract at $4 for the 24th at $3.90. Sing, sing a song, sing out loud, sing out strong, sing of good things, not bad. Sing of happy, not sad. '63 EMA has to break today. No, probably. I bought it at Resistance, so I'm pulling a Yankee. I mean, a Rufflestiltskin here. I said scalping, it's a swing. Or scalp. Here, let's put slash swing. That's better. Nope, you're not that bad. You're a Yankee, though. But I'll put that beside it. You ever seen me in my outfit? I got a couple of them here. I'm gonna show you my ex-girlfriend. If I still have a picture of it. I got a couple pictures of me dressed up. Where are you, baby? Huh. We're at 4 1/4 right now. We broke out. $4.30. Ah, shit.
high one. If you're in the semis, you want to see budgets increase, right? So the MAX 7 goes down. So there's no one answer. But
by the Houthis. So yeah, it's going to be this markets, and that's probably going to continue. I think one of the things that you really have to look at as an investor is, will the U.S. put ground troops into play, because they've been building up more of their air attack and the personnel there in the Middle East. You're seeing attacks on some of the U.S. infrastructure bases in Bahrain and Kuwait and other areas also. But, you know, at what point will the U.S. say, hey, we need troops on the ground, if they do say that? I don't think the administration wants that, but we'll have to wait and see. And I think the market's going to be handcuffed, basically, by these geopolitical risks. But then, as we get into the thick of earnings this week, I think that's going to be maybe the big draw or the big driver of markets moving towards Wednesday through Friday.
We've been all over the place on oil prices because it's one headline saying this, you know, saying that there's progress on diplomacy, and then, of course, there's the exchanging of strikes. Kevin, what's your take?
I think what's going on right now between the U.S. and Iran is messy, and we're not really sure what's going on. There's a lot of rhetoric. What we do know is everything that's come out so far today, with the problems in Iran, with the problems with the Houthis in Saudi Arabia, crude oil is still down on the day. And so the recovery, remember, 7 sectors of the S&P 500 are lower, 4 are higher. But those 4 that are higher, it's energy, obviously, is still on shaky ground. But it's information technology, it's communication services, and it's consumer discretionary. The 3 big leaders of the S&P 500 are all higher, all bouncing today on a bit of news. We're getting close to earnings in Tesla and Google Alphabet that we'll talk about in a moment. But this was, you know, pretty ugly finish to the day on Friday. You know, it's still a mixed market. You know, the Dow and the Russell are still lower, but this is a firming up of these markets, because remember, we're starting to get really close to earnings on a lot of these names, and so they're firming up. But good news, crude oil's been all over the board today. It was below 80.
Hello, my name is Chef Washboardjim Alicati. I want to introduce my chicken recipe made out of an Instapot. Please get your pencil and paper out, and I'll give you my secret potion to making a juicy, tender, tasty, delicious, mouth-watering, filling soup from Washboardjim Alicati. First, you take a sesame seed bun and you put it in an iron skillet with butter. Cook it for about 4 to 5 minutes until it's nice and brown. Then pull out your Instapot. Set it for 20 minutes. Make sure it's sealed. First, cut up your onion, yellow onion. Put in a little bit of butter. Stir it up. Marbleize them onions. Throw in a little bit of garlic. And then add it for about a minute. And then start adding your cut up chicken cubes. Throw it in there and then stir it around. Cook it a little bit on sizzle. While you're doing that, cut up your celery and your baby carrots and throw that into the crock pot. If you want to add any other vegetables like corn, I love corn in my soup. I won't argue about that. You could throw some noodles in there, but you need to add a little bit more broth. 2 quarts of chicken broth. Now the seasoning is where the trick comes in. Salt and pepper it. Add a tablespoon of onion powder, a tablespoon of garlic powder, and a tablespoon of cumin. stir it all together, close the lid, turn it on for 20 minutes, let it go through its another 20-minute default to where it depressurizes. Depressurize it, and that will make you 9 cups of delicious chicken noodle soup for the week. Very healthy. Very healthy. Boom, baby. 470. $15 years ago. Ladies and gentlemen, I got 2 pieces of chicken breast in my mouth, and that's the best pair of tits I've ever ate in my life. It's always surprising what that man can say. Oh, God. Oh, I thought I left my bread on the toast. Panic attack. Panic attack. Man, it's good. It really is good. Gosh. This is so sweet. That chicken soup. The perfect. Don't forget salt and pepper. I use a Himalayan salt. I got that mic right in my mouth. I don't think I've ever had a soup so good. Doo-doo. Doo-doo.
supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving.
I think it's a bad idea. Whoever thought of that idea, Marley, is stupid. Oh, gosh, come on.
Customize and build on it. The announcement comes just days after Chinese startup Moonshot AI introduced its own powerful model, underscoring how quickly China's artificial intelligence industry is aiming to catch up to U.S. competitors. For investors, it's another sign that the global AI race is heating up well beyond Silicon Valley. All right, time now for the tug of war on Alibaba. For that, let's welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. So before we get to your example trades, we've got to get each of your thoughts on Baba. Kevin, I'll start with you. What's your take on Alibaba?
Qwen 3.8 Max, they call it. It's their large language model that they refer to. The company spokesman said one of the most powerful on the market. And so, you know, a Chinese company putting out a large language model, we don't know what that will do to the U.S. We don't know how profitable it will make Alibaba, so it's a little dicey there. Remember, we've covered these stocks a lot over the last couple of years, how it's difficult for some U.S. investors to invest in Alibaba. But this news, they're certainly competing. There's also an EU fine of 550 million euros for breaching obligations on the Digital Services Act. No one cares about that today. They're all thinking about the good news with Alibaba's large language model. So watching this evolve, it's certainly a good day for Alibaba. Like I said, there's been a lot of scrutiny of this stock lately, but the news that was negative for a while seems to have dissipated. Stock having a really good day today, Diane.
Yes, it's better by more than 5.5%. Tom, what's your take on Alibaba?
Yeah, I think you start taking into the fact that that Moonshot AI just came out with a model late last week. They actually had to shut down people before the weekend that were trying to access it because they say it's comparable to what we have in the U.S. Now, this Qwen 3.8 Max is supposed to be right below what they've got out of Anthropic as far as large language models on here. So that's a concern, I think, for a lot of these big tech companies here in the U.S. because it's all going to be about pricing when it comes down to it and energy use. Now, remember, if you look at China, they're building out energy infrastructure. They're using, old fossil fuel plants. They're still opening coal plants across their country on a monthly basis. So maybe they have more access to what all the other hyperscalers here are trying to get to, is that's more energy, right? Because the need for it is so great, and they might have better infrastructure to get that excess out there, and maybe they start cutting costs on what they charge the consumer and businesses for their models in the future. And that's going to be a concern, I think, for some of these hyperscalers as this AI race kind of, comes to fruition here over the next couple of years, because I think it's going to be a big concern. Now, there's questions about how they get all this information, how they got the technology. That's always been a question. If you look at a chart like this one in Alibaba, it's choppy, and it's probably going to remain choppy because I'm guessing the U.S. administration is not going to allow maybe companies and others to use these models if they're not based here in the U.S. So there might be that regulatory issue coming down the pipeline also. And then there was another benefit late last week that Beijing and China basically came out and said that, hey, they can put into Apple, they can put AI, Chinese-based AI into some of the Apple products that are going to be for sale over there also. So that was kind of a coup for them also. But the stock's up 26.5% so far this month. But expect that chop to continue, just like this chart's kind of reflective of.
All right, so let's get into the example trades. Kevin, let's start out with yours. What's your approach today?
Yeah, this is, like I said, it's a dicey issue between, China's always going to be the low price supporter of anything because it's funded by the government. So, yes, if you want to trade Alibaba and you think this could be good news and continue good news and they're a real competitive threat, what I did, first thing, I gave myself some duration. I went out to August 7th. And then I looked at the expected move out to August 7th. It's about, right around $11, so just slightly, we'll call it $11. And I just kept it relatively basic with the vertical call spread, the 120, 130 vertical call spread. So buying the August 7th 120, selling the August 7th 130, spending about $2.90 for this paper money trade, trading higher than that now, trading almost $3.60 now as this stock has continued to rally throughout the day. Can you adjust your strikes? Yes, you can, but I think this is one that's in line with the expected move, in line with where the stock's trading right now. Like I said, trading a little higher than the 290 strike, Tom, but this is one that just gives you some duration, gives you a discounted price. You're buying the 120 call, but you're selling the 130. That lowers the net cost, lowers the break-even time, but also caps the profits on this one. So vertical call spread in Alibaba, Tom.
Yep, directionally bullish on this call vertical, but let's break it down. August 7th weekly options here. That's 18 days to expiration that Kevin brought us. Buying the 120 strike call, selling the 130 call, bullish $10 wide call vertical. Paying roughly about $2.90 debit, as Kevin mentions, about 50, 60 cents higher than that right now. But the debit you pay is going to be a risk. So if you pay $290 per spread, that can expand to $10 if it gets back above 130 into expiration over the next 2.5 weeks. So keep that in mind. And I thought it was interesting of note on Kevin's trade, in that August 7th weekly option series where he got this example, the plus or minus move in the stock for that option series about plus or minus $10, $11. So that 130 strike that you're selling in this is setting up with about that one standard deviation move that the option market's priced in at this point. But if you pay $2.90 debit, you got to get that stock back above $122.90 to get into that profitability range. But this is one of those names where it gives you some flexibility because you're buying it directionally, right? Where I don't have to wait 18 days. If you get the move maybe up to 126, 128, 130 over the next few days, if the market's open, you can maybe, if it starts to expand in price, you can look to close all or a portion of your position ahead of expiration on these directional type of trades. On a percentage basis, that break-even is not too far above the current share price, just above 121 that Alibaba is currently trading. So directionally bullish, 18 days to expiration. There's the bullish side of this debate. I went a little bit directional also, Kevin, but I wanted to offset some of the costs on this, maybe measured downside exposure on mine. I went out to the July 31st month or weekly options here, Kev, just 11 days to expiration. So shorter duration on this one. Buying an unbalanced or broken wing put butterfly. Now, prices are probably going to be different on this also because the stock has moved higher since we looked at those. But buying one of the 119 strike puts, selling two of the 113 puts, that's where you want it to go, and then buying one of the 111 strike put. So unbalanced put butterfly, you're paying roughly about $1.90 debit. It's trading about $1.50 now, so it's a little bit less expensive. But that debit you pay on this strategy is also your risk. $190 per spread if you pay $190, $150 if you pay $1.50 for it. Now, your break even on this one goes down to 117, roughly about 117 on this. That's where you need it to go below. But Kevin, on this one, you lose a little bit of profitability if it goes below the 111 strike, but you're shooting for the 113 strike, about what the option market's pricing in for a 1 standard deviation move. But, you know, you've only got 11 days in this position.
Butterflies max out at the short strike. In this case, 113 strike. You're long a $6 put vertical, short a $2 put vertical.
Short.
So you're looking for something around 190 or 1.5, wherever it's trading. That could be, you know, 4 times the profit if you get it for $1.50. If you think Alibaba might break to the downside. So this is one of those. If it continues to go through 113 and towards 111, you're still locked in on profits. It's not as high as the peak at 113, but you're still profitable, Tom. Like I said, long a $6 put vertical, short a $2 put vertical.
Yeah, it's still more than a double in profitability on that if it goes below the 111 strike on this. But offsetting some of the costs by doing, as Kevin did, the call vertical, that would cost more than a butterfly. This put a butterfly on the downside. You offset some of the costs by basically you're buying a $6 wide bearish put vertical, offsetting some of the costs by selling a $2 wide put vertical with that same common strike, short 2 options at the 113 level where you have max profitability. So there you go, 2 different strategies here for the bull bear debate, Diane.
Indeed. All right, good stuff, guys.
Stop
We've got
storing
cash
cilantro
tags coming
the
up.
old
The team
way.
from Life Oil will be along to help us navigate the latest consumer sentiment trends on GM ahead of its quarterly results. Stay right here on Schwab Network Fast Market. We'll be back after this break.
Do 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 do.
I'm Samba. Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
My parents didn't really talk
Oh,
about money
God,
at all.
no.
In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit cards.
Please, no more of her. No more.
(24/7), any screen, anywhere at schwabnetwork.com.
When you invest, you are not wagering on an outcome and walking away with either a windfall or nothing. You are a participant in wealth creation. Our purpose is to help investors build and protect wealth over time, not to make financial security feel like Las Vegas. Owning beats hoping. Discipline beats speculation. And the long run belongs to those who invest in it.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the SIBO. Time now for our cash tag segment. For that, let's bring in our next guest, and that is Landon Swan, co-founder of Likefolio, taking a look at General Motors ahead of its quarterly results. Kevin, it's good to see you. Kevin, I need coffee, Landon. More coffee. It's Monday. Landon, all right, Jim. We've got earnings coming up tomorrow. You've got your latest consumer sentiment data. Walk us through it at a high level first.
Sure, high level. I mean, this is a company it's fairly cheap. I mean, when you look at the PE ratio, I think it's around 6. It's pretty cheap, but the stock's been doing fairly well this year. It's up, pretty strong. And the data that we've got, though, the demand data has actually fallen off quite a bit, especially over the last maybe 5 or 6 months. And so, we're seeing a bit of a divergence, which puts us in a tough position because, you've got a company that's increasing dividends and
Amazon
has a
big
buyback
pop
program that's active, very low PE ratio. So for all of those sort of fundamental reasons, it's fairly appealing. The stock's a little high compared to what it was, but the data is just struggling. I mean, you can see here, they're at that negative 27% level.
Ooh, that's bad.
Year-over-year basis, which obviously.
How can you promote anything like that, sir?
Probably the biggest is Ford, basically flat on the year. And then
Tesla's the only one that's not green on earnings this
week. At
week.
the bottom of the list here, and it's a bit concerning. So again, it puts us in a tough spot because we want to be bearish going into this, but it's a pretty low price, cheap name. Thankfully, it has had a little bit of a run, so it gives us a little bit of room to be bearish. But overall, what we're seeing again is it's got the negative 27% on a year-over-year basis. It is being carried by pickups and SUVs. Specifically, they just revealed the new Silverado, new Sierra about a month ago, and that was a little bit of a bump. I can tell you that the data on the Silverado especially was positive. I think we've got a 78% happiness on that. Just initial reaction. The Sierra was lower, but the Silverado was very high. And that's, again, that's carrying them. They've got pickups and SUVs made in the U.S. carrying the China-made, and EVs are struggling and losing money. And so I think a lot of people are going to be asking questions about, is there any sign of turnaround in the EV market, in their EVs specifically? When are the remaining buybacks going to be deployed? Is there any turnaround for China? Is there any way to stop the bleeding with China? And then can they hold the gross margins that they're seeing for, the trucks and the pickups at over 10% with decreasing volume? So there's a lot of question marks, not to mention tariffs, of course. That's a huge one right now. What we're seeing, though, out of all of the
megaphone
automakers, GM
on
is the
AMD
on the board for us. They've had that run in the stock. It's been kind of sideways since that run. But the demand level that we're seeing is definitely moving to the downside and diverging from where that stock is at right now. So we're definitely leaning bearish going into this one.
Yeah, Landon, despite some of the good news that GM is putting out, your data is pretty negative on this name. I mean, the consumer demand, that's an ugly number. The other one with the stock, the consumer demand versus the stock, that's a divergence in the wrong direction, frankly. They've come out with a fair amount of good news lately about margins going up to 9.7, 33% earnings per share growth. They seem to be doing a lot of things, but the bigger picture is, these car companies have a history of making decisions that miss where the consumer is. And the latest one might be EVs. So as popular as this car is, or this car company is, I understand why it might be struggling. Now, here's the question though, Landon. They've mentioned partnering with Lockheed Martin for the defense industry. They've mentioned getting in the AI data center business. Are these other businesses anything that we should pay attention to? Or is this a car company that's just doing an average job of getting quality cars out, Landon?
I think the latter, but it's tough because and I can't give you any hard data on all of the other things that they're doing. It's not in our wheelhouse. We'll see if some of that plays out. As an investor, it's weird because when you talk about GM getting into some of these things, it makes me feel like they're distracted or they're reaching. Whereas if you tell me that Tesla's doing some of these things, I'm like, oh yeah, they can get that done. So maybe I'm a little bit biased, right? But the fact that they're not, you want to see them concentrating on what they do best. Pickups and SUVs, dominate that. And if it's not working, pickups and SUVs, dominate that. And if it's not working with the EVs, if they can't compete with Tesla, then maybe they need to scale back a little bit and really just focus on what wins. And they have, pickups and SUVs, that is their strength. They need to continue with that, continue pushing. And like I said, they've done a good job on the Silverado, very well very well received by the general consumer market as far as our data goes, the 2027 model. And there's definitely a lot of positives. I mean, you talked about the deals that you mentioned. They also got the deal with Micron to improve their software and technology, which I think these vehicles definitely need. I know the Silverado's got the big screens coming out. Everybody likes new tech, even in pickup trucks. Wall Street, they're all expecting a beat. They've raised the dividend. They've got the buybacks remaining. I think the average analyst target is around 96, where it's sitting at 76 right now. So I think that there's a lot of built-in optimism, especially when you look at the stock price. I mean, it has run up and basically held these higher levels of around, mid 70s or so. I think the high was just under 90 over the last year, but it's kind of holding this sideways level. And you saw it on that chart. We don't get a lot of, crossing patterns like that where the demand is falling off and the stock kind of raised. And so there is definitely a large divergence that we're somewhat concerned with. You can see it here in the chart. The blue line is our data. The dotted line is the stock price. They don't always move in lockstep with each other, but when one moves significantly away from the other, we're definitely paying attention. And again, it's got me in a pause because it is so cheap. And they've got all these positive things working for them, but we got to remember the stock market is supply and demand of shares. It's which, investors are making the decision, do I want to own more shares or I don't want to own less shares? And that's what moves the stock price. And so they know a lot of this stuff already about the dividends and the buybacks and how well they're doing with the trucks and SUVs. A lot of the concerns are known. I think maybe what's not known is that like our data says, demand has fallen off fairly sharply for a car maker, for sure. You compare it to some of those others, they're all pretty much single digits. So when we get this much larger percentage on the decline, negative 27%, it's concerning.
$4.30 on my Teslas.
Score is only negative 21. It could be a
I'm up
lot,
$40
lower based on some of the data, but we've had some other factors push it up. And happiness being one of those. And you can actually see it in the data that blue line starts to uptick right around
reversal on the SPX off the 100.
People definitely like what's coming, but they're just not as bullish, or the consumers are not as favorable or not as enthusiastic about the products as they have been in the past, whereas the stock is being, it's being touted as doing pretty well. People are pretty optimistic. So there's a divergence between what consumers are saying and what investors are saying, and that's where we come in, and that's where we're going to lean a little bit bullish going into this. I'm sorry.
Brandon, let me ask you one bearish. I figured that. That's all right. It happens. We know what you meant. Leaning bearish, especially based on those charts. Let me go back to that one chart. That's not the competitive landscape chart where we've got Tesla on there, Ford, etc. When you look at that, it looks like it's about the competition and the competition lapping GM. But is some of this consumers, delaying purchases, or is that not factored into your data right now?
So we're seeing, I guess, sort of medium strength when it comes to consumer landscape right now. And we talked about this before. It's always K-shaped economy, talking about that, and we've seen a little bit of increase on the higher end and on the lower end of the consumer confidence levels. So I think that things are moving slowly in the right direction. Obviously, when it comes to whether you're eating out at a fast casual versus fine dining, that's a much faster decision than if you're going to buy that new vehicle. So this is that data that we're seeing on the consumer slightly improving. That's going to take a lot longer to play in before people start, deciding to make decisions to buy a new 2027 vehicle. So I don't think that that's going to be a huge factor. It's going to affect all of them pretty much across the board, and it's not going to be a factor in this coming earnings report. I think we could see it if the data continues to move in that direction. We could see it in the next maybe 2 or 3 quarters if the consumer continues to increase in strength. But these are bigger purchases that take a lot longer, confidence building to move the consumer needle on that.
All right, good stuff. Thank you, Landon. That's Landon Swan, co-founder of Lifefolio, with the latest sentiment data for General Motors. Now, for the trading perspective, all things GM, let's bring Tom back into the fold. Tom, you heard some insights from the Lifefolio team. You saw both of those charts. It looks rough out there. Your final thoughts before the example trade?
Yeah, I thought, it was pretty interesting, the negative data that they have on it. If you look at this stock over a 3-year period, the stock's up over 90% from levels that we saw 3 years ago. So it's had a great run. even though the last several months we've seen some consolidation, it's trading right between its 50 and 200-day moving averages, between about 76 on the downside and about 78.80 on the upside. It's kind of gone in that channel. But Kevin, you look at this one, their data is really negative. We talk about those divergences. Usually it's the divergence the other way around where the data is good, but the stock is lagged. Here they've got it flip-flop where their data is lagging and the stock's still, elevated at this point. Option market's only pricing in about a 5.5% move, about a $4 move in either direction. How do you want to look at this one from an example trade?
Yeah, and one more thing, it's sitting right on the 200-day moving average at about 76.15 is where I have it. So based on Luckfolio's data, Tom, I got to take that $4 expected move, and I did the 1 week $72 put calendar. Lined up the expected move with my strikes, bought the July 31st 72 put, sold this week's July 24th 72 put. It was trading about 42 cents, trading about 45 now, but for under a half a dollar, you can get some protection here in General Motors. The divergence between implied volatility, 72 in the July 24th, 52 in the July 31st. So there is a nice disparity between the two. But Tom, for 45 cents, you can get a downside hedge on in General Motors, focusing on the $72 strike right in line with the expected move.
Yeah, that's kind of what it was going to hammer. Why do you pick the 72 strike for exposure to the downside? Well, the one-day anticipated market maker move is plus or minus $4 in the stock. So keep that in mind where he lines that up based on what the platform gives you at this point. But let's break it down. July 31st weekly options, buy the 72 put. That expires in 11 days. Sell that same 72 put in the July 24th weekly options that expire in 4 days. Paying roughly about a 42-cent debit, $42 in risk per spread on it. Now you want it, you can see here, you want it to go at or near that 72 strike over the next 4 days. But you've probably got a range of about 69 on the downside and maybe 76 on the upside to still remain profitable. Kevin highlighted the fact that, hey, that divergence between implied volatility levels from where you're buying in the July 31st from what you're selling in July 24th, that divergence where you're selling a higher implied volatility lowers the entry point price. So this lines up with Luckfolio's data, Diane, and at the same time, it's an inexpensive way as far as risk goes to get that downside exposure if you think it's going to sell off post earnings.
All right, thanks, guys. Coming up, are you still watching? We've got our eye on Netflix off the back of an upgrade. We'll have more Fast Market after this break.
He's taking his time right now. He's not in a hurry. I think I will get me something to drink. Little pull back. Jack. Oh, I did miss that knife. Ooh, that would have been a pretty one right there. A hammer consolidated for 6 minutes. Okay, I'll be right back. I'm gonna go walk around the building. It's 11:47. We have 13 minutes to noon. Marley, you're a beautiful woman, but not as pretty as Elizabeth. I got a crush on somebody that I know I can never have. And I don't think I want her, but I don't want her. I really do like her. I mean, she Let me think. Just never mind. I'm going off on a feast.
To answer when you have someone that actually cares.
Hello.
I'm Alex.
Nice looking man.
And I'm his
Oh God.
Sometimes, you know,
Shit.
you could have done better.
What the
Same
fuck?
goes for where you invest.
Your
Level up
mother?
and invest smarter with Schwab.
I come driving up here, you got your nice house, and then your mother?
Welcome back to Fast Mark.
Whoa.
And as we get closer,
Can we break
to
the
bottom of
63,
lunch
George?
Hour on Wall Street. We're sitting about where this hour started. The S&P 500 better by a little bit more than 1/3%.
Yay!
In terms of the gainers, the tech sector, obviously, especially if we look at the Nasdaq 100.
I'll be right
Educator
back.
Services is at the top of the leaderboard, also followed by some gains in energy. The laggards, real estate, consumer staples, utilities. We actually have more sectors in the red than in the green. Financials, though, fluctuating here. The Dow is lower by less than 0.2% right now. The Nasdaq 100 continues to be the leader, the top of the leaderboard. We're better by almost 1%. Russell 2000 a little soft. We're off by a touch more than 0.1%. Meantime, shares of Netflix are under pressure despite a bullish analyst call from Phillips Securities. The analyst upgrading the streaming giant to buy from accumulate. One of the things that it likes, it thinks it continues to be a leader in the streaming landscape here, although some are questioning that. And it certainly had its valuation pulled back off the back of its earnings. The firm says, though, after the stock's latest pullback, there's an entry opportunity here. It cited subscriber growth. It says there's no signs that viewer engagement is slowing. Time now for the breakdown. Joining me now for more is our senior markets correspondent, George Sillis, to take a look at Netflix today. Off the back of its earnings, you had a lot of analysts adjusting their price targets and, you know, some were in the buy, some in the neutral camp. This one's bullish today. But how do you want to break down Netflix?
Well, I mean, I can certainly see why the analysts are looking at this carefully. Netflix is still a premier brand when it comes down to distribution of content, whether it's live streaming content, original content. They've got a global brand. If you look at the price action in the last year, there's been down about 45%. The year to date, it's down about 27%. Phillips Securities did upgrade the stock, basically maintaining a buy rating, but increased their target to $210. They're looking at essentially the growth catalyst coming up for Netflix, and even Netflix talked about this band, which is if you look at the estimated growth they're seeing in advertising this year at around $3 billion, that's more than double last year, which is around $1.5 billion. But that only represents around 6% of total sales for the year. So there's a potential for advertising revenues to continue to accelerate. Now the challenge that we have to consider is, despite the valuation, which looks compelling, and of course Phillips Securities did note this as well, they also see healthy margin membership trends. The challenge really lies in looking at the ratios here of sales to operating margins, because if you look at the guidance revision that Netflix provided, they lowered their guidance for the full year, both in sales marginally for next quarter from 13 billion to 2.82 billion, and EPS from 84 cents to 82 cents. So that initially is going to cause a decline, which we saw. But if you look at the quarter as well, in terms of what they reported, operating margins only grew by about 11%. So operating income only grew by 11%. Whereas sales grew by 13%. Ideally, you'd like to see the opposite, where you see operating income grow a little bit faster than sales growth. And if you look at the sales growth numbers on an adjusted basis too,
Georgie putting chain never was the same. Tesla head and shoulders. New low on the video. We have a pattern. Everything's kind of slowed down. And Johnny, you're getting a little out of line. Boom, 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 boom.
Remember
we
that,
got put here
in the shares. I looked at a combo trade. This is bullish because
bullish
both segments that create this
with
strategy are bullish, right? Out in the September monthly option. So you got 60 days to expiration. This is a longer duration type of trade, giving the stock time to recover.
I couldn't figure this out.
It's going to go higher. It's got a lot of risk because you're short and naked put in this, but you've got a lot of upside exposure also for profitability. So going out to that September monthly cycle, 60 days to expiration.
I can't take that trade.
We're going to buy the 68 strike call just out of the money to the upside. That's bullish. And then to help finance the purchase of that call, we're going to sell the September 65 strike put. So $3 wide between the put and the call on this combo trade. It's a bullish risk reversal, sometimes how we refer to this. But you're paying a debit of roughly $1.60, right? $1.60. So that's your risk, $160 per spread between 68 and 65.
Wow.
Right? That's all
Well,
the
if I
risk
figure
you
that
have on
out.
it. But below 65, because you're short and naked put there, you've got risk all the way down to zero. So you've got $6,600 in risk basically down to zero if the stock were to somehow continue to go zero. So keep that in mind. You got to be comfortable owning the shares if the stock does fall back below 65 and you get assigned on that option over the next 2 months. So keep that in mind. But if you pay that $1.60, takes your break even up to $69.60 to the upside on this one. Anything above that's pure profitability on it. So it's a bullish risk reversal using the short put, which is neutral to bullish, helping to finance the purchase of the bullish call also. So this is a type of strategy you only do if you think over the next 60 days the stock is going to go much higher, get above that break even, maybe go back to $75, $80 a share. But you've given yourself plenty of time on this one, but you've got plenty of risk on it also. So the combo trade here, the bullish risk reversal here in Netflix, but you got to believe in this one, Diane.
All right, we looked at this one on the charts today, and we took a 1 year and a 5 year view on it to go back and find some momentum. All right, good stuff, Tom. That's going to do it for us today on Fast Market. I'm Diane King-Hall alongside Tom White and, of course, Kevin Hayes. Download the Schwab Network app. It's in the App Store. Tune in 24/7 on schwabnetwork.com. Stick around. You've got Next Gen Investing coming up.
Actionable data and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
So what is unique about Schwab coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator. People learn differently, but all those
People learn differently. That's a fact. Some don't learn at all. I'm always learning. Right now, James, you're back to even. You were up $70 at one time. No, you were up 50. Okay, well. One more minute to noon. I'll be right back. Oh, I got water. Had a little shot of coffee this morning. This guy got one of those cappuccino machines. He makes me a little shot of coffee every morning. So I bought him some, what do you call it? Espresso beans.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at Schwab Network.
I had an opportunity come up last week up in close in Collins, Missouri. A guy called me up and said, "You have a cleaning business?" I said, "Yeah." He says, "We need somebody up here at Floral." I said, "Floral?" It's a florable cannabis, where they grow cannabis. I said, that sounds kind of interesting. How would you like to buy 20 acres? I'll sell you 20 acres. I'll give you 10 and sell you 10 if you let me be your business partner. All you got to do is buy 10 acres and I'll give you 10.
And we check in on markets here to kick off what's expected to be a pretty busy week as far as earnings and overall volatility. We have seen a bit of a pullback since the open, initially opening higher across our 4 major averages. Now seeing some weakness trickle in, although we are still seeing some strength that is led by the NASDAQ, which is up now about 0.8%. S&P is also higher as well by about 0.25% for the Dow, pulling back now 0.3%. Russell 2000 modestly lower as well. And so stocks relatively mixed as, of course, we approach what is expected to be, again, a busy week for major earnings with, Alphabet reporting Wednesday, a huge headline company, of course. Naturally, they can move the overall market.
Yeah, and with the exception of Apple and Tesla, it's actually a pretty nice day for the mega cap tech firms. Microsoft's having a decent day, Broadcom having a decent day, Micron higher, Amazon, Alphabet, Nvidia, AMD. So you look at the names that are leading today, it's certainly your momentum names, it's certainly your growth-oriented names, and as you say, it's going to be a pretty critical week, especially the latter half.
Yeah, it is. And so a full slate of earnings moves to get through. And of course, we continue to see geopolitical tensions somewhat play into the market, but not a whole lot of major movement, at least to start this week. But I was saying we were on stronger footing, obviously, out of the open, because we saw a pretty substantial downturn, especially in a lot of these chip and memory-linked names towards the end of last week.
Yeah, exactly right. And whether that was tied to some of the news of breakthroughs out of some of these AI companies in China, as some have said, I'm not sure. Whether it's the natural ebb and flows of the volatility of some of these names, perhaps. Or it could be the example of, how I've just, heard it described. I think it resonates with how I'm thinking about it. This AI, trade, if we go.
Still a little slow. Sands. I haven't looked at that one in a while. RCAT. RCAT. Options challenge 5 years ago. Glue. GLUU. Oh, glue. Oh, that's going up pretty nice. This is when Vegas and I did videos. Hello, this is the aftermarket report with Vegas and Jim. Vegas is on vacation and should be returning in the morning to the chat, so we sure do miss her. And I've been doing these solo on my own. Today's date is December the 17th, 2018. And right off the bat, I want to talk about one that's been giving some people some headaches, but yet we've been still semi-bullish on it. Today it came out with some good news, and that's OMED after hours. Institutional buyers are wanting to get into this trade. You see the stock running after hours. No we longer have a up. low here of 68, and we ran all the way up to 83 after hours. So if anybody's in this, take some profit right now. It's going to pull back. It'd be nice to do that. And then just remember the support levels, and I'm going to show you the 13D. Institutional investors are getting into this thing while it's cheap, so they know something that's going on. They know it's hit a low, hit a bottom. So I'm gonna life. And I, you know, they told me I was gonna die when I was 20, but yet ski play, but I'm gonna and we came back and we touched it, the brains. So everybody have a great day. This is December 17th, 2018, and I want to give special kudos out to the room that I'm in. I really appreciate everybody that's in there, and I hope I'm helping them out as much as they're helping me. Every time they ask me a question, I learn something new. And every week I always have a case study. And I always talk about patterns, chart patterns. Just, I'm always bringing up something educational in the room that could help somebody out. And I'd always like to repeat stuff, because I feel like some people get a little complacent, and if you keep reminding someone something, they start picking up that habit. And it usually takes 28 times to form a habit. So this is Wash without Vegas, and next time I'm on here, I hope I have her with me. This is the Aftermarket Report, and everybody have a great day. Be sure to subscribe and ring that bell and get our updates, because we'll be doing this coming definitely with the new year coming. It's going to be an everyday thing. We're off on Fridays, but we do the big report on Sunday. Like I said, Merry Christmas to all of you. I love stocks.
God, it makes me want to cry. It really does. Wow, I don't think I've ever shed a tear. Whew. Okay. I actually shedded a tear, man.
Sell side perspective is not. To buy from Accumulate, unchanged price target of $110
Nvidia
a share,
new low.
setting valuation for the upgrade following that recent sell-off. And they did say that Netflix has healthy membership trends, resilient pricing power, and expanding advertising monetization, as well as industry-leading profitability. They see no signs of slowing engagement, and they believe the company's earnings growth will re-accelerate as advertising monetization continues to ramp, creating an attractive entry point for some of these long-term investors. And so you look at the chart of Netflix, and I mean, it was a pretty brutal gap down last week. We're down now 28% this year. And another great example, although I guess the trend
They're
still
pumping
for
Netflix
today is not positive. We're
upgraded
on highs though now by
to abide by
47%.
Phillips Securities.
Yeah, this is a stock that does tend to trend, and I don't know if that'll continue, but you know, when it starts moving lower, like, it's shocking how far
God darn it.
I mean, this stock was 126. It, you know, just traded on Friday $65 a share, which is not much, you know, lower than where we are right now. It had that huge move lower in 2022, but once it turns around, it seems to go the same way. And so it's commodity-like in that way. But I look at the choices that they seem to be making as a company, and it's a focus on, you know, things that seem to be about engaging you on a mobile device, whether it's focusing on shorter form content, whether it's focusing on video, you know, podcasts, whether it's things like games that they've rolled out recently. Those are all things that tell you that they're trying to drive engagement, in my mind, on the phone, so they can embed ads on the phone device and continue to provide value for potential advertisers. Then on the other side, they're recent leaning into live content. So whether that's, you know, roasts, whether that's fights, whether that's NFL games or other sporting events, that's another place that advertising is very, very lucrative still, because you can't, what value is it to watch a sporting event after it already happened? Well, it's very difficult if you get on social media, you already know what happened. So in my mind, they're focusing on live content, particularly in sports, that drives people to the couch, drives them to the TV,
And then on the other side, on all those other hours of the day, they want to use your phone and they want you to use Netflix on your phone.
I know, I'm such a hater of the apps. I feel like, because I just hate adding an app. Like, why can't I just watch Netflix at home and leave it there? But I guess I'm probably...
Well, that's what you would do. And so they're looking at them saying, well, we have 16 hours in the day. Most of the time people are at the office, wherever they are, and they're listening to podcasts, whatever, when they're doing their work. Why aren't they doing that through Netflix?
I guess we'll see, because I do understand the value of having like a one-stop shop type of app for media and streaming. It's just, I'm an anti-app person, so...
So this is the very last thing that I'll say, and maybe you'll have thoughts on this too, though. By those actions, so this is my kind of conclusion, they're kind of that they've saturated their traditional growth.
Right.
New series isn't driving new memberships. That there isn't a whole lot of new memberships to grow in North America. That they're also not losing them because they're still bringing value, but they're trying to find ways to not just keep you, but to actually...
But AMC is doing so well. It's just so weird about how they're treating Netflix these days. I mean, this was the hardest pump of all of them for a year and a half or so. 2 years. I mean, it was every single day. So I don't get it. I mean, I'd like to go long in this. But I don't like TV. I don't like Hollywood. I don't like movies, you know. It's just not my brand. There's Tesla call here. Now I'm down on Tesla calls. $15. I got one. It's a risk. Okay. Clean up the room. Those couple rooms have been getting into it lately. Their mouth must not be doing very well. I explained that to another room the other day. $69 million women will not be able to vote come November, according to Republican Maureen Underwood. With the Save America Act, Republicans are taking voting rights away from 69 million women. Woo!
We will get updates. It's expected at least coming from that
Boeing
air show.
expects to see some cost growth.
Coming up next, we will be charting and trading two names reporting tomorrow morning, General Motors and 3M, to see what technical levels to watch heading into those reports. We are seeing some modest weakness in GM today. 3M is likely higher. We'll dive into all of those numbers coming up next.
Do-do-do-do-do. Mega Cap Tech. Apple. The only one down. Could be green tomorrow. Phone payment. What? Oh, it's gas. It's a credit card.
Connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Okay.
Sir, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place.
Oh yeah, I got
It's like,
300.
Like Schwab.
350.
Everything
so
investors
13
need,
something.
all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for the Chart Master, and today, for a fresh look on the technicals into these earnings reports, we are joined by Kevin Horner to discuss what we're seeing as of late in GM as well as 3M. Just to add some confusion, these are very similar tickers to me, Kevin, but walk us through really what you are looking at as far as GM is concerned, because we've seen a modest pullback today, but obviously earnings could rewrite all of this recent trend. So what are you watching?
Yeah, you're right, Jenny. Good morning. As always, earnings will have an opportunity to kind of shift things for us. But I think what traders are paying attention to now is certainly this 200-day moving average. We're actually dabbling beneath it intraday today. That level comes in at 76, and it's important because the last time we tested the 200-day was back in late May, or mid-May rather, May 19. I've called it out with that rectangle. We had a huge, beautiful hammer candle on the day we tested the 200-day, and then it pushed us higher. We rallied all the way into the $85 ledge up above, and so traders, I'm sure, are looking at this 200-day moving average to potentially act similarly. This is only the, really this last 2 weeks gives us a test of the 200 for only the third time, really, since in the last year since we really recaptured it. So this is a long-term area for trend support. Under that level, we got to eyeball 72.
Here we go.
The level we tested and held, basically. There's
Snake.
some horizontal support at that zone.
Let's find a resistance. Shut up. So you can see the arch coming out here. So that's going to, resistance is going to be up in this movement. Let me see, I got to get in the trade. Did get in the trade. Where are you? Oh, shit. SPX. Okay. SPX, the 7480s. 380. SPX, we got a snake. I'm in it right now, but I'm going to show you. I'm going to draw it out. I'm just taking a risk here for resistance. We could call that a Head and Shoulders right here. Or we could call it right here. And that takes you right to the 100, to this spot right here. Dang, 360. Then we got a wedge. No, more of a flag. It kind of looks like a wedge, but it could be a wedge if you cut that off, but we'll call that a pivot point. Come on now. No, that's a fucking wedge. Man, come on. It's not really a good looking wedge. Come on. I gotta go check my phone. Come on, baby. Let's go. I'm even. We got 2 contracts. Snake, breakout, pullback, head and shoulders with slit down the slice. What's this? Yep, there's a lot of cheating going on, there's no doubt. That's one reason why I will never vote Democrat ever again. I'm at 290. Never. They're coming out trying to say, well, let's be partisan. Let's talk over the issues. Fuck that. I am never going to talk over the issues that any Democrat puts out anymore. Never again. Bill Maher switching the party now. It's got that bad. Bill Maher. And I like him. I liked him as a liberal, but I like him a lot more as a conservative.
Live coverage wherever.
My dad had a stroke.
Oh,
Big
yeah.
shock
The
to
vulnerable.
This person that I've always seen as a force in our family be vulnerable.
Wait,
I had a stroke.
vulnerable.
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
No, don't smoke.
I'm a financial consultant. I probably met 20 years ago. Jim's really been there to
Yeah, I
answer any
have.
questions I ever have. Makes
Yep.
a huge difference when you have someone that actually cares.
That's right. I care. This commercial is more about me instead of the old man. If you ever need any financial help, I'm always there for you. Jim is. All you got to do is give him a call. Give him 10% of your cut. I'll always be there for you. 8 hours a
As you can
day.
see there in real time, both Warner Brothers Discovery as well as Paramount Skydance shares are lower. Warner Brothers a bit weaker here in real time, down over 2%. Paramount Skydance actually reacting fairly modestly as it stands right now, down about 1.6%. So we will continue to follow what, of course, that looks like and what the future of this potential deal could
Shame
really
on
look
you.
like. But now to focus back on, of course, FOMO today, and we are discussing all things AMD expanding its partnership with Microsoft, with Azure set to deploy AMD's next-generation AI chips. Joining us in studio is Marley Caden, host for the Schwab Network, for some more details. And so, Marley, what really stuck out to you here about this development from AMD, which is getting a nice start to this week, up over 3%?
It is. It's getting a nice pop here, but I think the bigger story here is that AMD is really setting itself up to potentially be a competitor against NVIDIA. I think that's the story. Microsoft expanding its partnership, announcing it's going to deploy its new Helios racks in its Azure data centers alongside some other big name customers, including Meta, OpenAI, Oracle, just to name a few. So I think the larger story here goes beyond today's headline, which of course deserves the pop to the upside we're seeing, but it's really more about how this could potentially change the landscape. They have had a relationship with Microsoft already, as they have AMD chips powering Microsoft Surface PCs. They're also in Xbox gaming consoles and have been for many years. Microsoft was also one of the first to adopt AMD's MI300X graphics processing unit that rivaled NVIDIA's chips. So this isn't a new partnership, but the fact that they're going to deploy these new Helios racks is a big deal here, and they're also joining these other major companies in this race to grab as much compute as possible. That's the big story here. This is the first rival to NVIDIA's popular Grace Blackwell and the Vera Rubin systems, aiming to give NVIDIA, obviously, a run for its money. Right now, AMD is roughly holds about 4.5% of the market. But with the release of Helios, which is expected at some point in the second half of 26, the specific date hasn't been provided, that could go up quite a bit. I was looking through some metrics projections from the street, sort of how they view
let's go.
Game-changing for AMD. And I came across this really interesting note from Dan Newman over
AMD.
at Spectrum, and he was estimating the cost of these Helios racks versus the comparable Vera Rubin from NVIDIA. And he estimates the cost for Helios between $5 and $5.5.
Hey, Marley, I don't care. I don't care. Just show me a frickin' chart.
they're on, and they do a good job marketing this, and the Helios rack does perform the way it's expected to perform. He believes that they can get with between 20 and 25% of the market, so they could gain 15 to 20+% more of the share than they currently have. And that, of course,
I don't
adds
care.
to billions of dollars in revenue. So this obviously a huge potential game changer for AMD if it performs how it's expected to. For Microsoft, it also provides more diversification. There's a lot of conversation around the reliance of these companies on NVIDIA, and if something were to happen, and NVIDIA not being
Quad,
able to meet demand
if you
right
count
now,
to 3, you can
this
trade with
offers some
me.
diversification beyond that.
Okay,
It offers
you're
you
being
another
muted.
option.
You so much freaking hot air coming out of your mouth. Number 4. 1, 2, 3, 4. There it goes. I'm glad I don't drink and act like a fool. Me, she let me be, for I'm free. I'm down a little bit, not even. I got 2 contracts at $3.50. The 7480 calls were in a snake, breakout, inverse head and shoulders, a 1, 2, 3 foe. Uh-oh, there's 390. I'm now up $80. Have you ever? I'm up 100. I'm up 80. I'm up 100. So you see how I drew this out here, ladies and gentlemen? I think you did, didn't you? Right now they're at 380. My eyes. Yeah. Take her face. No, 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 no. It's dropped. You caca. It's retesting the previous resistance. Nothing to be afraid of. Now you can start being afraid if it doesn't hold the 21. And at 290. Oh, God. Okay. The possibilities are here. Randy, right shoulder, second time. If it doesn't hold the pivot point. Them arms, yeah. Look at them arms. Look at them babies. Look at them babies. Come on. I'll strip naked if this thing breaks out live on YouTube. I'll strip naked if this thing breaks out live on YouTube. Okay, we're back at support. Right shoulder retouch. Come on. Jim, you're down $300. How'd you do that? Well, I'm buying 2 more here. Double bottom. $1.95. I got 2 more. Come on now. Should have probably bought 3 of them. More, instead of 2, I should have bought 4. Yeah, I should have bought 4 more. 2 more. Yeah, 2 more. Four more. 4 more. 4 more. No, 2 more. If I get 4 more would be nice. Jenny, you look like crap today, girl. Need 273. Need to break this right shoulder and come up to a triple top. See the triple top here? You want to draw a line on that triple top, and as you start to come close, you want to sell it while it's in the heat. No, unless you think it'll break and run on up here. We're at the 50. This is, see, we hit the 50 here, and you're at the 50 here. So if this breaks, boom, to a triple top. It's like that. Now, if you're in trouble, like I am, and I got even, you can sell it on the pop. I want to see if we can break the 50, because we have just kind of had that wick above the 50, which gives me some kind of indicator that maybe we have the chance of trying to break that and doing a triple top as it retests the old resistance. Now it should come back up. They always come back and retest the previous resistance. I'll be right back.
That the overall market
Go
is
get my
continuing to
water.
be pretty comfortable with the state of the U.S. economy when you see those things happen.
So as far as, I mean, what we see right now, some of these small and mid-cap names that have started to outperform, I mean, do you think that this is also a sign that we're seeing more of that breadth sort of, trickle out into other areas, not just heavily focused on anything tied to like AI and just a lot of the enthusiasm that has obviously followed everything tied to technology and AI right now?
Yeah, I mean, there's little fingerprints of AI within the small and mid caps. If you tear apart those sectors, you'll see that the small and mid cap technology and the S&P 400 or the S&P 600 have actually outperformed the S&P 500. So clearly there's some positive impacts there. But I think when you look at just what's happening within the small cap space and what it means for the market, it's unquestionably positive.
When you look under the surface and you take a look at some of these names, and one of the metrics I look at is VIX EQ, which is sort of the average constituent volatility in the S&P. It's over 50. Now, some of that's due to the fact we got an earnings season just around the corner. But then you look at VIX, which is 18. It's the commonly cited, fear gauge. We put sort of the air quotes. Those two things are almost historically different at the moment. And that dispersion, that rotation, is really masking just how volatile some of these trades really are. As someone who's a steward of capital and making investment decisions for individuals on a long-term basis, how do you kind of navigate that environment that is certainly different than the one of the previous decade?
Yeah, I mean, obviously the volatility has been immense. I mean, it's so much is being masked throughout this entire year, as you're mentioning, but I think when you kind of have to go back to it and look at, where are those risks really taking place? And obviously those risks are taking place largely in the evolution of the AI story. So if you can be grounded in the fact that earnings on a broad basis, if you look at whether that's on the large cap, obviously driven by the AI build out, and the small mid cap space, earnings growth estimates have been taking up as well. So I think if you just kind of look at the earnings story, that gives you comfort to get out of the way of some of the more volatile areas of the marketplace where you're seeing potential momentum shifts left and right. And you can really kind of get a much longer term view than really just what might the next 3 to 6 month trade be. You can really get a better sense of what's going on in the economy and markets and kind of pull yourself out of that volatility and focusing too much on the day-to-day momentum shifts, story shifts. AI story obviously has changed immensely in the last 3 years about who's going to benefit, who's it going to hurt. But kind of getting a little bit closer to the economy always helps us kind of take that volatility picture out of the equation.
Yeah, it'll definitely be an interesting earnings season to follow, as I'm sure we will see all of these themes emerge in some way over the next coming weeks. But so appreciate your time today. Really great conversation. Patrick Ryan, Chief Investment Strategist at Madison Investments. Now, coming up next, last but not least, it's time to discuss under 30. Pegasystems reports earnings tomorrow afternoon, with investors watching whether AI-driven automation demand can keep supporting its growth. We'll talk through more of the earnings expectations coming up next.
$2.90
is powered by a
time to strip on YouTube.
Even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets.
There we go.
Live coverage wherever you are.
Boom.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing.
390.
Systems reports after the close tomorrow, and expectations are focused on whether the company can keep translating demand for AI workflow automation into stronger revenue and earnings, and hopefully rewrite some of the recent downtrend we've seen in shares. So joining us now for some more details is George Tillis, New York Markets correspondent for the network. And so George, walk us through the street expectations here. I mean, this name is down 47% on the year and 54% nearly from its highs.
Yeah, the reason being, Jenny and Alex, is this is a stock that is in the software space. And we know that application software stocks, for the most part, have been laggards associated with potential competition and being crowded out from programs, or if you will, software that can be easily created through programs like Anthropic or even ChatGPT.
350, 390.
This is a stock that's very much tied.
We hit right where I said we would.
Like ServiceNow. It's an enterprise app software
ServiceNow.
company. It provides workflow automation services, productivity enhancing technologies. They also have a CRM engagement, if you will, customer relations management software engagement platform, as well as cloud-based infrastructure platform. So it's like a Salesforce and a ServiceNow sort of combined. Much smaller than those two companies, by all means. If you look at market cap of the business, it's around 5.4 billion, forgive me, with sales around 1.7 billion. So it's much smaller. And I think that's probably why it's been suffering more so than the other names I mentioned, like ServiceNow or Salesforce, because of the high beta, low price stock aspect of the business. But nonetheless, they are going to be reporting earnings tomorrow. And ServiceNow is also this week, by the way, I believe on Thursday. They're going to be reporting an expected 43 cents on an adjusted basis. Now, that's expected to be higher by about 55% compared to 28 cents for the same quarter last year. And sales are expected to be quite modest. I would say modest to good, around 11.5% increase at 428 million versus 384 for the same quarter last year. So I think this is going to be a pivotal quarter for software names. I'm not saying it's going to be pivotal for this name, but we may end up seeing some of the hyperscalers like Meta, Google, which is also reporting this week, perhaps talk about some CapEx spending slowdown. And if that's the case, then the market may interpret that as something that'll slow down artificial intelligence integration, perhaps provoke a less competitive threat narrative around these stocks. But again, ServiceNow and Pegasus will be...
Pegasus. P-E-G-A. Baba double top, Baba double top, Baba double top. We got to buy the dip. We got to wait for the dip. Baba double top. Okay, Jim. Is my drink in there? Oh. My eyes have seen the coming of the terrible sword. He's marching through the vineyards where the grapes were rather stored. Oh gosh, this ain't looking good. Ricky. Okay. Did hit my target. Dude. Coming back. We're now at 340. I mean, I could sell it. I'm getting a second chance, but we retested that previous triple top. What was this? Yeah, triple top plus a wick. So that's 5. 5 attempts to break out, pulls back and hits the previous resistance. See up here, this previous resistance trend line. So once it broke out of the triple top, it broke out of the 5 top, hit the 100, pulled back and hit the previous resistance. Now it should move on. If it breaks the 200, man, this thing's gonna fly. And it's not a good time of the day for me to be trading this stock. This is my hour killer. I mean, 1 o'clock to 2. I don't do very well, and I'm stuck in a trade. I'm not stuck in it. I can get out now. $300. 6 times 50. I mean, 5. No, I got 4. Fuck. Well, 200. Yeah, I'll stay in it. Now, if we can just retest this trend line and move on and break that, that would be a higher low. $4. I'm getting naked on YouTube. I'm getting naked on YouTube. Get ready, guys. $460, $490, $5. Okay. You ready, YouTube? You want me to start with my pants or? We hit the 200, baby. I'll do a little strip dance for you. What is some good strip dance music? Let me see here if I can find some. STRI, strip dance, MUSIC.
There was a ninth day in a row of exchange of strikes. There were 3 U.S. service members killed over the weekend. Meanwhile, there are reports and signs of de-escalation and diplomatic efforts happening. On the escalating side, you have President Trump posting on True Social about an hour ago saying, quote, every time Iran kills an American soldier, they will pay for that killing many times over. This directive has been passed on to the Secretary of War, formerly known as Secretary of Defense, Pete Hegseth, Chairman of the Joint Chiefs of Staff, and every leader in the military. That's a quote from President Trump on Truth Social about an hour ago. It follows what we've been watching, those headlines that we've been seeing from both Reuters and Bloomberg about Iran-backed Houthi rebels announcing this maritime blockade on Saudi Arabia that threatens shipping, of course, in the Red Sea. We already know shipping has been challenged because of the Strait of Hormuz. So you have 2 shipping channels very much in jeopardy here. The Houthis reportedly saying the move in retaliation for what they describe as Saudi Arabia's siege of Yemen's capital here. And on the flip side, diplomatic efforts seem to be happening according to some.
I'm so glad Trump's doing this. I've been sick of these people for 40-some years. Or this regime. Retest off the 63. Double top at the 200. Here we go, baby. 480. Either get out now. I got 273. So I'm up $200 a contract. And I got 4. So what should I do? Should I sell? Someone tell me. We squeezing? Triple top. I'm a brave, brave man. Break it. Blink it. God, I would have sold so bad. Okay, Jim. Okay, there's only one way to solve this problem. Break. Break it. Break the double top.
Babe, it's just the coin toss.
I can't watch. It's too much.
Go ahead. Just say it. Oh, stop! It's totally time. Can't wait for Lifetime Attitude 4-0 Rewind.
Girls need warning. If you go near the lake, your eyes wide open. Look for a sneaky snake. Maybe you won't see him. Maybe you won't see her. He'll be up behind you and drink all your root beer, and then sneaky snake goes dancing, wiggling and hissing. Sneaky snake goes dancing, wiggling and hissing. I don't like old sneaky snake. Laughs too much, you see. He goes wiggling through the grass. He wiggles his underneath. Oh yeah. Sneaky snake drinks root beer, and he just makes me sick. He is wide open. He just looked like a stick. I don't have any arms or legs. Not see him's ears. He's drinking all of our beers. Sneaky snake goes dancing, a wiggling and a hissing. Sneaky snake goes dancing, a giggling and a kissing. I don't like old sneaky snake. Laughs too much at me. When he goes wiggling through the grass, he tickles his underneath. Oh yeah. $4.60. Here comes a triple top break. $4.90, Randy. $5. Let's go. Come on. Oh, the anticipation is killing Uncle Zimmy. $5.50. Magnificent. You have to say, this here strategy is almost foolproof. Am I right? Almost. B plus for staying with it. $5.30. Ooh, triple top on the 200 SMA. Triple top at the 200 SMA. Triple top at the 200 SMA. Ah. $5.20. Bum 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 bum. It's time to see some time for Don Don. I need Don Don. I need Don Don.
At Planet Fitness, your pace is as personal as your playlist.
Break the 200.
So come as you are.
I can't get that to move over. They're doing the Jim Jim dance. Jim Jim dance. They do it. 相当情人你们，伤了他的心，伤了往事了，忘了谁呀嘛看着。什么呢？无情的马儿山。Ik mele vlakke dachten die choppen maken. Good job, Dun Dun. You pulled the stock back. No soup for you. No more chow mein for you. well. Ugh. Okay, we're back to the 50. I really wanted that thing to break. Thought it was going to because it was rising up. You didn't know I could speak Chinese, did you? I speak all kinds of languages, but my favorite language is the sound of love. I speak love and peace. Bomb Iran. Okay, retesting support. We got a triple bottom all the way down here. Yeah, 7468 should get support. We'll see that. Yep, you're right. For that, you'll get an A+. Is it because did you copy me? Did you copy me? Magnificent. Be honest. You were right to the penny. You didn't see what I was typing. Should I believe him? Jews don't lie.
See that there is a possible MACD bullish
inverse head and shoulders
about to take shape, and then the ADX once again, that trend strength gauge is again sitting here at these troughs, signaling that whichever the way the
4-hour time frame, double bottom.
Upward, that the market is going to
that's a pretty chart.
Accelerate in that direction. So
I
that
love
setup
you.
looks compelling, but traders will wait to see for a decisive move above resistance around
My new girlfriend.
Yeah, the next reporting season
Oh,
is going to be a really
the
big test.
fudge.
Obviously, we're going to get Alphabet this week. It's
There she is.
nearly 12% year to date, and so we're going to be hearing from it
Damn,
on Wednesday.
this woman
What's
looks-
standing out about the technicals going into the print?
So in Alphabet or Google, in this case, you're seeing the exact same setup that we just saw in the video play out in a few different Mag 7 stocks. So prices
liar.
bouncing from that possible right shoulder currently, and that neckline resistance sits around 375 or so. The depth of this formation that we're seeing.
That's not a neckline.
You can measure it from highs to lows, and this is
That's a yin yang.
So if price does break out of this possible bullish reversal here, traders could target 420 for that measured move to the upside.
Bam, 420.
A trough for about a week, but once it turns up, it's going to provide evidence for traders that the market and trend is going to accelerate. But of course, traders don't want to necessarily jump in before a breakout, waiting for confirmation.
That's called the breakout pullback.
Thank you so much for coming to us with your charts today, Rachel.
That's because they can't see the squeeze happening. So this was, what was this? Fucking NVIDIA. So we're going to go over NVIDIA. She had one thing wrong. And I want to correct her on that. And that's the VWAP chart. What the fudge? Where's my charts? She had that on the 4 hour. See, I got a falling wedge on the daily off the 200. And I called this trade out. This is a head and shoulders, inverse head and shoulders. I mean, this was a beautiful setup if you listen to me. Off the 200 SMA, one of my biggest signals. We had a fallen wedge off the 200 with a triple top breakout. She had the 4 hour up here. I still wouldn't have done that one. I'd do the fallen wedge. Now hers, right now, as of today, it kind of the pattern changes. So she should be right there. And we broke below support, so that's support, the 200 on the 4 hours. So we got to gain respect above the 200 and run it up to a triple top. You have two kind of triple tops here. We're going to go with a horizontal one. And that's a quad top. True resistance right here. And then it pulls back. And this is when the institutional, well, her, the way she was talking. Pulls back to the 200. I thought I had an alert set here. $200 SMA on 4 hour. Where's the alert? Oh, that's because it's above it. No? Yeah, oh, duh. I keep looking at this one right here. I'll set the alert right there. This is for NVIDIA. Triple bottom. Triple bottom. What the fudge? I can't get the alert set. There it goes. That's weird. Okay, we're back down again. Okay, triple bottom, triple bottom, triple bottom, triple bottom, triple bottom. Randy. Let's make some money. 115 to 120 here, 74. Actually, I'm going to raise them up to 74.70s and buy two at 360. There's a triple bottom coming up, 350. There it is, right here. About now. Boom! I tried to get 310, but I got 320. This one's gone, sold that one. SPX calls. $320. $74.70s at 320, and then we're now at 420. That's triple bottom. Now we're at 440. Make some profit if you're a rookie. Randy. Sarah. We're at 420. Everybody likes 420. Oh, Fu Manchu. We got a Fu Manchu. Oh, sorry, a Fu Manchu. These fuckers, man, they got a great place to work at. I'd love to be working on that right there. Look at all these young kids, man. They get someone in me in there.
The demand and quantity of consumption of this, goes up. So I think, the chip stocks, which we've just discussed, that this affects them less because whether or not it's powered by an open source or a closed source model, they stand to benefit. It is concerning though for the open AIs of the world. And
okay, I couldn't take much of a kid. He got some gray hair on him, so he's got to be at least 40 something. Damn. Come on. Should have jumped out of it. He went to that show resistance line. Chop, 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 chop. Triple bottom. You got a snake. Means we could drop more even. I'm gonna get some water. One, two, three. 1, 2, 3. Damn. $2.10.
Have shed some today to software's gain, perhaps? Just walk us through what you're seeing.
Yeah, what I'm seeing is a market that's pretty unchanged, and without tech, it would actually be down something like 15 or so points. So tech is certainly doing its job today, but not a lot of help from anything else. You mentioned some of the hardware names, or broader, I kind of refer to this AI momentum stack as the AI infrastructure trade, getting some love today. So you see names within that world doing quite nicely, but it's not limited simply to AI hardware stocks. It's also names like CoreWeave is doing okay. You see some of those neo cloud providers bouncing back today, but the big one that stands out is Apple. Apple has almost established itself, Sam, as a bit of a counter trade to this AI infrastructure trade. It's almost been a bastion of safety when this trade is under pressure. So with the bounce back today, at least in some of these memory names, the Microns of the world, the SanDisks of the world, you see a little bit of weakness in Apple today. So that's something to watch, especially as we roll into this week. And I know Alphabet is not a part of this sector, but it's broadly considered, technology, even though it's classified technically under communication services. when we get Alphabet's earnings Wednesday afternoon, when we get ServiceNow earnings Wednesday afternoon, I think it's very possible that's going to be the deciding factor on ultimately whether this is a good week for the market or a bad week for the market.
Yeah, certainly going to be a tone setter. Really appreciate it, Alex. Thanks for the breakdown on what's happening.
ServiceNow got pretty good spanking.
Let's move on for our ETF watch list now segment. Joining me is Mike Coe, who's the chief strategist at YieldMax ETFs. Mike, long time no speak. Thanks for joining us. Talk to us about SPCX Options Income Strategy ETF.
Yeah, so this is an ETF.
Now earnings this week.
Many of our other single stock
Damn it,
options
155.
Income ETF.
Glad I'm not loaded on
Basically
these.
takes
Okay, let me see here. I want to check something out. I think Now's earnings are this week, aren't they? Yeah, Now. Fudge. Where's No, I see some hearts. Oh, that was that guy. Scheduled for the 22nd. Wednesday, after market closes. Down 50%. Let's go. We're not doing too good, Jimmy.
Mixed last week, Sam. You look at, they beat slightly on EPS. They missed on revenue. Growth rate on revenue is about 13% year over year. Not bad, right? But they've seen their growth rate slow. And then you throw on top of it the fact that the transparency is leaving this company. Remember, they stopped reporting subscriber
now it's down
data.
50%.
Now they're starting to, only report once a year what people are watching, those metrics that they're concerned about. And then also the fact that, hey, it's going to cost them a lot of money to get into more live sports because that's where they pick up a lot of subscribers. And they only have a few of those live sports events on their platform. So that's a
Okay, I went in real small on these. I'm going to double down.
Although, as you mentioned, Phillips Securities upgraded the stock, put a $110 price target on them. They said this sell-off is unwarranted. It's a good buy. They have solid growth. Remember, everybody keeps on thinking that Netflix has lost a step, but they're still the king in this streaming battle that's going on right now between them, Disney Plus, Paramount Plus, and all the others. They're still the king of the hill. But that being said, the stock has still pulled back about another 2% today, 28% this year, 44% over the last year. So yeah, it's been a falling knife at this point. But we did see some bullish activity in here. But this trader gave themselves some duration. They went all the way out to the January of 2027 options, the 75 strike calls. Trader bought over 5,000 of those, paid an average debit of about $5.30 on these out-of-the-money calls. So that break even where this trader starts to profits above $80.30 over the next 6 months or 179 days. That's about 19% above the current share price in there. Now, call volume, even on a down day like today, is more than double put volume despite this slide that we're seeing. So maybe some people taking some shots here even though the stock is weak. But this trader, I think the key with this type of position is they've given themselves plenty of duration. As I mentioned, about 6 months in this trade for it to work out for the stock to get back above the $80 level on this bullish call purchase, Sam.
And what about Marvell, Tom? I mean, that's had a tough time lately. It's down around 40% since hitting that all-time high on June the 18th. So what trade is standing out in today's session as this one is higher on the session?
Yeah, with, elevator moves to the upside, come elevator moves to the downside. Marvell is one of them. Shares are still up about 4% today, so having a nice little rebound. But as you mentioned, that just a month ago, this stock was hitting all-time highs. We're down 40% from those levels. But that being said, it's still up over 130% so far this year. They make the custom silicon and optical interconnections for the AI infrastructure build out. Now, if you looked at their last Q1 earnings, revenue was up about 27.6% year over year. The data center segment, that grew 76% year over year basis. So finally starting to get kickstarted here as far as Marvell shares. And a lot of people expect this company, as far as the picks and shovels within AI, to really start to outperform well, because as their valuation grows a little bit, they've been starting to grow into that with their earnings growth.
Come on, baby, let's go.
AI data center, and we all know that these hyperscalers and this build out and the capex spend is not slowing down anytime soon. So, with that 40% pullback, I think this trader's trying to take advantage of that. That with the expanding volatility in a lot of these names. This was a cash secured put that this trader sold. It was out in the September monthly options, so about 60 days to expiration. A trader sold 2,500 of the September 200 strike puts, is basically at the money. They collected an average credit on these puts of $32.47, so collected a lot of premium. So the break even where this trader starts to lose money is below 167.53 over the next 2 months. That's about 15% below the current share price. So taking advantage of this pullback in the shares to basically say, hey, I'm either going to get to keep this hefty option premium that I collected if the stock goes back above 200 and remains there, or this trader's willing to buy the shares if it slides below or stays below 200.
Come on, break.
At that break even of 167.53. So they've got put volume in there. You know, it's elevated, but you got to remember when looking at put and call volume, it's not always traders coming in and buying puts for a bearish type of position. This trader is taking advantage of the recent slide that we've seen in Marvell, selling cash secured puts with the expectations it's going to go back above 200 and remain there, or they're willing to buy the shares at a steep 15% discount to where they're trading now.
All right, and moving on to Intel. Shares down nearly 30% in July alone. What's caught your eye with this one?
Yeah, bear market territory for Intel going into those earnings on Thursday after the close. This will be a big report because of the slide that we've seen. Now, the stock is still up about 165% so far this year, so it had a parabolic move. Also, they issued better than expected guidance last quarter. Although the revenue only rose 7% last quarter, they did improve their margin. CPU sales, supply-demand issues right now.
God, this is getting ugly. Hell, I got this all drawn out.
To meet that demand at this point. So I think this is going to be an earnings type of stock over the next few days till we get to that report.
Damn it, back to 125.
But
Come on.
Same thing here. We saw a trader taking advantage of this over 30% pullback from recent all-time highs. Sold some September 90 strike puts. They sold 3,600 of these. Collected an average
giving about even.
25 cents. So the break even where this trader starts to lose money is below 79.75 over the next 2 months. That's 19% below the current share price. Call volume doubling puts here today, but this trader is basically taking that same stance as they just want to.
I'm going to clean this up
elevated option
so I can read it
that
better.
They collected on these puts, these out of the money puts, and profit that way. Or if the stock does fall post earnings, they'd be willing to buy the shares at 79.75 or that nearly 20% below the current share price at a discount. So yeah, another put seller here in Intel.
Yeah, and also rallying alongside AMD's news, which is interesting, 3.5%. But yeah, I mean, this has come off, from 140 back in June. So this is going to be a really big one as far as the earnings report is concerned. Tom, really appreciate it. Thanks for highlighting all those big trades in the market today. We're looking at a mixed picture as we approach the close for this Monday afternoon, with the S&P 500 pretty much flat. The Dow is lower, the Nasdaq's higher, getting propelled by chips. They're back in rally mode, although we've lost a bit of steam. Max Evans mixed. Thanks for joining us on the watch list. I'm Sam Vardas. We've got Market on Close coming up next with Marley Caden.
Checking. The checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk.
You're making a play.
Earnings.
So that would be a further downside area to watch.
Smart insights.
We got a double bottom, higher low inside the snake with an inverse head and shoulders on the bottom of the snake.
Schwab Network, streaming 24/7.
And I've lowered my cost quite a bit. So we'll see. I'm going to hold it. It has to hold 74.50, 70. 74.50, 48. 74.50.48 has to hold. And it has to, I want it to get up to here. Spike up to the 63 right here on this here body. I think one of the cutest photos that if I'd had to take a picture this year, I think one of my favorite photos would have been Holloway or whatever his name is, in the ring with that Sophie chick. I mean, he looks just like a little baby, you know, in there dressed up in his gloves and shit, and she's showing her little butt cheeks. I just thought it was the coolest picture. I mean, if I'd had a camera, that would have been my favorite picture of the year. He just looks like a little baby, you know, up there with her. It's just so cute. Come on, break out. Looking better. I just now noticed he had a different kind of shoe on. Okay. What a day. Back in red again. It's 208. Damn. Fuck. Jeez, that's got to be AI. That woman's... God. There's no way I'd get in a ring with her. She'd kick my ass. Ugh. Brutal. Ugh.
That's just one side of me.
Oh man, every time it wants to do it. Talk about end of the day flush. PSKY.
But the judge did schedule an August 3rd hearing to whether to extend the hold indefinitely or what that exactly will look like. They said that the stakes show that serious questions are going into the merits that remain.
More than half my profit now. Not half.
The deal would give the merger company control of roughly 27% of the market for films widely released to theaters, which the suit does claim. Now, Warner Brothers and Paramount also allegedly would control
below yesterday's low
of
there.
Anticipated blockbusters as well as widely released
We're
films
close to it.
and large production budgets. So post-merger, only 4 companies would control roughly 90% of that market. So it would be the newly formed entity, Walt Disney, Universal, and Sony Pictures.
Oh,
so
I ain't there
Paramount
yet.
has until June 4th of 2027 to close the deal under this
Now what
current
the
merger
fudge?
agreement. But it must start paying Warner Brothers a daily fee of $7 million starting September 30th until the transaction is complete. Daily fee of $7 million.
Slash yes.
We talk
My
trillions
alert
and billions
triggered.
of numbers so frequently. That is still a lot of money and one they do not want dragged on longer than perhaps need be.
No, certainly if you break
Sell
it
off
down
at the
by
end of the
quarter,
day.
$150 million
Damn.
per quarter.
So much money.
And if they don't clear this deal because of regulatory concerns, remember they have that huge breakup fee, which is in the billions, a $7 billion breakup fee that they are responsible for if it is regulatory concerns that block this deal. So interesting reactions in the market today. Paramount Skydance only down about 1%, but Warner Brothers Discovery trading lower about 3.5%.
Yeah, Warner Brothers has had a bit more of a move right out of the gate and seen that move worsen.
Went below
now.
support.
And of course, we've seen it hours go on since we got this news, but it's actually kind of amazing that Paramount Skydance hardly even making much of a move at all, maybe showing that this was fairly expected. I mean, this was of note. Pretty much everyone was discussing this was a looming threat that now we're at least getting some answers and some more timelines too.
Yeah, and the timeline of Paramount initially planning to close the deal by September and then pushing that day up to July 22nd, and then of course the TRO request coming 2 days prior to that. Not a huge surprise, but a major potential legal hurdle, as the next step is whether there's another temporary restraining order
Darlene Graham. I want to see what this chick looks like.
So, of course, this is one we will be talking about a lot lately, which we will be thrilled by.
See if she passes my inspection.
Give me more of
Another
a back and
alert.
forth with this
It's so
deal.
built for Hollywood. It's perfect. All right, let's talk about Domino's, though. Domino's had an interesting report in terms of the numbers, but more so in terms of the market reaction from my perspective. A little bit of a head scratcher here in that they are trading in positive territory. But take us through the numbers and where the optimism is coming from and where potentially some of the flags were in this report.
It seemed like overarchingly so this was better than feared, because I also was a bit mystified by the reaction, which was strong right out of the open.
You break out.
Quarter, highlighting this unit expansion.
Yeah, I'm stuck on that one.
Positive order growth across both delivery and carryout, despite a more challenged consumer spending environment where that we could see actually translating into gaining market share back. But again, we're gaining market share back. I don't think it's necessarily a pure, growth story here from Domino's, which is illustrated by earnings. Missing expectations, falling roughly from a year ago. U.S. same-store sales also gave little to love, with it rising just 0.1%, which was a pretty substantial downturn from last year, 3.4% growth. Also missing the street's expectations. International same-store sales also declined about 0.1%, also missing estimates and signaling some weaker momentum overseas. But this reinforces concerns that they are feeling pressure from a more cautious consumer and a broader quick service restaurant industry slowdown. Pricing for a lot of these restaurant names has been just still so challenged. And so still, again, there were things to like. The key positive was order growth, market share gains, and the store expansion. But the bigger concern was the stall in same-store sales growth, especially because it's not just here domestically, it's also international as well. So I think that transaction growth will be a focal point if this can eventually translate into stronger sales and earnings growth during the second half of this year. They did give pretty positive commentary too, that they right now are really highlighting this growth potential is stronger than ever. And so that's optimistic commentary, but you look at the chart and it's a lot less optimistic. We're down 21.5% this year, 33% nearly from highs that were made, well over a year ago, or roughly a year ago now, I should say. And so I think that lowered expectations, maybe this was enough to clear the bar, but obviously, even with low expectations, we've seen companies sell off for far less. And so price will tell you what I think the street cares about. And seemingly, it does feel like there's conviction that the turnaround is really underway.
Yeah, the CEO said that he believes the order growth is the most important driver of their long-term growth strategy. But as you highlighted, when you see comp store sales fall domestically to the slowest pace in 5 quarters, I was just surprised to see them up at all, let alone up. I think they were up 7% in pre-market trading when I got up and was reading their numbers. But interestingly, we're seeing pizza fare far worse than burgers or burrito bowls, and some of the other, let's call them fast food restaurants or quick service restaurants, I think is what they call them. But Papa John's and Yum Brands owns Pizza Hut, right now owns Pizza Hut, have been struggling with growth as pizza sort of lags behind. But I know we're doing our part to try to keep pizza deliveries up.
And I'm doing my Domino's part specifically, but I do feel like because it's the onset of no longer is pizza the tried and true delivery option. Now, in a world where you can basically have any type of food delivered at any time of day, you've expanded your competition, and no longer are you competing just when you're Domino's against Papa John's and Pizza Hut. You're competing against everything.
Yes, you can get all the food delivered to you at any time. Thank you, DoorDash.
Yes.
Uber Eats. But let's move on to one with a huge move to the upside. IREN up 18.5% with a gain. It's held on pretty much throughout the session since this morning. I mean, they've gave a guidance update significantly to the upside.
And this name, just to speak to today's volatility, it is a huge green candle because I will not discount an 18.5% move, but now did push shares in positive territory this year, and also have pushed shares now up about 171% from lows and 122% over the last 52 weeks. Well, we're still off of the highs of this year, just shy of $77 a share by 48%, and that just is crazy volatility. The range in which this name trades is ridiculous, but announcing raising its year-end AI cloud annualized run rate revenue target from $3.7 billion to more than $4 billion, and of which roughly 85% is now under contract following new multi-year cloud service contracts with some of the leading AI developers that represent roughly $2.8 billion in total contract value. Companies like NVIDIA, Microsoft, and Perplexity, and an unnamed new leading AI developer are utilizing these services across both bare metal and managed cloud, the company did say in this announcement. But key anchor customers like Microsoft and NVIDIA have given IREN's business model some further credibility, as they did first enter their 5-year agreement with a name like Microsoft back in November of 2025. That was really their first major hyperscaler customer, which was a game changer for IREN, which was verbiage from Cantor Fitzgerald analysts at the time. But several of these neoclouds have seen their shares come under pressure, especially as we've seen reports that like Meta, for example, plans to enter this cloud services and neocloud space. Some have read this as a worry sign that maybe neoclouds are a stopgap measure until the hyperscalers' own data does come online, in which the case that neoclouds could be over-investing is the going fear. But shares of IREN have also sold off on some specific company issues, as they did see like a retention equity package for its co-founders that raised some concerns earlier this month. But Monday's announcement, and of course today's announcement, as I'm saying, really has helped ease some concerns over the high cost of building data centers. And I think that's why we're seeing such a huge move to the upside, as this right now at least can continue to show where CapEx is obviously going, and a more clear idea of this money trail that right now is so under scrutiny.
Yeah, and good that you brought up that pay package too. I think they gave the co-founders an aggregate stake of 6% in the company. So
which is huge.
Huge. So huge concerns around that. But their earnings don't come until the end of August, but I imagine there will be a lot of very specific questions trying to nail down who that unnamed new leading AI developer client is, and in between now and then likely a lot of notes with some guesses as to who that name might be.
Yes, I've already seen some speculation. Again, we will wait and see because there's no point in guessing, but what we do know is shares have fallen 31% in the last month. So looking for some further catalysts and maybe further answers. The street does not like, as we've said many times, any uncertainties.
Well, they like details. All right, Jenny, thank you for breaking all of that down for us. Lots of stories to get to today. Appreciate the coverage. That's Jenny Horn, the co-host of Next Gen Investing. Coming up, we're going to discuss the state of the private credit industry and why watching talent flows can help set apart the top performers in the group. That's next on Market on Close.
You know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
The alerts came up.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects.
I'm about wore out on that last trade. It got me. Might be it for me today.
That profit, you really need analysts and talent who can differentiate the wheat from the chaff, and that's why we think hiring and talent is so important in this space right now.
And I want to move to that in just a second, but I want to stay with software for a moment because I was reading your report, Private Credit at the Crossroads, and one of the things that you highlight is that software exposure may be much higher than many investors realize. You even suggest that some portfolios may have more than half of their exposure tied to software companies. How does that happen?
I think probably.
I get a thanks for what? For getting you in a bad trade?
Actual functionality of what the investments are tied to. They might not have a direct software component, but it's a derivative of a software component. So there have been several reports, one by Diameter Capitals that I'm specifically thinking of, that says if you really look, it's much higher than you think, because even if it's not the first line, it could be the second line. So, you know, I mean, we kind of saw this, not that this is anywhere near the scale, but that's what happened with syndication and, you know, during the GFC. It's when it starts to get the functional composition of the portfolio starts to get too concentrated is when you get into trouble.
So as we look at talent now being a part of the competitive advantage here, looking at hiring trends would then become more important. So my question for you is, what skills are private credit firms looking for now that are trying to move some of this talent that they weren't looking for years ago?
I would say it's not that they weren't, but it's just more important. And as we know, with AI in general over the past 2 years, that execution layer of all kinds of jobs has been kind of collapsed down. So really now what's differentiating you is like how well what you can do with what, you know, your model spits out and what your judgment is like. So do you really know financial instruments well? Do you how is your industry expertise? You know, I think the Financial Times just came out today saying there are more and more instruments being designed that are kind of like asset-backed or collateral-backed finance for AI. How well do people really know those assets are collateral? How well can they model default risk? I think it's not that it wasn't important before, it's just exponentially more important now.
So if the conversation is shifting from should I invest in private credit to which manager should I invest with, as an investor who's watching us have this conversation right now, what should they be looking for?
I mean, not to give like exact investment advice, but I would generally say, you know, to make sure that it's not overweight in any just kind of general line item. And in the prospectus, there's really good reasoning on what was selected and why. There seems to be a different, kind of rigorous criteria, and to just kind of make sure that not too many eggs are in any particular basket, and especially the software, to make sure that looking at the entire portfolio, not all of the components are directly tied to it.
All right, so diversification being a key here. And just broadly speaking about private credit, I mean, the conversations around cracks and warning signs and signals we're looking for. We've got higher interest rates, we've got slower growth. Those always come up, raising concerns. As you look at the market overall right now, Audrey, what are you seeing as some of the potential vulnerabilities?
Of the market in general, or private credit?
Of private credit.
Well, I mean, the hyperscale market, obviously, it does seem like demand has kind of kept up, but I would say any time that you have such a massive investment, you really need to, it's the timing risk that's the most important part, because AI investments, may not pay off on the duration that credit instruments are written on. So the duration risk is really the most important. I think also, as you said, higher for longer rates, and it certainly seems like rates will not go down this year, always make borrowing risky. So, I mean, there's both capital markets risk, there's, as you mentioned, kind of macroeconomic risk with slower growth. There's still a lot of macroeconomic uncertainty.
China, what's China?
Political events and inflation. So it is kind of a questionable environment, which is again why we see a lot of our firms making big bets on talent, even at the beginning of the senior ranks, at the VP level and above. It has really proven themselves and can execute and have good judgment on deals and are valued by managing directors. I mean, that's become much more important.
God, this channel's so boring.
Better market where a rising tide will lift all ships.
She's really screwed this thing up.
Taking the time to be with us today. Sadly, we have to leave it there, but we really appreciate you joining us from the floor of the NYSE.
time in a row, quarter on quarter, where we're having those
I
types
got my
of
bank
numbers.
statements I got to turn
I
in.
think it's really that profit picture, and that explains how we got here. But it also doesn't do a good job, though, of telling us where we're going to go, because I think it actually now creates these vulnerabilities about any whiff of disappointment in the margins. You can just think about some of the people who have reported already, right? I mean, we had Samsung pre-report, very good growth, but yet their stock price dropped because it wasn't apparently good enough. Same thing, even Netflix, you were talking about with entertainment. Very profitable.
That's what gets me.
But sometimes
they say good enough. They say good enough. They were great. They were magnificent. NVIDIA's earnings, they were magnificent. They were overwhelmingly great. And he's saying these earnings have been outstanding. Outstanding. But they're not good enough. That's a bullcrap line, if I ever heard one. That's a bullcrap line if I ever heard one. I would not work with this guy ever. Their earnings have been outstanding. That's just what they're trying to do behind the doors, you know. They want, this market was way too high. They didn't want to jump in it. And it was overbought. But to say that the earnings were not good enough, he's full of shit. Because all I'm hearing is great earnings. Well, there's some few bad ones, but Microsoft kind of bounced up to the 50 SMA on the daily with a double bottom from 350 to 402, 401. This Schwab just got so bad. Tesla's definitely at support here. Just a few notches from my support. I still think it's going to do okay. Let's see. It's so weird. Some people say that earnings were excellent. Some say that they weren't good enough. Some say they were horrible. I don't understand. But I'm going to have to get away from this channel if this keeps us up. Find a different way to entertain myself.
Actions from what we saw from this group.
Yeah, it was a pretty muted reaction is the way I would put it. I wouldn't say it was bearish, but it certainly wasn't a bullish and welcoming reaction to these earnings reports. So
State Street Financial Select XLF.
It kind of went off with a whimper, if you will. And the charts look okay. I mean, they're still long-term uptrends, consolidation phases within that context. The relative performance, as you mentioned, it has really been under pressure for financials overall this year. But again, there's some spots of strength. I would encourage everybody to look at insurance stocks. Or insurers have been really very strong in relative terms. And with that, we've seen a lot of breakouts from a bottom-up perspective there.
What about, I mean, I also want to ask you about energy, best performer so far today. And, you know, look, it's hard to predict what happens in the Strait of Hormuz, what happens if the Houthis get involved now. They're threatening a different waterway, which is critical for energy shipping. But overall, on the charts, a lot of people have been surprised that we haven't seen even higher prices on the level of oil.
It's been really curious because there have been a few days where we see both energy and technology as the biggest gainers on the day. And that's somewhat counterintuitive, you would think, because energy is, of course, tied to crude oil prices.
We had a bigger war on oil under Biden-Harris watch.
Contributing to the momentum there, or at least the recovery in the indices. So we really need those mega caps to show up here when we lose the AI trade. But energy in particular, from a bottom-up perspective, we are also finding some interesting setups, not breakouts per se, but oversold upturns. So we've been talking a lot about how the oil companies have come off of oversold lows on improved short-term momentum and also improved short-term relative performance. So we think it is meaningful because we saw crude oil come into key support in the high 60s per barrel. So we think that's a higher low for crude.
Higher lows. Okay, got it. Katie, thank you.
Of course.
Good to take a little trip around the market with you in the
We
technicals.
got
Katie,
a
stop.
higher.
Up next, we are tracking the biggest movers for you as we
Last week we had a new high on the XLF. We're at the 9 on the 9. Well, heck, it got 16 minutes left.
13 minutes till the closing bell. Let's get back to Christina Partsinevelos for a look at the key stocks to watch right now. Christina.
Salad stocks. Sweet green, Cava slumping as the cyclosporiasis outbreak just continues to sicken people across the country, and as the FDA actually searches for the source. The FDA had tied the outbreak to lettuce from Taylor Farms, but said this weekend a test on a sample of iceberg lettuce from there was a false positive. You don't make friends with salad. Archer Aviation shares surging after the company unveiled an autonomous aircraft program with Anduril. The new military aircraft is called, quote, Thunder, and is intended
What's
to
an ACHR? I wondered why that was up.
Archer plans to unveil a commercial version just later this week. Shares up 19%. And Hut 8 Corp moving higher after it signed a second 15-year lease.
I didn't even look at the news.
$10 billion with an existing customer, fully commercializing its 1 gigawatt campus in Texas. Hut 8 is a former Bitcoin miner that has pivoted towards AI infrastructure, much like many of the neoclouds.
ACHR.
Yeah, same high investment grade customer that leased the first phase. I love how they give these hints to show the high quality nature of their customers. Thank you, Christina. Christina Partsinevelos. Up next, blockbuster numbers out of AMC. Has the options market there going wild? We'll break down the action for you next.
It's a nice little cup and handle there on Apple. Nine minutes left, and I'll be very excited when this day's over with. Oh, look at that knife on SPX. If I should cook, I think I'm going to sit here and just relax. I've had a elevator issue last week, really stressed me out.
We are now in the closing bell market zone. Mike Santoli here to break down these crucial moments.
I think I told the story about Elizabeth. we were one morning in the back, and she was down the hallway, and she looked at me and gave me this kind of funny look. I'm going, what have I done now? So she didn't show up for like 4 days. I'm going, what the hell? So I messaged her Friday, and I said, elevator's fixed. I said, I don't know if this is appropriate or not, but I want to let you know that I messaged you to tell you that the elevator is fixed. That week she messaged me and said, Jim, you got a key? My card's not letting me in, or I left my card at home. And so I messaged her back, and she didn't reply. And I'm going, damn, what did I do? I got the elevator fixed. And so I saw her today, and I said, when I asked her, I said, are you mad or something? Are you okay? And she said, oh. I said, I was worried about you because I know the elevator wasn't working and you didn't want to go up the stairs. I figured you were at home working. No, my little daughter is going to college. I said, oh. I said, yeah, I texted you and you didn't respond. And she said, she looked on her phone and she said, I don't get no reply. And I said, oh, that might be on my business phone. So her business phone was dead all weekend. So I worried about that all weekend. That makes somebody mad at the IRS. Got a double bottom on the SPX here. We could get 6 minutes. And let's see. And hope my SPX pays off, my Tesla pays off. I'm swinging Tesla. And I might see if I can get in and out of this trade here real fast on the market. Well, they're cheap, 195. Fuck yeah, I'm gonna give it a shot. What the heck? Just don't take this trade unless you want to take a big risk. Snake. Pullback, knife. Breakout. Triple top. Pullback, double bottom. 185. Damn. 150. Come on. There we go. Yeah. 260. Oh yeah. I'm out. Out. Made a lot up there. $3 all out. Woohoo! So I took this trade on hope and change. We had a double bottom, higher low, snake, breakout, pullback, triple top, double top, back to a double bottom. What the hell have I got tape on my finger for? Okay. Oh yeah. I'm done.
Has just gone down, Jeff, because of dilution effects.
All right, George, appreciate you bringing us the latest on IMAX and also for that setup as we come into the earnings event on Thursday morning. IMAX trading down 1.5% right now at 38.67. That's George Tillis. Really appreciate it. We are nearing the end of our market session. Alex Coffey will be joining us after the break to take a look at today's action. That's all next on Market on Close. Stay with us.
You run the show. I'm going to think hard this weekend how I can change up a few things. Because I have to get someone on here with me like Funk was, or it's always good to have a second opinion. Me and Vegas were like fire and ice. That's what made us so good. Me and a girl named Jennifer were pretty good together. And I traded with another girl from Colorado that was kind of a rookie, but she was fun to trade with. Might have to end up taking Zach Morris's girl from him. Mike, I don't know. He never did say goodbye to me. He was a good trader. Probably one of the funnest ones I've traded. Him and Funky. Funky was kind of temperamental, but Mike was real good. So was Funk. I mean, both of them. But like I've said before, they come and go. It's not the first time. We were United Traders. We got into a big old fight and everybody split. You know, the room's got to be comfortable to you. It's got to be something that can handle, something that you can relate to. You know, I'm the only day trader out there that plays a guitar, as far as I know. I'm the only one that's had beer bottles thrown at him up on stage. Because you weren't funny enough. So, yeah. Not a bad day. I got stuck in that trade at the end of the day, and then I scalped that very last trade that made that most of that back up, so I'm not too scared. And two trades though today that weren't really accountable. Very good. My biggest mistake is I pulled a McGregor today. I came into the market with a high fly kick and twisted my ankle. I should have been a little bit more at ease knowing all the crap that's going on over in Iran. The market acts like it doesn't care, like Sarah said. She doesn't understand why oil's not at 200 a gallon. Well, shit was a lot worse under Biden. We had our reserves almost 3/4 of the way down. He was selling oil to China and cutting our supply back. We'll see. Iran's a pretty stubborn country. They'll die with a sword. Well, I'm not as bullish as I was a couple, 3 or 4 months ago when we had that other pullback. I was bullish then. Right now I'm just kind of in denial and fear. And if I ever come up to feel like capitulation, I'll start going long in the market. I'm thinking around September. So we'll see. And that's it. I'm going to get out of here. I appreciate everybody in here. Joe pushed electrical cars, that's right. Big time. Spent billions. Gave billions to General Motors to build the cars that they just couldn't do it. Wasted our tax money. They could have got they can collect the money themselves. That's what stocks are for. They can raise the money if they need to. They don't have to use our tax money. Okay, well, I'm going to get out of here. And watch a couple videos and go for a walk. I like to go for a walk after I'm done here and get some fresh air. Well, you got to see me dance naked today. I hope you enjoyed it. And we'll see you later.